by yesterday's deadline, Netflix and our own parent company, Comcast, are said to want the company's studio and streaming businesses. David Ellison wants to combine the entire company with Paramount to create a counterweight to some of the tech giants. So we're going to see how all of this pans out. Meantime, we're watching shares of NVIDIA this morning. This after yesterday's reversal contributed to what was a big market sell-off. The stock is lower again this morning in pre-market trading, down by more than 6.5% week to date. And prediction market Kalshi has now raised $1 billion in its latest fundraising round at a valuation of $11 billion, according to TechCrunch. That round coming less than 2 months after its previous fundraise at $5 billion valuation. And the CEO of CrowdStrike has taken a stake in the Mercedes-AMG Formula One team, the deal valuing that Mercedes team at $6 billion. And a painting by a Mexican painter, Frida Kahlo, selling for $54.7 million, most ever for a female artist at auction. The 1940 canvas called The Dream, The Bed, is a self-portrait of her sleeping. The Dream also becoming the world's priciest Latin American artwork, topping the price of another of her portraits that was sold back in 2021. Pretty cool.
It is. All right, when we come back, we're going to hear a lot of talk about AI stealing jobs, but how about stealing your electricity? We've got the details of that risk and the high potential costs next. And a reminder for you, you can get the best of Squawk Box in our daily podcast. Just follow Squawk Pod on your favorite podcast app, and you can listen anytime. We'll be right back. Welcome back, everybody. A new warning this morning. A report from our next guest says that soaring power demand by AI data centers is raising blackout risks across much of the country this winter. Joining us right now is Jim Robb, North American Electric Reliability Corporation's president and CEO. And by the way, the utility sector, for those who've been watching at home, it's up more than 15% so far this year. Sir, welcome. Thank you very much for being here today. Jim, just start a little bit explaining to people what the North American Electric Reliability Corporation is and what it does.
So we're an independent body that was set up about 25 years ago to oversee the reliability and security of the bulk power system across North America. We do that by promulgating standards of performance for how the grid is operated, planned, and we also do cybersecurity for the grid. And in addition to that, we study the grid very rigorously and produce these assessments, such as the one we published earlier this week, of reliability outlook over the next period of time, whether it's the next season or the next 5 to 10 years.
And your bottom line is that demand is surging at the fastest load growth we've seen in 30 years, but the grid isn't being strengthened enough to keep up with that demand?
That's exactly right. The electric loads in North America have been relatively flat for the last 20 years because we've invested so much in energy efficiency. But the rise of data centers and our use of technology, and particularly the burgeoning use of AI, is driving a tremendous need for data center capacity in the country to support that demand. And we're seeing load forecasts 2, 3, 4, 5, 6 times higher than what we've seen over the past 10 years. And that's a problem because we're just not used to building stuff at the rate we need to build it.
Who's at fault if we do actually see blackouts?
Oh, I don't think anybody's at fault, right? I think we always plan the system to get us to basically match supply and demand as best we can. The big variable that we have to deal with now, though, is weather. And we've seen extreme weather systems both in the summer and in the winter over the last 5 to 10 years that are just very different and much more potent than what we've seen in the past. We've seen colder winters, we've seen hotter summer days, and we've seen these systems persist for longer periods of time. So under normal conditions, the grid would perform exceptionally well. And the grid does perform exceptionally well, except when we run into these extreme events. And the issue we're running into is that extreme events are happening more frequently. So extreme is extreme, not rare.
Where have you seen problems to date? Can you point to a few situations where, hey, this is a precursor of what's to come?
Oh, well, the 2 poster child issues on this would have been Winter Storm Uri in Texas over Valentine's Day in 2021, I think. And then the following year in December, we had Winter Storm Elliott, which really wreaked havoc across the mid-American part of the country. And the issue we run into in both of those storms is that they hit parts of the country that don't normally get that cold. And a lot of the heating in that part of the world is accomplished through heat pumps. And heat pumps are a wonderful technology under typical circumstances. But when the temperature gets so cold that the heat pump can't operate, they flip to a different kind of heating, that basically electric strip heating or resistive heating. And that's highly inefficient. So you see these huge demand spikes in the winter that cause issues. We've also seen issues in the winter with during these extreme conditions with natural gas being able to be delivered to power plants because it's being primarily used for heating people's homes. And that's caused issues and some very widespread outages.
You say the bright spots are things like delayed retirements of some of these power plants that are out there, the proactive nature of gas and electric industries, the deployment of battery storage. But what are you advising? What needs to be done to bulk up the grid?
Well, so when we have to acknowledge the problem broadly, and I think all of the policymakers in the country recognize this challenge. The issues are that we have processes that were built for a different era. And so one of the big challenges we have to confront right now is how do we get new infrastructure built and built at the scale that we're going to need it. And we're going to need power plants to be built. And so there's a wait list, right, to get the gas turbines to be able to build that generation. We're going to need to be able to build transmission, the high voltage lines and the very tall towers that people see when they drive down the freeways. Those projects typically have taken 15 to 20 years to build, and we need to shorten that time significantly. We're also going to need to invest in gas infrastructure, particularly gas pipelines and gas storage, to be able to be sure that we have the fuel we need to convert to power to supply both our homes as well as this growing economic engine of data centers.
Okay. Jim, I want to thank you for joining us. Again, Jim Robb from the North American Electric Reliability Corporation. Thank you.
Thank you very much.
When we come back, a lot more on Squawk. We're going to talk to the maker of the popular Theragun massage tool about the impact of tariffs and competition in the market. But first, the AccuWeather forecast with meteorologist Bernie Rayno.
Well, it's rain across the central part of the country on your Friday. The AccuWeather exclusive forecast calling for a wet day. Kansas City, thunderstorms, Nashville, Jackson, some rain in Washington, D.C. this afternoon. Just cloudy in Boston and New York City. Chilly in the southwest, couple of showers, Las Vegas, Los Angeles, and San Francisco. Travel delays should be at a minimum today. To help you make the best decisions and be more in the know, make sure to download the AccuWeather app today.
Welcome back to Squawk Box. Tariffs hitting retailers ahead of the holiday season. Wellness product maker Therabody raising prices 5 to 7% this year as a result, and will not be offering as many discounts as last year. I might have bought some on discount before. Joining us right now to talk about this is Monty Sharma. He is Therabody's president and CEO. So you've been grappling with this the way so many folks who are manufacturing devices and bringing them into this country, and like, what's happening here for you?
So actually, tariffs have had an impact to Therabody, just like many other companies. But we have sort of figured out a way to move our supply chains very quickly, diversify them. We had to cut costs in the U.S. for no question. We took a modest price increase. It was the first price increase we ever took since we founded the company in 2012. And then we have used a lot of the savings to really put it back into new product development, into launching new products and marketing, et cetera. I think that with the rollback of tariffs that happened a couple of weeks ago, when we've gone from 30 to 20%, we are taking that savings and passing them on right back to the consumers, because we know the consumers are hurting right at the moment.
In terms of just how you moved the supply chain, how easy or hard was it to? What couldn't you move? What could you move?
Well, it was naturally not easy to move production, but we were able to work with with the partners we had in China to move production across to countries like Vietnam and Thailand. Now, we certainly have challenges. There are certain parts like magnets that are not available in these countries, which we have to start up supply there. But we've moved about 50% of our production now has moved to other countries.
But it's not like there's zero tariffs in other places too. It's just lower tariffs.
There are lower tariffs, but we think that the geopolitical challenges with China could continue to expose us over time, and we want to be, as we diversify, we want to have the best diversity in our supply chain so we don't get this happen to us again.
And in terms of pricing, I mean, how do you think the consumer is going to fare this Christmas if there aren't the discounts that were available last Christmas, for example?
So again, as I said a minute ago, that we are rolling back our prices a little bit more deeper during the holidays from the tariff reductions that were made by the administration 2 weeks ago with the new trade agreement that they have with China. So you will see our products have comparable pricing from last year, particularly on the entry price point products. The new products that we're launching certainly won't have those, but the old products.
What is the hottest product for you? Is it Theraface?
We have got 4 new products that we are launching, which are really doing extremely well. We've got the Theragun Mini Plus that we've developed alongside Josh Allen. It combines our signature progressive device with heat and allows you to recover 3x faster. We're really excited.
I got the old Mini, so now I got to buy the new Mini.
You have to get the new Mini.
Okay.
You will recover 3x
I bought
faster.
a couple of them. I was telling you before, I've lost them on I bring them on airplanes and use them, and then I leave them the same way I leave headphones. It's a problem.
Yeah.
They're very expensive.
I hear you. It happens to me as well. I just sometimes leave them on the seat, especially if I'm on an international flight.
Okay, so that's a hot item. What else?
We are launching the Theraface mask, which is our new mask that we are launching. It's called Theraface Mask Glow.
Okay.
It has 504 lights. It's dermatologist approved, and it has the largest clinical study we've done to validate its claims, because it helps you with fine lines, wrinkles around the eyes, around the lips, around the forehead.
Does this really work? So my wife has one, and I don't know, do you use this? You do not.
don't.
And I sometimes will walk in the room and I'll see this thing and it looks like there's a robot in my, right? Do you use it?
I do.
You do?
I do, absolutely.
And so you think guys, men, women, everyone's going to use it?
Yes, I believe men and women are using it, absolutely, because we are, facial health is part of wellness.
You use it every night?
I use it, I've used it for 12 weeks, then I give it a break, and then I'll come back and use it again. So I've done it in the course of 1 year, 2 times.
Is there a risk with using it for overextended periods?
You only need to use it for 12 weeks. The clinical evidence happens in 12 weeks, but there is no risk. We have really gone through and very carefully articulated the way we've got the lights in there. They're clinically proven. It's the right amount of power density that's coming out at you, and it's safe to use in the 12-minute increment,
You don't have this device, but I'm curious, for men who are trying to keep their hair, do you know there are these things now where people are putting the laser? Do you think that actually works, or do you think that's crazy?
We do not have any evidence from a scientific perspective that works. So for Therabody, anything that we do has to be grounded in clinical evidence. We don't launch anything unless it's clinically proven, and we have not seen that. Certainly, we have a lot of these products in our development labs that we're working on, but unless they clear clinical evidence, we cannot. lost them. So we haven't seen one that works yet.
It's good to know. Monty, thank you for coming in.
Thank you for
Appreciate
having
it.
me. Thank
Happy
you.
holidays.
All right, when we come back, much more on yesterday's stock market sell-off and concerns about AI valuations. We're going to talk technicals with Katie Stockton. That is next. Right now, though, as we head to a break, check out shares of Uber. It was one of the biggest losers in yesterday's sell-off, down about 7% and falling below its 200-day moving average. Squawk Box will be right back. All right, welcome back, everybody. Yesterday's whipsaw market action sparking lots of talk about key technical levels. Joining us right now is Katie Stockton. She is Fairlead Strategies founder, also a CNBC contributor. And Katie, let's talk through where we stand. Which of these are the biggest indicators we should be watching? Is it the S&P? Is it NVIDIA shares? Is it Bitcoin? What prices are most important, and what are you kind of thinking after the action we've seen?
Yeah, Becky, I think all of those three things are the most important to the market right now. NVIDIA's intraday pivot was obviously very concerning yesterday, and now this morning it looks like it's offered below support that we're watching, which is around 180 on the chart. It's a short-term level, not a major level, but ideally we see that level hold to preserve the potential for a rebound. We do have short-term oversold conditions having returned across the board. Of course, for Bitcoin, they've been in place for some time. Bitcoin's even intermediate term oversold by now. But the short-term oversold reading for both NVIDIA and the S&P 500 It's not something that we see often, so that does give the market a chance to, or better chance to rebound next week. Next week does hold, of course, a shortened holiday sort of trading schedule, and it tends to be a seasonally positive week for the market. So I think people shouldn't be panicking here. They should wait to see how things flush out next week.
Next week, that shortened holiday week also tends to have lighter trading volumes. And I just wonder how that might impact things. If you feel like people are getting a little worried heading into this, we're looking at the markets on track for their worst week since April 4th, I believe. Look, we've been used to going straight up for a while. Mm-hmm. How does all of that, a situation like that where the markets go straight up for some period of time and then have a big pullback relative to what we've seen, what does that generally mean technically?
Yeah, I mean, it is worse than any pullback that we've seen, and not just in terms of the magnitude, but in terms of the impact on the indicators. What we tend to see is these corrective phases, which we think we're in the midst of, tend to unfold in what we call ABC waves. The A wave, I think, is potentially culminating here for a B wave, which is an oversold bounce that tends to interrupt the correction, but of course not mark the final corrective low. So we think that we could see a bounce off the short-term oversold territory, noting also that the S&P 500 has initial support essentially in line based on our cloud model. So it would be a natural place for a bounce to unfold next week. Also, if you look at the price of Bitcoin as sort of under pressure as it has been, we do have the potential to see our first short-term counter trend signal from the DeMark indicators that we track this Sunday, and that would also tee it up for a rebound. What we'd like to see from Bitcoin is for it to come back above sort of the low 90s threshold, because that would preserve support and also suggest that this down move is climactic. Bitcoin has been a bit of a leading indicator of risk appetite, and indeed, if we see Bitcoin bottom, I think that at least should be a short-term positive for equities, so that's what we'll be watching over the weekend.
And if it doesn't?
And if it doesn't, that's even worse, of course. So when we see these breakdowns confirmed for Bitcoin, we're still watching that 93,000 area as support. Of course, we're down far below that today, but we watch it on a sort of weekend basis. So on Sundays, we want to see a couple big closes below the threshold, and that marks a breakdown. The reason for confirmation or waiting for that confirmation is because these declines tend to be exacerbated by very negative sentiment. In fact, I looked at the Fear and Greed Index this morning for the Bitcoin sort of cryptocurrency market, and it was down at 11%. It's a level that I haven't seen since that index was incepted. So very extreme sentiment readings, and that's usually the stuff of at least a short-term corrective low. So I want to give it a chance to get the signal, react to it, and therein potentially preserve that support area.
What's the next support level down if that doesn't happen?
Yeah, that's the natural question, right? It's around 78, 79 to 80,000, and it's based on our weekly cloud model in addition to some former resistance on the chart. To me, that's the level at which the cyclical uptrend is preserved. We do have some deterioration in the monthly indicators behind Bitcoin, but as long as that support area, that secondary support, which we're not too far from at this moment, is preserved, essentially that cyclical uptrend is preserved in our work. So that's what we're hoping for, is not to see that additional support penetrated.
When you talk about the A wave, the B wave, the C wave, okay, if the A wave is down, the B wave rebounds a bit, but then the C wave is bigger than the A wave, what does that mean in terms of how big of a pullback you anticipate through the whole series?
Unfortunately, what it would mean is that this initial support for the S&P 500 would be broken, perhaps after a bounce, and then secondary support would become our best gauge of downside risk. Support levels aren't predictive at all, nor are our indicators, but they try to help us stay on the right side of the market and also manage risk. And right now they point to additional corrective action in the range of maybe 7-8 weeks, which puts us into later January at this point. It doesn't preclude a Santa Claus rebound or anything of that nature, but it does suggest that we'll be in store for more choppiness, and that secondary support level for the S&P is between former resistance of about 6130 and the 200-day moving average, which is currently at 6160 and rising. That's currently, I think, about 6-7% below current levels. So it wouldn't be terribly out of line with former corrective phases. It's just something that we haven't been accustomed to, of course, of late this year.
Yeah, I mean, we're really just back to where we were a month or so ago in terms of the pullback that you're seeing. Katie, when you talk to value investors, their heartbeats quicken when you start to see a pullback like this. They get excited about it. What does a market strategist think, or what does a technical strategist think of these things?
Well, I think they should get excited, and hopefully people have cash ready to put to work, because these corrective lows tend to unfold really quickly these days with the volatility that we have in the market. So I would hope that people have cash ready to go. There are pullbacks to oversold territory in the weeklies. That's what we get excited about, especially once you see a little support discovery. What we tend to see is most stocks bottom the same day as the S&P 500. So it makes the top-down input really, really important as we're considering new positions. But for value, if we're looking at value versus growth, we do have some signs of upside exhaustion in those ratios to suggest that value stocks will be a source of outperformance during the corrective phase. That's not abnormal. We tend to see growth exhibit downside leadership. So there are some stocks that look actually pretty interesting already on their charts, and they're more the stocks that have been downtrending because they actually have a loss of downside momentum. They're much different in their posturing than something like NVIDIA.
Katie, thank you. Obviously, you'll be watching this weekend. We'll talk to you soon.
Yeah, sounds good.
It is just after 7 a.m. on the East Coast. You're watching Squawk Box on CNBC. I'm Andrew Sorkin along with Becky Quick. Joe is off on this Friday morning. Among today's top stories, Ukraine's President Vladimir Zelensky saying he is reviewing a U.S.-Russia draft peace plan. Expects to speak with President Trump soon. The proposal reportedly calls for Ukraine to cede parts of Donbass, lift sanctions on Russia, limit its army, halt war crime probes in return for sovereignty guarantees, U.S. security backing, and reconstruction funds from frozen Russian assets. Meantime, Warner Brothers receiving preliminary buyout bids from Paramount, Skydance, Comcast, and Netflix, setting the stage for a significant industry consolidation. Take a look at the futures right now, this Friday morning. Right now, it's a bit of a mixed picture. The Dow looks like it would open up higher, about 107 points higher. The NASDAQ go down about 100 points, and the S&P 500 looking to open off about 8 points.
Let's get over to Frank Holland. We want to check in with what's happening this morning in the pre-market movers. Frank, you got plenty of things to choose from this morning.
Yeah,
how you
a lot
doing?
to choose from. Good morning, Becky. Good morning, Andrew. Some earnings movers. Why don't we start off with one of them? Shares of Bath & Body Works. You can see they're lowered by just about 1% this morning after reporting disappointing Q3 earnings and slashing full-year outlook, citing macro consumer pressure. This morning's move comes on top of a nearly 25% decline yesterday. You see the sharp drop in the stock right there. Despite the company announcing a real turnaround plan for the business, the stock saw multiple downgrades this morning from Goldman, from Morgan Stanley, from a number of others. Shares of Bath & Body Works pulling back nearly 1%. Another earnings mover this morning, we got Intuit. Take a look at this chart. Shares are popping this morning. They're up about 3.5% on a top and a bottom line beat. The company's saying its AI-driven products are getting traction with mid-sized businesses that want to cut down on their administrative work. The strong results follow news earlier this week of Intuit teaming up with OpenAI to integrate its financial products into ChatGPT. Again, shares up just about 3.5% right now. And GE Healthcare Technologies higher this morning, taking a look at the chart, up just about 1% after announcing it's buying Intelerad Medical Systems for about $2.3 billion in cash. This deal will expand GE Healthcare's efforts in medical imaging, including into AI and cloud software. The deal set to close in the first half of 2026. Again, shares up just over 1%. Back over to you.
Frank, thank you, and we'll check in with you in just a little bit.
Okay, we've got a lot more this morning on what's going on with the markets, and more importantly, perhaps, what the Fed should do in December. Should it cut rates? Former Dallas Fed President Richard Fisher is going to join us next. And later, House Minority Leader Hakeem Jeffries on the healthcare battle that is brewing on Capitol Hill, the state of the Democratic Party, and so much more. We're coming right back.
meet needs with nearly endless customization, and track market trends with up-to-the-minute news and insights. Trade brilliantly with Schwab.
Franklin Templeton ETFs. With over 70 ETFs, we have solutions for every market, helping advisors build the portfolios of the future today. Franklin Templeton, your trusted partner for what's ahead.
Goldman Sachs Active ETF GPIX consistently seeks to deliver monthly income without sacrificing capital growth. Active ETFs from Goldman Sachs. Not just active, relentless.
Going about the retirement party?
Oh, yeah.
Wouldn't miss it. Bob's been here since forever.
Never took a sick day.
But let's be real. Lately, Bob's been slow in this town.
You were something.
Thanks to Slalom's Zero Legacy approach, we've modernized and are running on real time.
Slalom?
Yeah. Collaborative, thoughtful, total pros.
Exactly what we needed. Legacy shaped your present. Zero Legacy is your future. Slalom. We bring more.
CNBC. Live ambitiously. Buy the dip with CNBC Pro's Best Deal of the Year. Market-moving news and interviews across 3 global live streams. Subscriber-only content from Wall Street pros like Josh Brown.
If you love the stock market as much as I do, you're going to love the best stocks in the market list.
Plus exclusive live events.
This is my first time at the stock exchange, and it's been awesome. To be on the floor, I just can't believe I'm here.
Go pro with the Best Deal of the Year at cnbc.com/pro Black Friday. Terms and restrictions apply.
I find it challenging to come up with a gift that's really impactful, but something that really makes a difference. Jolie has been a tremendous gift. It's something that is not only looks beautiful, but makes us feel amazing, and is something that we get to use every day.
Growing up in a small town taught me it's not about how many products you have, but whether they truly work. That's why we created Kitsch, to offer hair care solutions that work as hard as you do. Our first product was a simple hair tie, and now we have products like our rice water protein shampoo and conditioner bars. They're packed with amino acids, vitamins, proteins to encourage growth and add shine. At Kitsch, we're here to be your best friend in beauty, so you can be the hero of your day. Find out more at buykitsch.com.
Lots of Fed speak today. All of it hits as September's mixed jobs report adds some new uncertainty over whether the Fed will move ahead with the December rate cut. Joining us right now is Richard Fisher. He is the former Dallas Fed president, also a CNBC contributor. And Richard, we have talked so much about will they or won't they that it gets a little tiresome. But you see the action with the market yesterday, and it makes you realize that the market is kind of hinging to some extent on what the Fed does. How important do you think this will they or won't they question is for the stock market right now, or for the bond markets too?
Yeah, Becky, as I've always said, the Fed cares about the credit markets. They don't care about the equity markets directly. And I think the real issue here that so many people have been talking about is, will there be a divisive vote? Will we have 3 governors vote against Powell, or will the bankers argue the opposite? I think that's the real issue, to see what comes out of this meeting. And I think it's very important, Becky, to realize there's nothing new about this. 4 of the governors voted against Paul Volcker at one point at the instruction of President Reagan, who wanted lower interest rates. Volcker resisted. He nearly quit his job because of that. And Greenspan had the same thing. There were 2 governors and 1 bank president voted against him at one point. And as you know, with Bernanke, we had several votes where we had 3 people or 4 people, not 4 or 3. I was one of them that voted against Ben. And yet that carries the table, and what comes out is what's important. So there's an awful lot of focus on the Fed right here. The Fed is not responsible, in my view, for what's happening in the market. And if you want to go back and read some history, I'd suggest our viewers go back and read Kindleberger's book on panics and manias and the reactions to therefore. This is
Go ahead,
separate dynamic that I don't think the Fed really plays much of a role in. There's too much emphasis on this, Becky. This isn't
this is a reaction to an extreme rally that's taken place. Remember, the S&P bottomed at 666 during the great financial crisis. Where is it now? It's over 6,000. So put things in perspective, and I think this is just a reaction to overpricing underlying value.
We had a guest who joined us earlier this morning who pointed out that despite the Fed's rate cuts, both in this most recent cycle and in the last cycle right before the election, it didn't really move things on the longer end of the Treasury market. Didn't really move, in fact, yields moved higher despite the Fed rate cuts. And I guess that's the big question too, is just even how much power the Fed has over things that people would like to see done, like lower mortgage rates.
Yeah, Becky, Powell's actually talked about this, and Fed officials have talked about this for a very long time. It's questionable whether Fed funds really impact the 10-year Treasury. And as I've said to you and on this show many times, I'd be watching the Treasury auctions. The 10-year Treasury is still around 4%. It has gone up and gone below it, but that's what's moving the markets, supply and demand. And I don't think the key interest rates that affect businesses who borrow further out on the yield curve are really affected by what happens with Fed funds. That is important to traders and to momentum guys and to algo guys. But as far as underlying business is concerned, the housing market, et cetera, Fed funds have a limited impact in terms of the way they move. It's determined by supply and demand, particularly for the 10-year Treasury. And as you said, they cut 150 basis points. Those rates have gone up, have not gone down.
So what would you do if you had a vote, Richard, at the FOMC?
I'd resign immediately. No, I don't know, Becky. So I would probably be arguing here. I would consider carefully 25 basis points. And I'm sort of on the fence as to what to do here. We don't have inflation down to the point where everybody would like to see it. At the same time, we know, and we'll hear this at the meeting from all the bank presidents, which is where the input's going to come on what's happening with the jobs market and inflation in their districts. Now that they don't have the data, the hard data, they're going to have to rely on the bank presidents to give the reports on what's happening in each Federal Reserve district. So I want to listen to that, Becky, and I'm sort of on the fence about 25 or 0.
But Richard, how much impact do you think the Fed can have in this moment on jobs? I mean, it's an interesting thing because we have this dual mandate situation, but if you really hear what a lot of the businesses are saying about jobs, it doesn't feel like the switch is going to be pulled, or that the impact of an interest rate cut is actually going to have a meaningful impact in this case.
Yeah, I think you're right. Look, uncertainty is the enemy of decision making. Our businesses right now are very uncertain as to what's going to happen on several fronts. You just had discussion on tariffs. Come again, go, come again, go. This administration is very spastic the way they're dealing with these key economic issues. That creates uncertainty. And making decisions under conditions of uncertainty are difficult. When you do impose a tax or a cost factor, however big or however small, like tariffs, you have to look for ways to protect your margins. And one of the ways to protect your margins is to cut your costs. Labor is a critical cost. And so I do think companies, particularly the big ones we've seen, have been looking at how they can use enhanced technology, AI, et cetera, to protect their cost structure. And also at the same time, ramp up productivity. The only other option is to raise prices. We're seeing both take place at once. So I really don't think here, again, to repeat myself, that what the Fed does here impacts business decision making. If anything, they want to see a constant rhythm to the Fed because there's so much uncertainty everywhere else on fiscal policy, on economic policy, macroeconomic policy, and globally as well.
Richard, thank you. Good talking to you.
Okay, have a nice day.
Okay, thanks, you too.
Okay, coming up, President Trump and New York City Mayor-elect Zohran Mamdani set to meet at the White House today. We're going to head to D.C. for a preview of that conversation in just a moment. And later, Dr. Toby Cosgrove on the healthcare talks on Capitol Hill. Squawk Box coming right back.
Time now for today's Aflac trivia question. Which tech company invented the floppy disk? The answer when Squawk Box returns. Now the answer to today's Aflac trivia question. Which tech company invented the floppy disk? The answer, IBM.
President Trump and Mayor-elect Zohran Mamdani set to meet today at the White House for more on today's meeting and really the future of the Democratic Party. I want to bring in Democratic pollster Jeff Horwitz. He's a partner at Hart Research. What do we think is going to happen at today's meeting? Do we think that we're going to see any of this in the public, and is this going to be fireworks and theater or something else?
Well, it's obviously we'll see what happens today, but I think what's really important about this meeting and about what happened on Election Day is to understand what Zohran Mamdani is and what he means for the Democratic Party and sort of its totality. And so I think what we're going to see today and what we saw on Election Day is really more about a generational change than an ideological shift. And we saw Democrats across the board on Election Day do really well and win in lots of places, despite a really difficult time historically as the Democratic Party's national brand. And so I think that's really instructive. And you saw that in New York, but you also saw that in places like New Jersey and Virginia, and where actually the Democratic candidates in Spanberger and Sherrill overperformed Mamdani. And so I think that's important sort of this context is, yes,
well, so Jeff, here's the thing I'm trying to figure out. If you were advising President Trump on one end and you're advising Mamdani on the other end in terms of how to approach each other today, and let's say there are cameras, right?
Yes.
And the reason I'm sort of framing it up this way, I could see advisors and Mamdani himself thinking that he needs to show that he's super tough on behalf of a certain group of New Yorkers and really try to give it to Trump. I could also see Trump think the exact same thing in terms of a lot of the comments he's made publicly about socialism and communism and this and that, and thinking that he needs to act tough. But then on the other end, I think to myself, well, the president's inviting him there. Maybe he wants to actually figure out a way to create a relationship. And I think that maybe Mamdani thinks, well, long term, maybe I have to get along with this guy, so I'm going to have to do it differently. But then I might take hits politically on the other side from some of my base. What do you tell both of these gentlemen?
Yeah, well, I think, look, the American people want our leaders to get together, to get along, and to get things done. I don't know what we're going to see today. My guess is we may see sort of different agendas here, and I think Mamdani was just elected with a mandate to make things better in New York, make things more affordable in New York, and lower prices. And I think that's what you're going to see. He's obviously reached out since Election Day to more to across New York, with New Yorkers who maybe didn't vote for him, didn't support him, could keep the police commissioner in her job and quite effective there. And so I think that's what you're going to see from him. From President Trump, I don't know. I think that statements he's made in the last 24 hours and where you see other Republicans going after Mamdani and trying to paint him as taking the Democratic Party a different way, I think we may see a different approach. But for Mamdani, I think it is true to what people are looking for right now in America, and they're tired of
What's the political win, though, Jeff? That's the question. What's the political win for the president? What's the political win for Mamdani? And by the way, given that they're completely at odds, is there some third path we don't know about?
Yeah, well, I think the president has been pretty clear that he is going to motivate his base and look out for his base, and so I don't know that there's going to be an olive branch. That's not where he has been historically, and it's not how.
But then why even have the meeting if it's not an olive branch, right?
Well, again, he has an agenda, and we'll see what he tries to do with this meeting. Again, I think for Mamdani, he needs to demonstrate that he can get things done and achieve results. And I think he is going to try to work with the president. Again, he has won an election and has a mandate. So it's less about current political favor and more about getting policy and getting things done.
I just don't know if we're walking into a Zelensky moment. You know what I mean?
I hear you, and I think that is, again, I don't think that's going to wear particularly well for the vast majority of Americans if that's in fact what is attempted here. I will say that one of the things that Mamdani has been quite effective on is he is able to meet the moment pretty well. And so my guess is he is probably prepared for all of these things, and he's pretty good on camera. And so I think that is going to be it will be something to watch here, and in particular for younger people. And that's the one thing I would say here that's really important is the one lesson I think Democrats can take from Mamdani's win is on the generational ability to connect with people online and in ways that Democrats for the last couple of years have really failed.
So Jeff, explain this one to me, because I know there's a bit of a debate going on even in this city where I am right now. over, I don't know if you've been following, there's been some strikes going on at Starbucks, some of the local Starbucks here in the city. And Mamdani has come out in support of the striking workers, which makes sense given some of the things that he's said in the past. I believe he sent maybe one of his deputy mayors to support one of those strikes. And I understand why the younger generation might look fondly and positively on that. At the same time, as the mayor of the city, ostensibly, you want to have a lot of businesses coming here, wanting to open up more Starbucks or other shops or other things. And I don't know whether you think that that actually will cut against the city and his ability to spur and create more jobs effectively.
Yeah, well, and you know New York City better than I do, but I think that, I don't think businesses, it's New York City. People are gonna come to New York City, businesses are gonna come to New York City. I think there is a real desire, and one of the reasons that Mamdani won was that his ability to stand up for average people, for working people. And there is a sense across this country that corporations have far too much power than they should have right now, and that the system is really stacked against people. And standing with
you make it out like it's preordained. Like I've lived here. Look, I grew up here. It's preordained that somehow everybody always wants to come to New York City. I'm not sure that that's the case. I think New York City, just like the Great American Experiment, I'm not sure it's preordained that everybody comes to America. You have to work at it.
Yes, I take that point. I think he is standing for workers. That is true to who he is, his values and his beliefs. And can he do this in every case? No, but I think this is an important marker, and again, it's true to who he is and his background.
Hey Jeff, I think people were surprised to see how quickly Mamdani picked up steam and actually won the election in New York City. Do you think that those politics play, I guess, beyond California, beyond New York, and in a broader election, in a general election, maybe not 2026, I don't know what it's going to mean for Congress, but do you think those politics play for the Democrats in the next presidential election?
Yeah, and this is, I think, the broader point, is the change that you saw in New York and in New Jersey and in Virginia is really a generational change. It is not about ideology.
They painted the New Jersey and Virginia elections as things that were more moderate Democrats. I don't know how the Democrats look at this. And by the way, the Democrats did what they were supposed to do, which was to win in 3 places they were anticipated winning. It would have been a much bigger deal if they lost in any of those locations. But to look at this and say, okay, Mamdani has had such success in New York, is that a winning strategy for the Democrats to do that on a national level?
How you communicate with people, it is, and that is
not how you communicate with people, what you communicate to people. In terms of a more extreme, progressive message, is that the message you think the Democrats would use to win with on a national level?
Yeah, and so my point here is that it is how. That's the important thing. And every place, every locality is different. New York City is different from Virginia, is different from Wisconsin, is different from Michigan, but it's how you communicate and how you reach voters that is so important. And that is the real lesson from the Mamdani campaign and what he did so effectively. He changed the electorate in New York. There were young people who never would have voted this election, and they did because he reached out to them and met them on platforms and in places where they communicate every day. And he communicated in a way that actually felt real to them rather than a politician talking down to them. And that's the lesson.
I'm not talking about how you communicate, I'm talking about what you communicate.
It's a messaging question. We're asking about the message.
Yes,
Jeff.
I understand. And what I'm saying is the message is different in New York City than it is in other places. And
so that message you don't think would work on a national level, not the messaging, how you communicate, but what you say, at least from what happened and worked in New York City, you don't think would work on a national level.
I think to parse every one of his policy proposals, some of those would be more effective in other places than others, but it's much more the how than what his policies are. But the point is, whether it's New York or New Jersey or Virginia, that Democrats were talking about the economy in ways that voters understood that they were trying to make things better. And again, policy prescriptions in New York on housing and other things are going to be very different than they are in Virginia. But the point is you understand what people are going through and are going to make a difference. And that's where people feel the current administration is falling short. I would say also the other through line in all of these elections, including New York, is that Donald Trump was a big driver of the vote. And in all these places, including in our NBC National poll, we saw that people were more likely to be voting in opposition to Trump than in support of him. And that was important for 25, and it's important for 26.
Jeff, I want to thank you for joining us this morning. Appreciate it.
Thank you very much.
Up next, Bitcoin on pace for its worst month since the 2022 crypto collapse. We're going to take a look at this morning's charts. Crypto's been down 11 sessions in a row, and that has never happened, or 11 days in a row, I should say, since the session never ends. That's never happened in Bitcoin's existence. First, though, as we head to a break, take a look at shares of Gap, the retailer's comp sales topping expectations after its viral Better in Denim campaign with Cat's Eye. Here's CEO Richard Dixon last night on Mad Money.
Our strategies are working. It's working across the board. It's clear. We're showing momentum. And it's not just Old Navy, although I want to talk about it. Old Navy up 6, Gap up 7, Banana up 4, gross margin exceeding expectations.
Welcome back to Squawk Box, everybody. New York Fed President John Williams speaking in Chile today, coming out on the side of a rate cut. He says that the central bank can still cut interest rates, in his words, in the near term, without putting its inflation goal at risk. Fed funds went from 33% to 51% for December, and so that's interesting and something to watch on, too. You are seeing a little bit of pickup in the futures this morning. Dow futures now up by 232 points, S&P futures up by 17, and the NASDAQ indicated up by 5 points too. Earlier this morning, we were looking at some declines on the futures, and that comes after the roughest week that we've seen since April 4th, just in terms of the markets, the stock markets, and where we're on track for things. The Dow and the S&P both down for 5 out of the last 6 sessions. And again, on pace for the worst week since April 4th. If you take a look at what's been happening with Treasury yields, let's check this out because we have seen weaker yields. This morning, the 10-year is now sitting at 4.05%. The 2-year is at 350 straight up. Crypto prices have been really under pressure as well. For the month, it has been significant declines for Bitcoin. This morning, Bitcoin's down another 5.25% to just below 82,000. And again, we are talking about some pretty significant declines from the highs that we had seen from Bitcoin as well.
Coming up, a lot more on Squawk, the healthcare affordability fight taking shape on Capitol Hill, and Dr. Toby Cosgrove is going to join us after the break, a conversation you do not want to miss. And then later, Boston Fed President Susan Collins on a very busy day for Fed Speak. Squawk Box will be right back after this.
All right, welcome back, everybody. The Affordable Care Act's enhanced premium tax credits expire at the end of the year, but Congress has not yet come up with a bipartisan solution for that deadline. Joining us right now is former CEO of the Cleveland Clinic, Dr. Toby Cosgrove, a heart surgeon as well. And Toby, thanks for coming in today.
Pleasure. Nice to be with you, Becky.
All right, let's just talk about where things stand. What is the situation with the healthcare system at this point? What's going to happen with higher premiums? What do you think potential solutions are?
We got a big problem that's coming up right now, and the problem is that inflation has really driven up the cost of almost everything. There are three things that are really driving the cost up. One is inflation. Two is more older people. And three, there's more things we can do for people. And healthcare is the biggest.
By the way, more things we can do for people, that's a good problem to have.
Yeah, that's a great problem.
Right.
And healthcare is getting more and more sophisticated all the time, and more things we can do. What we're seeing now is the premiums are going up enormously, 26% across for people that the premiums are going to continue up onto insurance And this is going to be very unaffordable for lots of people, and it's going to force people out. And on top of that, there's a lot of people, some 16 million are going to lose coverage. And this has a ripple effect all the way down through all of society and all of the economy.
Healthcare costs have outpaced inflation for decades at this point. We've never been good at arresting that inflationary curve. Things like this, and for higher education too. As somebody who's worked within the system, what is the best way to try and address that?
Okay, there's really sort of three things I think we can do to address it. Clearly, there's prevention. And, you know, right now we have an epidemic of obesity. We have problems with smoking still. People have got to take better care of themselves.
Well, look, the medical industry will say, hey, we have Ozempic or other GLP-1s to take care of that, but that's really expensive.
We do, but you know, the problem is 40% of the United States is obese. And that causes diabetes and, you know.
But are the GLP-1s the solution, or are they part of the problem in terms of?
No, I think they're part of the solution.
Okay.
And they're a fabulous drug, and have ramifications to go over cardiac, renal, GI.
They're expensive.
They are expensive, but costs are coming down. And I think, and that gets into a whole other set of things. So the other issues about how we can bring down costs are going to be policy things. Okay. And for example, where are the costs really? Well, the costs are in hospitals and doctors, and 10% of the costs are drugs. And right now what we do is have evergreens for as far as drugs are concerned, and people extend the patents, and so things don't get to be generic drugs, which drives up the cost of drugs. So they're going to have some reform there.
Although the pharmaceutical companies will say, look, we put in so much money into the cost of innovation that when we do get something on patent, we should be allowed to keep it, because not everything we spend actually turns out to be a drug. There are so many failures along the way. Well, it's funny, when you talk to anybody in the healthcare industry, they will point fingers in the other directions about where the problem is.
I think it's all of our problems. It's not going to be a single solution to this. Yeah. And so we're going to have to address it uniformly, and that's just one part.
How do we fix the hospitals? As somebody who has run a hospital, and hospitals have such thin margins, what are the problems there? How do we fix it?
So in hospitals right now, what you've got is 10% of the cost of drugs are going up, 10% of supplies are going up, and 6% increase in the cost of labor. So what we need to do is, and we've got great news coming up, and I think we're actually hitting on an exciting new time in healthcare, and that's around AI. I think AI brings the efficiency to healthcare that we've never seen before. And over the last multiple years, the productivity of hospitals has gone continuously down. Right. We've just added more and more people. Now we can have, and we have a shortage of people. There's 2 million unfilled jobs in healthcare. And this is an opportunity to employ AI to bring the efficiency to healthcare physicians, nurses, everybody.
We're talking about just the low-hanging fruit is that the doctor can now just talk to their phone, tell them what's going on, and have it write the report.
Ambient listening, which is absolutely terrific. And has improved doctors. But that's not all. I mean, stop and think about billing in the hospitals. You have people who do the coding, people who put out the bills, thousands of people working.
How much of a hospital budget is that stuff?
The administrative stuff.
Okay, so a lot. And so McKinsey would say that 10 to 15% of the cost of healthcare in the United States can be brought down using AI, and that's particularly using it in
for administrative work.
Administrative work.
Yeah, because I don't want to talk to an AI bot when I'm in the hospital bed. I still want my doctors. I still want my nurses. I don't care what you do behind the scenes.
Exactly, but you also don't want your doctor spending all of his time at home and doing charts. Correct. And you want 18 hours a week now are administrative stuff for doctors.
Really? How did it get so bad, and why?
Well, it's because, you know, you've got those charts to fill out, and then, so all that can be taken away and getting much more efficient. Stop and think about supplies. Having your supplies be just the right amount of supplies. How about increasing efficiency in your operating room? How about scheduling? How about predicting no-shows for appointments? There are hundreds of things that you can apply AI to that'll be enormously advantageous in reducing the
But
cost.
AI is also expensive, and how do the hospitals come up with the cost for paying for it? I mean, we talk all the time about how expensive this stuff is. Who's going to pay for it?
It is expensive, but it is going to, the ROI on it is going to be positive. There's no question about that.
But can I ask a separate question? And this is just about basic care that I can't figure out. If you go in, depending on where you go, to get an MRI for different body parts, and if I'm just talking out of pocket, forget the insurance piece. There are some places that'll charge you $1,000. There are other places that'll charge you $6,000 or $8,000. And I can't figure out for the life of me, is that just a margin situation? How much do these machines cost? Are the hospitals trying to turn them into profit centers because they're trying to amortize the cost? I mean, obviously they're trying to amortize the cost of these are not cheap machines. But just walk us through, for example, that kind of scenario.
Okay, so first of all, you have to understand that right now there is billing. And if you get an MRI in a hospital, or you get an MRI owned by the hospital, the insurance pays the same, but it's cheaper to do it as an outpatient.
Right.
Basically what we need to do is not have the constant pay just because you're getting an MRI someplace. You need to have it done in a cheaper place and move the patients to the outpatient. That's true.
Because it's cheaper to do it in the outpatient facility.
Absolutely.
Because just the real estate's different. Or what are we talking? What's the shift? It's the same machine, right?
It's the same, but all the factors that go into managing a major hospital are expensive. But an outpatient facility, no question, is more convenient and lower cost to do it, and that's where things need to move. And interestingly, that's where one of the biggest growth areas has been in the last several years has been outpatient facilities.
Right.
Toby, Dr. Cosgrove, thank you. We appreciate your time.
My pleasure.
When we come back, a squawk moment on Jeopardy last night. Here's a hint. Andrew for $800. Pay the rest right after. The future's taking a leg up this morning. Part of the reason for that move, traders now pricing in a 51% possibility of a December rate cut after the Fed's John Williams said that the central bank can still cut interest rates, in his words, in the near term without putting its inflation goal at risk. Before those comments, the rate cut probability was at 33%. We're going to be watching these moves all morning long. Squawk Box will be right back.
Harrison, where to now?
1929-8.
Andrew Ross Sorkin's book, 1929, depicts stock crash figures like Jesse Livermore, who made $100 million doing this to profit from the price drops. Harrison.
Was shorting.
Yes.
That was, wow.
That's really cool.
We're watching this for the first time. That was last night on Jeopardy. I had been getting a lot of texts that I didn't watch Jeopardy last night. I don't watch Jeopardy enough, clearly. And that apparently happened.
That is really cool. Not only that, you were one of the photo ones. There's rarely a photo or video clue that's up there, so.
Are you a big Jeopardy watcher?
Jeopardy, yeah.
I'm glad that they got it right on the first try.
That was very
Short
good.
seller,
Yeah.
right? So here they are.
A learned group.
A learned group.
Yeah.
Look, Shorting and Jesse Livermore was an emotional wreck of a human being, but one of the great short sellers of that time. You know what happened to Jesse Livermore?
But I hope it's not.
He doesn't,
Yeah.
you know, it was all over. Yeah.
Very cool.
Trading, I think, up and down like that can do that to
Shorting
you.
is particularly tough, I think, too.
You know, by the way, this is going to sound crazy. We had to go. For most of the 1920s, the late 20s, when the market was going crazy, he was out of business because you couldn't short.
Yeah.
Because everything was just
Everything
going
was straight up.
Everything was straight up.
Right. Always a risky bet because you could lose everything and more.
Everything and more, always. It's the hardest way to do it.
All right, when we come back, AI in the music industry, the CEO of Warner Music Group on how it could be both a bane or a boom for artists. We've got that story next. Squawk Box, we'll be right back.
Welcome back to Squawk Box. So Warner Music Group CEO Robert Kinsel is here. He's publishing a blog post outlining the company's vision to grow the value of music for artists in the era of artificial intelligence. Robert joins us now, and there's a lot going on. You got earnings, which we need to talk about. We need to talk about AI and how this whole game is about to change. Or do you think it is about to change?
We're in the early stages, but it's really great to actually to go into that knowing that our strategy is working. We've been growing our market share. It's showing up in our results, that we just released yesterday. Our industry is healthy. It is a twin engine of growth between volume, meaning subscribers growth, as well as pricing, which hasn't been there for a long time. And now we have AI entering in early stages to actually accelerate.
Why, just to the pricing piece, why do you now have pricing power that you didn't have before?
I think, in the first, I would say 15 years of streaming, all of the streaming companies have focused on just growth. And it was an important thing to do because at that time the industry was suffering. So converting people from free to paid was an important thing to do. And all of the companies have done the right thing, which is grow, 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 grow. And after a while, you start realizing, okay, as the growth slows down, we need to focus also on pricing. And you don't do that in every single country and every single market, but where it's slowing down, you start focusing on it. So it's a good thing for the streaming companies, and it's a good thing for the music companies. So it's just responsible business on both sides.
On the AI front, though, you think this is going to be a big benefit for you?
Yes.
I worry that it's going to create sort of a shocking amount of supply in terms of supply of music, and then there's going to be a question about supply and demand, and maybe I'll be on the wrong side of this, but as we move towards a universe of more and more and more content, for example, the value of the content seems to invariably drop, maybe with the exception of sports or other things, and maybe hit songs have more value, I don't know. But how does this sort of play in your mind?
So I've lived this actually for quite a while.
So people understand.
One of my previous jobs was a chief business officer at YouTube.
Yeah.
And I joined early on, in 2010, and we were sort of in this explosive time of growth with user-generated content. We had lots of issues, lots of copyright issues. There was lots of resistance from copyright holders to participate. There were lawsuits, all of that. So we worked on converting lawsuits into very fruitful partnerships over the long term. And we built multi-billion-dollar business with many of the content partners. So out of user-generated content that they could track, they could monetize, and use it to amplify their canonical content. And I view AI as a similar thing. Obviously, it's slightly different, but it's a similar phenomenon. And to your point, Andrew, on volume, the music industry has already lived significantly increased volume. The number of music uploaded to streaming services has grown rapidly over the past 10 years, 5 years. And so we're no strangers to that. We know how to operate within it. What's important with AI is that it's an opportunity to introduce interactivity to music that doesn't exist today. And interactivity correlates to value. If you look at video spend per hour is roughly twice that of music. Because video, you're focused on it, you're watching it. Gaming spend is twice of video. Because now you're using your fingers and you're interacting. Concerts are off the charts because you actually walk there and you're using your hands to jump up and down and do that. So the more interactive the content is.
A bigger portion of people's time of the day?
It's whether it's the portion, but it's also the quality of the interaction. When you're actually interacting rather than only listening, when it's in front of you, you're creating, it's very valuable to you as a user.
What does it mean for artists if everybody can be an artist in this way? It seems like it would create this strata where the highest, best known artists are going to do very well because people are going to be using and copying and playing with their songs. It seems like on the bottom, everybody is going to have a microphone, just like with podcasts or something. But it seems like maybe that middle tier gets stretched and squeezed, and it's harder for artists to make it from that bottom tier up to the top.
Yeah, so let me actually start with the principles that we use in order to strike our agreements, because it goes to this. We spend a lot of time thinking about this. And by the way, it is early in our industry, and that is why we're getting in, because we want to capture it early and shape the music industry this way. The three principles that we establish as non-negotiables for our agreements are each partner has to commit to a licensed model. It's a very important thing. 2, the remuneration has to be fair and equitable. And what that means in our minds is that it's tied to consumption and revenue growth. And 3, that artists have to have the right to opt in for any songs that are getting created, which implicate their name, image, likeness, and voice. These three things, non-negotiable, and those are the ones that obviously we have achieved
Right.
in
But how do you feel about
agreements.
if people start to like dub over other lyrics, for example? That's going to be the next part of that. Good, bad? It just makes it more interactive.
You will see lots of use cases. I mean, the companies that we've struck agreements with have all kinds of different use cases that they're working on, and that is what's exciting about it, is because it is making people think, it is making users think, it's making ours think and interact, and it is our job to figure out the business model around it. But the core of that is that we have to participate with this industry as it grows, both in usage and revenue.
I got one more for you. TikTok and Meta Reels. You guys license a lot of music to both of these.
Yes.
How much?
And YouTube Shorts.
And YouTube Shorts. How much of a business is that becoming for you, or do you see that more as a promotional device to get people to either buy songs or to go to a Spotify or go to concerts and the like?
I'll use the same thing that we used to say at YouTube. It's promotion that pays. It is, our industry is used to promoting, but at the same time, there's a license, underlying content license for that use, because it's a mix of both. There are many users who are just sampling music, and there are many people who are really using it for music. So we have to have both use cases covered, and that is what we do. So, if you think about the music business, today, because of the complexity of distribution and the advent of AI, it's become a very complicated business. And being part of a larger company that can execute on these agreements with clear strategy, strength of catalog, strength of the roster, it's a very, very important thing. So the large music companies have actually an increasing role in today's world.
Okay. Robert, thank you for coming in this morning.
Thank you so much.
Fascinating.
All right, it is just after 8 a.m. on the East Coast, and you're watching Squawk Box right here on CNBC. I'm Becky Quick along with Andrew Ross Sorkin. In the last half hour, New York Fed President John Williams saying that there is still room for an interest rate cut in the near term without putting its inflation goals at risk. That commentary leading traders to boost the odds of a December rate cut to more than 50%. That's up from just 33% earlier this morning. If you take a look at the futures right now, they are in positive territory. Dow futures up by 237 points. S&P futures up by about 18 points. The NASDAQ indicated up by 25. And Treasury yields also moved a bit after Williams' commentary. You can see right now the 10-year is at 406.
Let's get to Mike Santoli for more on the markets and how they may work their way through on this last day of the week, Mike.
Yes, Andrew. So that news from John Williams definitely put a little bit of a bid into the market. We are pretty oversold, at least getting somewhat oversold after that downside reversal yesterday. More than a 3% swing from high to low. One of the most dramatic such moves we've seen in quite a long time. This is a 2-year chart of the S&P. Wanted to put it up here to put some of the kind of recent trend in perspective. For one thing, you have kind of lost that uptrend line that we've had since April. So it's got to sort of rebuild, figure out if enough downside has been taken, especially in the leading areas. You see this measure below, the relative strength index. It's basically just the index's trend relative to its own history. And you see it's getting down towards some extremes that we've seen like here, and then also on the way down. So, it's not always the low, but it usually means that you're not too far away from at least a bounce attempt. And NASDAQ 100 is a little bit more oversold than the S&P. This is only one measure. It's not as if most stocks are really washed out, but it's worth keeping in mind that even if we haven't resolved all the big macro issues, we definitely have the makings building for some kind of a bounce attempt just because of technical stuff. Take a look here at the way the market has attempted to rotate toward safety and away from tech. This is a 6-month chart. This is the tech sector of the S&P. That's healthcare. So it's not enough. Healthcare is much smaller than tech in the S&P. It can't absorb all the selling from tech. And obviously tech became over-owned, and the threshold for being pleased by the AI trade has gone up. Final point, let's spin it around. Obviously crypto has been the locus of a lot of the downside pressure. Shows portfolio stress. This is so far this quarter. Bitcoin, Coinbase, Robinhood. It shows you how the entire retail speculative trade is linked to crypto assets. Still Bitcoin down again this morning, although slightly up off its recent lows, guys.
Okay, Mike, thank you. Appreciate it. We will we'll see where things head for the week today.
All right, joining us right now, Alicia Levine. She's head of investment strategy and equities at BNY Wealth. And Alicia, you make sense of this. What's happening right now? What did we see yesterday? What did we see this whole week? What are we seeing this morning with the bid back?
So as we came into the week expecting to get relief on three factors, on what was going on with the AI trade, what's going on with the labor market, and what's going on with the consumer. We had three big reports within 18 hours of each other.
You're talking about NVIDIA's earnings, which, by the way, showed very strong reports, stronger than anybody was anticipating. Then you're talking about the jobs report, which, guess what, also showed that the job market looked like it was in
something for everybody.
And the consumer report you're talking about,
Walmart.
Oh, Walmart.
Walmart.
And by the way,
a beat
Walmart's
and raise.
a beat and raise on all of those things. So they passed the test on all three of those lines, and yet.
Correct. And so the reversal yesterday, as you've been talking about all morning, really was a terrible signal, right? It was a difficult day because the tests were passed, and then that leads to the question, what's causing the tremors under the market? And to me, I think the answer is, and I think the real thing is the Fed and the levered part of the markets and the tightened liquidity in those areas. It seems very clear, this was a Williams speech 20 minutes ago, that the Fed's cutting stance when it went below 50% really accelerated to the downside. And that's because the levered parts of the market that are illiquid were raising cash where they needed to raise. So you saw crypto lead to the downside. The deleveraging was happening in crypto. Investors sold what they needed to do to cover that. And I think what the market is saying, that the market now needs a third cut for this year. So that is a difficult place to be because you'd rather have a stronger economy. And
we're 5% off the highs. What does the Fed care? We just spoke with Richard Fisher, the former Dallas Fed president, who said we never really cared about what the stock market was doing. We cared about the bond market.
The Fed doesn't care, but the levered parts of the market care. That's why you're seeing CVS, blow out here, and that's why some of the areas where there has been more leverage put on to companies be that much weaker. So I think that's what's happening here. It's the leverage part of it with the Fed stance essentially saying we're probably not cutting in December, and that's the message to the market.
But what do you do?
What do we do here? Taking a step back. Look, I think technically there's some more downside here because of the reversal yesterday, but our stance is we're not walking into a terrible macro moment, and in fact, we see an uptick in growth next year. Our team just raised earnings estimates for next year. The corporate sector is remarkably resilient with clearly better productivity. And so with all that, we would use this as a buying opportunity. You can't know when the downside is, but ultimately, if you're not walking into a terrible macro situation, downturns are viable, and that's what our message is here. Even though we see in the short term, it could be much more volatile.
Well, so that's the question, though. Are we in if it's a falling knife scenario and timing is impossible, you need to figure out, if the knife is going to continue to fall, you might wait. If you don't think the knife is falling more.
So the worst thing you can do is try to time the market. Let's talk about the multiple, which was a big conversation here 3 weeks ago. We've now gone from 23 times forward earnings to 20.5 times forward earnings. The interesting thing is what's happened to the multiple on the tech sector. The concern is that there's too much leverage being put on these large cap tech and Mag 7 companies. If you take even 2 steps back, don't need 10 steps back, the net leverage on the Mag 7 is a mere fraction of what it is on the rest of the S&P. What's happened is that the free cash flow margins have come in a little bit. So now Mag 7 have free cash flow margins of 18% versus 11% for the S&P. That is still far higher, will command a multiple premium, but less than what it was. And the market has already adjusted to the spending.
So what do you think the number, so by the way, maybe this is a healthy thing. And this might actually set you up for another bull run. The question is, JP Morgan put out a report, we were talking about it earlier this week, that showed when you were at multiples of 23 or more on PE, and you bought into the S&P at that time, 10 years later, your annualized return was literally somewhere between up 2% and down 2%. I mean, so you would not be happy with that result.
Not be happy with the result. I'd say if you're looking at a market that had a operating margin of 9%, which is what we had, 20, 30 years ago versus the 14% we have now, that's a different market. And to use historical data and to say it's the same, I think is the wrong analysis. We have much more productive and healthier companies here today. We just went from 23 times to 20.5 times. The sky is falling, the market sold off 5%. we're in a healthier place. And I'd say the compression in the tech margins in the multiple is probably the right thing given what's happening with free cash flow margins. They can still spend double this and have higher free cash flow margins than the rest of the market. You are protected there, still command a premium, but we think the market broadens out because of this. And the earnings for next year is being driven by other sectors as well. We brought down comm services, we brought up tech, we also brought up financial earnings. So the earnings are being driven by the rest of the market. Alicia, thank you. Great to see you.
Coming up, a lot more on Squawk Boston. Fed President Susan Collins on the upcoming Fed meeting, her view of inflation, and so much more. She is a voting member at that December meeting, so what she says matters, and that's coming up right here. And then later, House Minority Leader Hakeem Jeffries is going to join us with the latest on the agenda in Congress before the end of the year. Do not go anywhere. Squawk Box returning after this.
They're planning to start selling their obesity drugs directly to employers, cutting out traditional drug sales channels and middlemen like pharmacy benefits managers. Starting January 1st, they will offer the drugs through Waltz Health. That's a company that helps employers purchase cheaper medications. Take a look at the stock of Eli Lilly, off by about 0.25%. Novo Nordisk down by 0.75%. When we come back, Boston Fed President Susan Collins. And later, House Minority Leader Hakeem Jeffries will join us live from Washington. Squawk Box will be right back.
Welcome back to Squawk Box. New York Fed President John Williams saying this morning there is room for an interest rate cut in the near term without putting its inflation goal at risk. Now, concerns about the Fed's next move is one reason for this week's volatility and the downturn in the markets, and the S&P is down about 4.5% so far in November. Senior economics correspondent Steve Leisman is live in Boston this morning with Susan Collins, president of the Boston Fed and a voting member for this December. Good morning.
Andrew, good morning. I am here with Susan Collins, the Boston Fed president. Susan, thanks for joining us again.
Absolutely. Delighted to be with you.
Yeah, nice place to be. Let me start off by asking, before we get to the whole rate discussion, which is obviously on the market's mind, about your outlook and how, say, yesterday's jobs report did or didn't influence that outlook.
So, obviously very good to get the data, but it was from September, and it was mixed. It didn't significantly change what I'm seeing. What it showed is a bit more job growth perhaps than I'd expected, with a 3-month average of about 62,000, still really concentrated. At the same time,
in healthcare and leisure and hospitality.
Yeah, the same sectors it's been concentrated in. At the same time, the unemployment rate ticked up. That wasn't a big surprise, and some of that seems to be higher labor force participation. So I'm still really focused on the weekly claims data, which I think helps to give a pulse of how things are evolving, because that was September, but really helpful to have.
I noticed what you're talking about too. There was this period of time when the job market was apparently stronger, where you'd have this influx of people into the workforce. They wouldn't end up as unemployed, but a month later, it looks like they got employed. Is that what you were looking at when you say it's a result of the labor force growing?
So it's one of the factors, and of course you need to keep looking at the data.
Sure.
And that does factor into the outlook, because we make policy based on where the economy's going. And so pulling all of the information together to develop an outlook is really important. And, with the uncertainty at the moment, with the limited data, that, I can tell you what my baseline is, but I do want to say that there are other alternatives around it that you can't rule out.
Well, there's not a few things that might go into that baseline. For example, there was a government shutdown, which apparently will subtract from GDP, but many things will bring back, will come back in coming quarters. Give us your idea of the baseline and where the economy is right now, how resilient is, for example, the consumer.
Yeah, so in terms of what I'm seeing for right now, and again, limited data, but pulling all of it together, I'm seeing economic activity continues to be relatively resilient, and there's some more robustness in demand, on the demand side, both overall for consumers and for firms. At the same time, the labor market clearly has softened, and that is slower, job growth, but with the slower labor supply growth also, the unemployment rate is still relatively low, and many of the other indicators, the claims data, suggest it's relatively healthy, and inflation remains elevated, largely goods, largely tariff associated. So as I look forward, I think that there's evidence that the demand got pulled forward. So growth is actually likely to slow a bit later this year, but I do think it's likely to pick up with solid fundamentals and as tariffs work their way through. But that means unemployment might tick up. I think we're going to see inflation continue before the disinflation. Relatively benign scenario, and that's something that I'm quite focused on.
So where does that put you in terms of policy? Let me just ask the first question, which is, how restrictive do you see Fed policy now, and is a restrictive policy appropriate policy now?
I think a moderately, mildly restrictive policy is very appropriate right now. And that is part of that relatively benign outlook that I just laid out, which is my baseline, because it helps to ensure that as tariffs work their way through the system, we really do see a return to that overall disinflation that we were seeing, many months ago. And so I do think mildly restrictive policy is very appropriate right now, and and that makes me hesitant as I look forward to think about what the next policy move should be. Of course, I don't make decisions before the actual meeting. There's still new data coming in.
But it sounds like you'd be reluctant to cut again in December, having already cut twice this year.
So there's some reasons why I'm hesitant, but again, I'm going to factor in all of the different information. One of them is that resilient demand that I talked about, that could put pressures on prices and cause firms to pass more of the tariffs through. You know, at the same time, there is weakness on, you know, for many consumers, especially lower income, watching that really carefully. And what that really seems tied to is high price levels and that continued inflation. Inflation that's been elevated for nearly 5 years has a risk of persistence.
Well, if it's going to pass through from tariffs, then why not make policy now based on the belief that it will pass through?
I think we need to balance what the different risks are, and I think that the dialing down that we've already done helped to address the shift in the risks that I had seen, and at this point I think we're well positioned. So again, I'm going to look at all of the data, and if there's more evidence of concerns on the labor market side, I would certainly factor that in, but I do see hesitancy. You know, the overall financial conditions are on the accommodative side, and that's important to consider as well.
How would you advise people who follow the Fed closely, asking for a friend, to absorb all of the things that are out there? There are people out there who are saying, among your colleagues, that are, we have to be cutting rates now because the employment market is weak, there is no inflation. How do you address that?
I think a range of views is really healthy. Okay. And, you know, when you reach potential inflection periods, when the data are less clear and there's more limited data, I think it's not surprising that there's a range of views. And I think that hearing from all of my colleagues is really valuable, and so I am listening carefully.
Sometimes it depends on what you're focused on. I'm struck by the challenge the Fed has now in addressing almost two disparate economies. You have this raging investment in artificial intelligence, and you have the older economy. You have issues of housing where rates are high and hurting the housing market, and the auto market where rates are high and hurting the auto market. How do you address those two very different things that are going on, in addition to this notion of the K-shaped economy where low-income people seem to be struggling, but the wealthy are doing just fine?
The dynamics, there are a number of different streams to them, and they're interacting, and that does add to the complexity of developing an outlook, which is part of why I said I think different scenarios are quite plausible. But that also reinforces my view that getting back to a price stable environment is actually an environment that helps to be able to sustain maximum employment with broader benefits and addressing some of those factors, and you know, that economic vitality. I will say that I am seeing a real focus on efficiency in the data for corporate non-financial firms. We've seen a real robust productivity growth, and that helps to reconcile the solid demand that we're still seeing. Earnings calls have been surprisingly strong with the much softer labor market. And so there's a number of things to watch, some near term and some that'll play out over time.
And just to translate, maybe I'm making this more confusing, but you have an economy with strong productivity, high efficiency. You can have strong growth numbers with low job growth numbers.
Yeah, so that is one of the puzzles, and I see that productivity growth in, you know, a core part of the economy as being key to helping with that. The uncertainty also does. You have firms that have an efficiency mindset. I hear about that from all of my contacts. Large firms, small firms, and it's not just AI, although that is part of it and a growing part. It's also production processes and more traditional automation, and that is helping firms to meet robust demand, even though they're not necessarily hiring, and that's something we're watching carefully.
I want to get to the conference that we're here to cover today, but before I get there, is it possible, if productivity is so much higher, that potential growth is also much higher?
So it's certainly possible that our potential growth rate will, you know, be somewhat stronger, and that would be good news. That's an environment in which, you know, economic vibrancy over time.
Would you set policy ahead of that, or do you need to see that first?
I think you need to factor in a range of different kinds of things. Okay. So I think that's one of them that we're trying to assess, and it's a complicated context for policies.
Yeah,
you know,
so we're going to get there. Right. We're going to get there in a second, but real quick, you sound like a person, a Fed official to me who says, we need to eventually get down to neutral, but maybe now is not that moment. Is that?
So certainly my baseline says that maintaining mildly restrictive policy is appropriate to ensure that we get that disinflation. And then over time, I would absolutely expect to normalize further, but I think doing so cautiously, gradually is appropriate, and I'm hesitant to get too far out ahead given the moves we've already made and some of the inflation concerns that I hear from all my conversations around the district.
And given the topic that we're going to be talking about today, which is this issue of how the global uncertainty and the things going on around the world are influencing, for example, the inflation data or the growth data or the jobs data here in the United States. Could you just give us your summary of all that?
Happy to, absolutely. And this is our 69th Economic Conference.
Are you kidding me? I feel like I've been to 68 of them. But yeah, that's
well,
amazing.
Thanks for coming. We're delighted.
Not that old.
Yeah, absolutely. So our theme this year is the U.S. economy in a changing global landscape, and it really is changing. So some of the themes there are increases in global risk and uncertainty, which we know plays out in a variety of ways, but also potential increases in global fragmentation, and trying to think through some of the implications there. We'll have sessions on multinational firms. Yes, we will talk about tariffs and a range of other factors as well with academics and policymakers and business leaders. And so I'm looking forward to a robust conversation.
And this fragmentation theme means we're not all kumbaya around the world anymore. Even in the Western Alliance, there's fragmentation, and that has an influence on economies all around the world.
So I'm thinking of fragmentation of flows of trade, you know, so in terms of supply chain fragmentation, in terms of flows of capital and labor, but also flows of technology. So there's a range of reorganization that may be taking place, partly related to uncertainty and risks, and perhaps other factors as well. And so those are things to try to understand better. Complicated, some near-term implications and also medium to longer-term implications. And so again, I'm looking forward to learning a lot and delighted that you're here with us.
Susan, thank you so much for joining us, and I'm really happy to be here for what might be my 68th or 69th time at the Boston November conference. Thanks so much.
Thank you.
Guys, back to you, wherever it is you may be. I guess you're down in Midtown right now.
We are. And I know that's an exaggeration, Steve. Probably not 68, maybe 53?
I don't know. Whatever. I've been going a lot, almost every year. It used to be in a nicer place, though, I think. You used to have one over in Cape Cod. Now it's in downtown, which is nice, but not as good as it was.
Susan's still there. She can hear you. Steve, thank you. It's great to see you, and we appreciate the help from the Fed's Collins as well. When we come back, the state of retail and the American consumer in a week where several big players reported earnings showing very different things. Plus, House Minority Leader Hakeem Jeffries joins us as he focuses on expiring healthcare subsidies. We'll be right back.
This week, showing a mixed result from retailers. We got Walmart showing growth, Target showing continued problems, and then there's still lots of questions about the American consumer. Jason Del Rey is the founder of a new independent media startup, The Aisle. Good morning to you.
Good morning.
Congratulations on that. Help us understand. We'll just look at the wall. We got Amazon, Walmart, Target, TJX. What is this all saying to us right now?
Listen, I think consumers are looking for deals. They're trading down. They're a little cautious, and they're holding on to discretionary spending. And so, if you're an Amazon or a Walmart, and you can invest in price, convenience, and selection, you're going to do all right. They have the big advertising businesses giving them some profit to buffer them as well. And if you're anyone else that's more discretionary spending led, you're seeing some troubles.
What did you make of the Walmart news earlier this week? Or maybe it was last week we actually heard it really with
Walmart,
Doug.
This week was earnings, last week
Right,
was
Doug McMillan. That's where I was going with it.
Yeah, so I mean, he was going to step aside at some point. I was a little surprised by the timing. I thought he had a little more he maybe wanted to accomplish, but listen, he's been in the job, 11 years, right. I believe, has done so much for them. John Furner, been there a long time. You know, some people have referred to him as sort of Doug 2.0. I think there's a lot of trust in him, and he's very digital savvy as well, and so the move makes sense.
Well, okay, you said though that there were things still on his list, the wish list for Doug. So what were those things? And then does Doug 2.0 do them?
Listen, I wrote a book a couple years ago, right. Winner Sells All, about this battle, and I think Doug would have liked to have seen the market share gap close a little bit more between them and Amazon. They're just starting to lean into AI with a deal with OpenAI and ChatGPT. I thought maybe he'd want to see that transformation through too. But John, again, has been US CEO for many years now, and I think he's going to lean heavily into some of that area, the more AI-focused areas.
Do you think they can close that gap? Is that closable, or is it just a runaway situation at this point?
Listen, I'm very interested to see how heavily they lean into a deal with ChatGPT and OpenAI to sort of bolster shopping in an AI app like that. And if Amazon stays back and takes a more walled garden approach, maybe that's the way they do.
Do you think that's the right? And by the way, you're talking about now the big issue, I think, long-term in retail, which is how people are going to buy, whether you think we're all buying on a chatbot that then just goes and finds the thing any old place, whether you have to go inside of Amazon or inside of Walmart, either physically or on the app. Like, how do you see this play itself out?
Well, this is, you mentioned The Aisle, my new publication at readtheaisle.com. This is why I started it and left a job at Fortune. I think this is the big transformation, probably since the App Store was created, if not when Amazon Prime, the biggest impact on retail since then. And so I think ChatGPT, that will be a place we're already seeing it. Product discovery happens. Will transactions happen there too? I don't know. But moving from search with keywords to chat-based, that is what retailers are trying to figure out.
What's that going to mean for the retailers? Is it lower margins because I'm just going to go find you the cheapest, best product that fits into that?
Well,
Good news for consumers, bad news potentially for retailers? Or do they buy their way in like they did with Google search to be able to show up at the top of the search?
Well, that's one of the areas SEO is being transformed into, whether you call it GEO or AEO, trying to get noticed by the LLMs and the AI apps. And so I think on one hand, it's scary in that online advertising has become sort of a big margin provider for some of the retailers, Amazon and Walmart as well. And if these shopping agents are going out and just finding the best deal, you don't have a chance to show advertising to a consumer. So that's one question mark. The other is the consumer relationship. If you start shopping through an AI app,
does it get totally disintermediated?
That would be my bigger concern.
I think it's a real one, but I think you see retailers right now sort of on their back feet thinking if we don't align with a AI app like that, we look like we're going to be left behind. So I think they're going to lean in, but I think that question mark of not only who owns the customer data, but who customers start to think of
But
as
don't you
their.
think in the end they're going to have to close themselves down? I mean, we talked to Derek Khosrowshahi, Uber, and then the CEO of Lyft all the time, and I always think to myself, in the future, my AI agent would just arbitrage the price for a vehicle. Same thing what you probably do for batteries or whatever you think is a somewhat commoditized service product or whatever. And therefore, then I think to myself that the advantage will be to one of these companies to close themselves off unless you think you're going to have to be open.
Yeah, I think Amazon, of course, right here, you know, they're investing in Rufus, which is their shopping agent. They already have things like Subscribe and Save, and I think Amazon will take a more closed approach. We did hear Andy Jassy say they'll figure out ways to work with third parties. What that looks like, I think, will have to be a relationship that Amazon feels is very beneficial to them. And so that is the big question mark for others. I think Amazon looks okay right now, but then again, there were a lot of companies that looked okay 20 years ago when Amazon came along.
Jason, I want to thank you. It's called The Aisle. Go check it out.
Thanks so much.
Appreciate it.
All right, when we come back, House Minority Leader Hakeem Jeffries. We will talk about the battle on Capitol Hill over healthcare and much more. Stay tuned. You're watching Squawk Box, and this is CNBC. Welcome back, everybody. Discussions remain at a standstill over subsidies for the Affordable Care Act. Yesterday, the Senate left for the Thanksgiving holiday. Nothing that's planned at this point, so we are still in wait-and-see mode. Joining us right now is House Minority Leader Hakeem Jeffries to talk a little bit more about this. And sir, can you lay out, without any partisan bent, kind of where things stand right now, just so Americans understand what's happening?
Well, the Affordable Care Act tax credits are going to expire on December 31st, and if that happens, tens of millions of hardworking American taxpayers are going to experience dramatically increased premiums, copays, and deductibles. In some cases, premiums for health insurance will increase by $1,000 or $2,000 per month. This is for working class Americans, middle class Americans, and everyday Americans. Healthcare will be unaffordable. People will be unable to go see a doctor when they need one, and that's unacceptable in this great country, the wealthiest country in the history of the world. Over in the Senate, it's my understanding that Leader Thune has recommitted to a vote on an Affordable Care Act extension no later than the second week in December. So there are ongoing discussions that are taking place in the Senate. Meanwhile, unfortunately, in the House, my Republican colleagues have shown zero interest in doing anything related to the ticking time bomb of the Affordable Care Act tax credits expiring. House Democrats have launched a discharge petition to try to compel an up or down vote on a straight 3-year extension so we can provide working class Americans with the same level of certainty that my Republican colleagues provided their billionaire donors when passing the one big ugly bill.
Minority Leader Jeffries, let's talk about that discharge petition. You need 218 votes in the House in order to pass that. You've got 214 members in the Democratic caucus, so you only need 4 House Republicans to have to sign onto it to get this passed. But the idea of saying that this is a 3-year extension instead of a 1 or even 2-year extension has any potential Republicans saying, forget it, this is dead on arrival. That's the opinion of Representative Don Bacon. He's a Republican from Nebraska who has been working with the idea of potentially extending for 2 years. But 3 years, they say, is dead on arrival. So if this is something that you want to satiate, if you want to get done, you are going to need at least some Republicans to come over. Why not start with a 1-year extension or potentially even a 2-year extension?
Well, Leader Schumer offered a 1-year extension in the context of trying to end the Trump Republican shutdown.
Yeah, that's different. But I'm talking about what you have now. Let's not go back to what's done in the past and what has not been extended. If you want to get something that has actually done, you need to do something that will have bipartisan.
You can ask me the question. You can ask me the question. I'll provide the answer.
Answer the question instead of going back.
I'll provide the answer. No. I'm providing an answer in order to provide context. Republicans have repeatedly refused to take yes for an answer. It was a very reasonable multi-year extension that was offered. It was a 1-year straight extension plus a multi-year process through a bipartisan commission to more permanently resolve the Affordable Care Act issue. So having that context is absolutely important, regardless of what you may think.
It's important context to make me realize that I don't think you want to get a deal done. I think this is something where you'd like to see the rates go higher and allow the Republicans to hang themselves with that. Is that the answer?
That's absolutely a ridiculous assertion. And really, shame
3 years
on you
is not
for
going to get passed, so what do you do?
Shame on you for saying that. Because we're fighting, it's not a partisan issue for us. In fact, the states that are most impacted as it relates to an Affordable Care Act tax credit expiration are all Republican states. We're talking about West Virginia, Wyoming, Alaska, Mississippi, right? Tennessee. Over and over and over again, we can go through the list. That's why you probably have
some Republicans who would sign on if you guys could come up with something that actually looks like a bipartisan deal.
Listen, this is not a partisan fight for us. It's a patriotic fight. We're fighting for every constituent, even if Republicans aren't necessarily fighting for their own constituent. We want to find a bipartisan path forward. And that is what we've repeatedly indicated we want to do. Like, we want to sit down and have a reasonable discussion, find common ground to address this issue. Now, Republicans said in the House they were willing to deal with the Affordable Care Act tax credit issue after the government funding agreement was reached. Well, now the government shutdown is over, and there's still been no conversations with House Republican leaders.
Mike Johnson never said that. The leader never said that. You do have Republicans, though, who would agree with you on something if it was actually bipartisan in nature. That's what I'm trying to get at.
Actually, Mike Johnson actually did say that there was always a plan to specifically deal with the expiration of the Affordable Care Act tax credits. In fact, he said that repeatedly. So I'm not sure what you're referencing. I think
their plan is something that looks more like an HCA, which I'm guessing you would say is dead on arrival too. If you want to set up these healthcare plans that are funded instead of going through the ACA. I'm assuming you would say that's dead on arrival too, because there have been Republicans who've put that forward. Am I wrong in thinking you would not go along with that?
What I'm saying is that what's in front of us is the immediate expiration of the Affordable Care Act tax credits. Republicans have had all year to deal with this issue, and they've refused to do it. So they're the ones who are not interested in finding a resolution to a healthcare crisis that they've created, including passing a bill that enacted the largest cut to Medicaid in American history. And because of their policies, hospitals, nursing homes, and community-based health centers are closing throughout America, including in rural parts of the country.
Which would why it would be nice to see a one-year extension so that none of these things happen immediately and give you all time to actually try and work on bipartisan situations, rather than a 3-year extension that basically kicks it down until the next administration is here. I think both sides need to come together and find some way of getting around this that's not necessarily saying, okay, we're going to spend $350 billion to extend these tax credits without having any way of trying to get at the real problems of what is causing higher premiums, what is causing this inflationary healthcare environment to begin with.
Yeah, what's interesting is that Republicans just spent trillions of dollars to provide their billionaire donors with massive tax breaks, and in that same bill, cut Medicaid by the largest amount in the history of the country, and also ripped $186 billion in nutritional assistance away from hungry children, seniors, and veterans, the largest cut to SNAP in American history. But somehow we can't find a dime to extend the Affordable Care Act tax credits, even for a year, because House Republican leaders have rejected a 1-year extension. Rejected it. That's their position, not our position, that's their position.
So what I'm hearing, though, is that there is no middle ground. There is no bipartisanship. This is, at this point, us versus them, and we are not going to agree on anything. Am I?
That's absolutely not the case. We've repeatedly said we will sit down anytime, any place with any of our Republican colleagues. We'll even go back to the White House to sit down with President Trump. We've repeatedly offered to do it, but they've refused. Donald Trump spent more time on the golf course during the longest government shutdown in American history than he did talking to Democrats on Capitol Hill who represent half the country. He has no interest in actually trying to find a bipartisan solution, because the Republican approach, which is failing now, the American people know the country is moving in the wrong direction, the cost of living crisis is out of control, but the Republican approach since day one of this presidency has been my way or the highway. Everybody knows it. It's one of the reasons why Republicans were rejected decisively electorally in the elections early this month. Yet as Democrats, we continue to say we want to find a bipartisan path forward, but we need Republicans to operate in good faith in order for that to happen.
Minority Leader, do you think that, what do you think do you think you were successful in shutting down the government? Do you think you got what you wanted?
We didn't shut the government down. Donald Trump and Republicans control the House, the Senate, and the presidency, and in fact, the American people, prior to the shutdown, during the shutdown, and after the shutdown, know who was responsible for the government shutting down. And in fact, in the midst of it all, Republicans refused to even sit down and have a conversation about keeping healthcare affordable for everyday Americans. And so we're going to move past it. We have a Affordable Care Act tax credit expiration deadline that we need to tackle. We have a whole set of spending agreements that we need to find common ground on in advance of those agreements expiring in terms of the continuing resolution by the end of January. We just need partnership on the other side of the aisle. You know, what we have right now is that the Republicans are in the midst of an ongoing civil war. I mean, Donald Trump is fighting with Marjorie Taylor Greene. Mike Johnson and John Thune are fighting with each other. Corey Mills and Nancy Mace are fighting with each other. House Republicans are strongly disagreeing with Senate Republicans. The whole thing on the other side of the aisle is a mess. Meanwhile, as Democrats, we just want to fight for working class Americans.
Minority Leader Jeffries, I'm curious, later today, the mayor-elect of New York, Mondami, is going to be meeting with the president at the White House. Unclear whether we'll see it all publicly or not. I'm curious, have you spoken to him about what this meeting is going to be, how he should approach it, and if you have, or even haven't, what you're advising him?
Well, he and I had an opportunity to talk yesterday. I congratulated him on the announcement that Police Commissioner Jessica Tisch was going to remain at the helm of the NYPD. I think that's a great thing for the city of New York, for every single community. and it reinforces the mayor-elect's commitment to public safety for all New Yorkers. I think at the meeting, as he's publicly indicated, the two topics that will be discussed will be the affordability crisis that exists, in the United States of America. The cost of living is way too high. That, in fact, is the case in New York City and across the country, and public safety and how to move forward. And hopefully, President Trump is going to approach the meeting with a respect for the city that allowed his family and himself to achieve significant levels of success.
Minority Leader Jeffries, thank you for your time today. We do hope to see something accomplished with this, so we'll continue to watch. Thank you.
Thank you.
Coming up in just a little bit, a flurry of Fed speak moving markets this morning in a big way. What you need to know before the opening bell. That's going to happen right after this. Do not go anywhere. Breaking on Squawk Box this morning, New York Fed President John Williams saying there is still room for an interest rate cut in the near term without putting the inflation goal at risk. Meantime, Oppenheimer issuing a note this morning saying investors are behind on the growth opportunity in IBM, putting an overweight on that stock with a $360 price target. And Bitcoin falling below 82,000. It's on track for its worst month since 2022. So, a lot to chew on this morning, a lot.
That's right. People are going to be watching this, as we talked before, to see where things close on Sunday for Bitcoin, too. Anyway, folks, have a great weekend. Make sure you join us back here on Monday. Right now, it's time for Squawk on the Street.
Good Friday morning. Welcome to Squawk on the Street. I'm Carl Quintanilla with Jim Cramer, David Faber, Post 9 of the New York Stock Exchange. Coming off the wildest day of trading since that April tariff shock, futures finding some relief here as New York Fed President Williams says there's still room to cut rates, quote, in the near term. Bitcoin does bounce after approaching 80K. Our roadmap begins with the wild swings rocking investors this week. NVIDIA, of course, wiping out almost $400 billion in market cap. We'll talk about what investors do from here.
Plus, cryptos continue to get hit. Bitcoin is down more than 30% from its recent highs. It is heading for what would be its worst month since the crypto collapse of 2022. And we got a lot of Fed speak this morning as well. Rates, inflation, of course, the focus. Where policymakers now stand on that potential rate cut in December. Yeah.
Let's begin with the markets after yesterday's stunning reversal to the downside, Jim. We haven't seen reversals of that magnitude but maybe a few times in the last 3 years.
Yeah, I gotta tell you, I mean, it's a terrible situation when you have that so-called island reversal where it just opens up big and people come in. They tend to be wanting to chase that rally, thinking that there's a bottom, and they've just been eviscerated, particularly if they use any sort of margin. We have a lot of 2x, 3x stuff going on that we don't even talk about. People who are making leverage bets, maybe they don't even know they're making leverage bets. And then, David, the immersion of what's happened to Bitcoin is really incredible.
What is it indicative of? What is it, and is it reflective of just a retail investor that somehow...
It's the end of the year of magical investing. All that stuff, I mean, look, they're all up today. They all reversed. 3:30 this morning, you could not give these away. And you know, Bitcoin has like at 81, and you're looking at what I regard as being the single worst moment in this decline was the moment between 3:30 and 4:30, and then Williams comes on, and then suddenly everything's fine. I don't think so.
You don't think everything's fine?
No, there's a lot of people who have to get out. Let them get out. This is not what suddenly they wave a magic wand. We always have real issues. We have issues with the building out the data center unlimited. We have issues with a lot of people, you know, the strategies, the micro strategies.
All right, but yesterday we were sitting here after those incredible numbers from NVIDIA talking about a company that is killing it in every way, whose stock, frankly, you could make an argument is not even expensive based on its growth rate. And we were expecting things were going to be very strong yesterday, and they were in the early going. And now you're just sitting here telling me, all right,
you're
well,
in Nebius, and you're fighting for your life for Bitcoin, for Bitcoin immersion, and you're thinking to yourself, this is, I gotta get out of Elastic. And what can you sell? What has a bid? NVIDIA. It was collateral damage, David. It was collateral damage.
Sell what you can, in other words.
Sell what you can.
Yeah.
I mean, instead of the stuff that is obviously, I think, endangered because, you know, look, do you think that Oklo, do you think that these companies that are nuclear that don't have any nuclear, what do we do with those? In a nuclear plant, it takes 8 to 10 years. Even a small modular reactor is going to take 6-7 years. This is not, David, this is not a blue chip. But I want you to look at that pattern. You know what that pattern is?
What is it?
That's the Everest pattern.
Is it? Okay, thank you for that.
Yeah.
Appreciate it.
No problem. Everest was the name of my dog before I renamed it.
Yes, I remember.
NVIDIA.
This is the North Face, I guess, right?
Yeah, it's the North Face.
Yeah.
What base camp are you on, Chief?
As low as possible.
There you go.
I don't do well with oxygen deficiency. I need my oxygen.
You did write today that crypto cheerleaders are due for a full court press.
Yeah, well, where are where's come on, Sailor. Get Sailor over here. Come sail away with that guy.
We do have JP Morgan today looking at the prospect of getting excluded from some MSCI
I thought that piece was
or
so
some
brilliant.
digital asset treasury companies.
Well, it's not a stock anymore. It's a commodity play, leveraged commodity play. What is it doing in the MSCI? What MSCI? You're talking about Henry Fernandez, who's one of the foremost observers of our time of the market.
Who runs that company? Yeah.
And they actually have what I call procedures.
Okay, and what are we talking about here? What should be in it or not?
If it's excluded from some of these indices.
Yes,
and JP Morgan's argument is you'd be looking at outflows of $3 billion, maybe $9 billion.
They can't handle that. That stock cannot handle the truth. Will you do something?
Sure, what would you like me to do?
I don't know.
You
Mark.
know,
give me an owl sound. Hey, turn that stock around.
How much of this has to do with something you've been talking about for a couple of weeks?
Your magical thing.
No, where you turned on OpenAI. Let's
Absolutely.
call it about, I don't know,
I
10 days ago.
And
I do wonder how much of this continues to be concern about that. You know, yesterday we talked about it briefly in the NVIDIA earnings, sort of buried in there. That 100 billion really might not ever come to fruition. It was nothing more than words on a piece of paper, it would appear, letter of intent, versus frankly what they term an agreement to invest 10 billion in that profit.
Now I have a publication that I live by. It's a publication that I think is right 100% of the time. It's called Information.
I knew you were
and that
I don't know why
had a memo memo, they got the Altman memo.
Here it is.
And the Altman memo
Yeah.
says what a lot of people have been saying. Candidly, I've been fickle on this stuff. I've been Perplexity. I've gone.
You wanted Apple to buy Perplexity.
Yeah. And I still like Perplexity in terms of what Apple should do. But unfortunately, Perplexity's going to have to pay.
But the Altman memo is. Sorry, continue. I just don't want to get too off track here.
Going back to the old days. I'm having lunch today with an executive, okay? So I went to all of the different ones. And it's executive's a prominent executive. And I'm not going to tell you his name because you know him.
Okay.
And he's your guy, actually.
Oh, great, thanks.
It's no problem. And I went to all of them. Okay, so ChatGPT knows me. It says, here's 10 questions for him. And the questions are like, do you like shrimp? Versus, no, the questions are so pedestrian. They're not that. But I go to
Actually, really good question.
I go to Google, to Gemini. I can't, I'm overwhelmed with how much information.
But frankly, no offense to what you're doing, but that's like the easiest stuff there is. The things that Gemini 3 is potentially capable of doing are so far beyond what the thing, asking these kinds of questions. They are starting to show the ability to have an actual agent working for you.
I think it's
and real enterprise usages.
Well, it's a leapfrog, and I believe that in my sacred publication, the information, that it is a leapfrog, and Altman should be threatened.
Well,
but then again, that place, I don't know what goes on. Thank God I don't work at OpenAI. But that place has some explaining to do.
Well, they talk about Google's recent progress. This is quoting from the OpenAI, which says they're quoting from this internal memo, could, quote, create some temporary economic headwinds for our company. That company being OpenAI, and the message from Sam Altman to the employees.
David, the amount that they want to build.
I mentioned OpenAI because is it perhaps still reflect? I mean, we all sit there and wonder what's going on yesterday, given it would seem to be a very positive day based on those NVIDIA numbers, or seen alternatively, they're the only ones making money from AI so far, and everybody's still questioning it, and they wonder whether OpenAI is really going to have the funds sufficient to sustain this thing.
Then you're saying that Jensen Huang is disingenuous when he says that everyone's making billions off of us. Do you think he's disingenuous? You're willing to say that?
No.
Good, because it's not true.
No,
he's
not willing to say
But
that.
I will say this. There's winners and losers, and it's happening right now. And this OpenAI Oracle axis, that's what you have to worry about. The axis of OpenAI and Oracle.
So you put them in the loser category? If you're saying there are winners and losers.
I think that OpenAI's got to now play leapfrog with Google, and that's very hard because it turns out that the combination Google Gemini is extraordinary. And by the way, Anthropic, business to business, doing much better than people think. So I find that Oracle AI, it seems like a bit of a pincer movement against it, because you know that Zuckerberg is not letting them in social, because Zuckerberg is the spending king.
Some pointed out the irony of a few months after a judge said there's no monopoly here, it was this enormous company called Alphabet that managed to shake up the existing order.
It was a shock because I remember I had thought that they were going to be destroyed. The Paul Weiss lawyer that I spoke to no longer works with the company, but told me, you don't know what you're talking about. We are going to win. There's going to be a reversal and everything. It was clairvoyance. It was almost like they used Paul Weiss's.
You know, the other thing was the line a while ago where Nadella said he was going to make Alphabet dance. That got some chuckles yesterday too.
Absolutely.
Yes.
Well, hey, look, they're
doing
doing
well.
Copilot's doing well. Copilot's doing well. Azure's doing well. It's Google Cloud. And David, I don't know whether you've cut the cord or not.
No.
Why?
Because I work for a cable network.
Same here.
You forget who pays the bills?
No cord cutting, Jim.
Yeah. I'll be the last man in America. I pay for both YouTube TV and Spectrum.
Oh, yeah.
Okay,
Just so I
Chunk.
can pay
Do you
more.
mind if I call you Chunk?
I am a chunk.
I've got this YouTube thing for NFL.
Yeah.
When you can watch.
Yeah, that's true. But I just think that they have, this YouTube is a juggernaut, and it doesn't stop. Philip Schindler, I mean, these guys are so smart.
They are.
By the way, they're
smart.
also,
I don't know.
can I just say,
Who?
Nice guys finish first.
Who are we talking about here?
Guys
Oh, the
are
Google
fabulous.
guys.
Well,
So listen, Microsoft may still be well positioned as well. They've sort of made bets along the way. They still own 27% of OpenAI, but they've also gone in with others as well. Who knows?
Maybe OpenAI has a
one day OpenAI can still. I don't know.
I still date my kind of break with OpenAI was not because of the things that they did wrong, like listen to me.
I always listen.
MP Materials was still in China, and then like I argued that I don't think it's true, and then it came right back at me and says, "Listen, you're wrong, Jim." And I go back there. I said, "If I go with that on my show, I'm gonna go right." And it says to be fine. And then it came back and said, "You would have been mortified if you had said what we told you to." Thanks. And that,
You're
but
always
the
just
other
sharing
one,
your own personal experience with AI. I don't think it's particularly helpful.
I would love to be empirical.
Why don't you try and be helpful and tell us what's going to happen today? I mean, that's hard to do.
I just don't buy it up. Let the people who are margin come out. Let them take a look at it. Plus, it's Friday.
We are a bit higher because of Fed speak today. That's sending futures
Look
higher.
at those prices. I mean, when I got up, NVIDIA was down 4. And I know you got up about 15 minutes ago. I got up very early to see where NVIDIA was, and NVIDIA, like, oh my God. I mean, woof, woof. I mean, we got a lot of situations that are up. Now, I don't want to be I understand your desire to quell my anecdotal.
Yes.
But I take my anecdotal evidence and then I go and I see if others have had my experience, and then I compound that with the Gerstner-Altman appearance, and then I layer on the Sarah Fryer.
By the way, it's been more or less straight down ever since then. So.
Well,
fair point.
Why not? When you have Sarah Fryer, one of the foremost people I know in this business, asked when said backstop, did you really mean backstop? And she said yes.
Yes,
And then
exactly.
she puts out what it's like, some
I didn't mean
LinkedIn,
backstop.
some LinkedIn thing. Are you kidding? Are you kidding me? That's kind. That's kind. Remember kind? Who named that? Kind? AIND.
What about it?
Sarah Fryer was there for a little.
Oh, was she the Kind Bar?
Yeah, Kind.
I knew the guy. That Daniel.
Now, look, I think Sarah Fryer's great. I think she slipped up. But we have that. We have the information piece. We have Altman saying, come short me if you can, and it makes me nervous. Okay.
Okay.
Yeah, that's certainly,
Cholera.
maybe it's making the FOMC nervous too. Williams today did say, quote, "I still see room for further adjustment in the near term to the target range for Fed funds to move the stance of policy closer to the range of neutral, thereby maintaining the balance between the achievement of our two goals."
Yeah.
Although offset a bit by Collins this morning as well, who says she doesn't want to get too far ahead. Inflation still elevated.
But Williams saved the day, because these things all turned around instantly on Williams. There's nothing else. And I am saying that kind of opening based on a guy who is maybe, it is important, who spoke 2 other times this week, by the way, that you're basing that, if you're buying NVIDIA off that, you should look and see what NVIDIA does. It would be very helpful. That anecdotal thing really stung me.
Sorry.
It was just a...
I know, but you do.
It was a journalistic way.
Keep hearing about you and your experience with OpenAI. It's not indicative of anything.
Did you ever read the New York Times? They start with a little thing that's, it's like so-and-so in Alabama did this, and that's where you work it in. That's how I was taught journalism.
All
And
right.
then I taught journalism like that.
I'm aware.
By the way, guys, the price action is not happening in a vacuum. Page 1 of the Journal today is looking at the middle class yet again.
5
Being
years.
pinched by 5 years of inflation. Japan, Jim, is getting a lot of discussion. Yen,
Yes.
this is going to be on the cusp of 40-year lows at 160.
And where rates are there
And
now.
where rates and whether or not they intervene now.
Their situation is, they got to just, well, look, I'm not as worried about Japan, and I'm not as worried about inflation after listening to Doug McMillan and what they've done. More than any part of any government, they have kept a lid on prices, which is why that stock is not only not done, but probably goes up another 12 points.
We talked about like-for-like inflation going up quarter on quarter, not down.
But you look at their prices and you realize that no one can touch this other than Costco. And Costco's been, unfortunately, and Charitable Trust knows it, not going the right direction.
And otherwise, very negative day yesterday. Walmart was a standout. It
was a
maintained the gains that it had throughout.
Yes, and just accelerated. I think will continue. I also think the Gap turns out to be the winner in apparel. That was extraordinary. The Richard Dixon turnaround at Gap is extraordinary. This is Banana Republic was bad last month. It turned around. I mean, last quarter. The 7% in Gap, the flagship, is amazing. But it's the Old Navy +6, because that's what the thing. That is one of the most incredible turns. And I saw the Wag Bear saying, well, Athleta was down 11, but that's because they're cleaning up Athleta. This is an amazing stock, and it can go much higher.
Yeah, it's good. We're going to get a lot more specialty retailer next week. A&F, Dick's, Kohl's.
I think Dick's is good, Kohl's is neutral, and A&F is crapshoot.
We'll get to We'll get to some other movies as well. We'll talk about Bed Bath, get a little bit more into some media with Faber's help on this deadline for initial bids for WBD. Future's looking pretty good, trying to salvage what's been a tough week. Back in a minute. Week to date chart of the VIX kind of says a lot. Started around 19, got to 28 yesterday, almost to the highest since April 24th. Obviously back a little bit today on some soothing words from the Fed President Williams. We'll talk more about that. Get Kramer's Matt Dash and the opening bell on this Friday in just a minute.
right, it's Friday, everybody. Welcome back to Squawk on the Street. Let's get our last mad dash of the week. This is a name I can't remember ever having heard uttered on the mad dash.
And that's why I'm doing it. Okay, Jacob Solutions is an engineering company. It's rather remarkable because what does it do? Well, it builds everything. Data centers, it builds the drug companies when they want to reshore. It's the ultimate reshoring / construction company in our country, and it guided yesterday to a weaker 26 than people thought. This was I think, the proximate cause of a lot of the selling, other than away from Micron and Western Digital, and the idea that DRAM prices might be peaking. So when I looked at this, I said, oh my God, Bob Pagano, terrific guy. They lowered it. There's a bear downgrade today that is very prescient. And so people are saying, wait a second, if the premier builder of all the things that we're excited about guides badly for 26, what does it say for 2026?
Well, what does it say, Jim? And what are they? What is the reason?
Well, it's just the
because I can't imagine it actually has to do with the lack of building of data centers.
It was. I will tell you, unreasonable. I just thought it was like, okay, look, it could get weaker. I didn't think it was any more than that. They had no empirical evidence, but it scared people. Now I know that that's a tough word to use, but that's what I'm seeing around town. That scared people into thinking maybe the whole reshoring building is over. It's completely untrue, okay? Completely untrue. But yesterday was not the day to guide down in terms of next year average. It was just the wrong time, wrong place. That, and again, the idea that I told you that the most ridiculous thing was a Morgan Stanley piece on the super cycle. Name it, when you name something a super cycle, it is the end. Fracking sand supercycle, sure. Turns out there's a lot of sand next to the ocean, okay? Where do you think they get the best sand from?
I don't know.
Where does Corning get the best sand from?
You told me this before and I forgot.
Best sand in the world is the southern tier of New York.
Yeah.
That's why Corning's there. You told right. So you learn something.
I learn every day from you. Thank you. I do. All right, we got an opening bell about 5.5 minutes from now. Don't forget, you can catch us anytime and anywhere. Listen to, follow the Squawk on the Street Opening Bell podcast.
I'm here. I've got 3 minutes. I'm here.
Yeah, and rates and.
Let's see if we hold 648.92, Jimmy says. We're at 655. We got higher lows with a double bottom, yay. Back on top of the garbage box. Hello, I'm Washboardjim, the thinking strategist of the trading desk of the Sneaky Snake Strategy, where I've got a crouton in my mouth. I talk about chart patterns, moving averages, and being in the now. And yesterday, Nicole was probably the most beautifulest chick I ever met or watched. She was hot yesterday. But they told her to tame it down because I sent a message to her, told her how much I wanted to fall in love with her. Oh God, she didn't tone it down. Well, she did straighten her hair out. That kind of hurts. Nicole. Shame on you, girl. I'm not sure what to think. Oracle down to 205. Down another $4. Netflix at 105. Spy. Big old pop here at 6:30. Jimmy hasn't voted. The initial reaction to manufacturing service PMIs at, well, down and up. I voted. I'm the only one that voted for it. Woo! What time's that come out? 9:45 Eastern time. Well, that's a bunch of shit. Okay, today's the 21st. A lot of volume this morning. NVIDIA at 180, that is a support level for NVIDIA. And what do I have? I have 180. Right to the penny. Pretty much. We're at the 200 here. So this needs to hold to stay bullish. NVIDIA. I'm telling you. If not, we could see 170. SPX, we got a symmetrical flag it. There it is. We're at support. We're at the orb. Oh God, look how high them suckers are, man. Come on. This is unbelievable how expensive these are. The 660s of the SPY or the 6650s on the SPX. There's the knife. Okay, so far I'm winning, but it's not. I still got 10 more minutes. I'm watching the 660s on the SPY right now. Dog 29. We're at the VWAP with a symmetrical flag. And the 6650s are at 550. I think we come down, hit the 200 on the SPX. So I'll wait. While I'm waiting, I'll take off my shoes. There's 129 to 130, 43, 4. Oh, and 550 is $6 on the SPX. 630. I want to look at Mara. I think I'm going to go long in Mara. Open is popping at 670. Mr. popping a little bit. We got AMD at my support level at 203.82. Bouncing up a little bit. It did hit it this morning. Just under 200. NVIDIA, 177.71. We've got higher lows on Meta. We're back to 130 here on the SPY. At the VWAP, pay attention. $66.50s are at 530. We could hit the VWAP in the 200 on it. We got 6 more minutes until we get them numbers. $5.10. I'm watching the 66.50s here. We're at 118 on the SPY. Prepare ye in the name of the Lord. SPY at the VWAP. /ES at the VWAP. SPX, the 66.50s, and the SPY 660s at 120. We're at 138. Whoa, there we go. Price check. Woo! Now that was a smart move. Just in case you don't know who I am, I'm Washboardjim with a sneaky snake trading strategy where I talk about chart patterns, moving averages, and being out at 138. What do you think about that, Sheba? What do you think about that? You demand. And do you see the 66.50s from $5 all the way to $6.20? Oh yeah. Excellent. Okay, I'm going to do some cleaning up here. So that was a double bottom off the VWAP all the way to 620. I'm done. I'll see y'all later. I don't know how he does it. That man's a genius. We're back at 5. Prepare ye. We've got 2 more minutes till we get the numbers, and we're back at the VWAP, back at the VWAP, back at the VWAP. Yippee! We got a 1, 2, 3 bottom. Okay. We're going to get some answers here in 1 minute, or less than 1 minute. I'd like to see it come down some and then buy the dip. But we're at support. And 66.50s. Prepare ye. Come on. Warriors, come out and play. Warriors, come out and play. Okay, get ready. Here we come. We have a 1, 2, 3. We just broke resistance. Support. We have a head and shoulders. So somewhere in here, if it doesn't hold to 50, where I jump in now, there it is, right there, see it. Right there. SPX. SPX. $4. We're at 420. $5.20. Okay. $4.90. $5.10, $5.20, $5.40. $5.50. Okay, that's trade number 3. We went to the 200. What did you get out of it at the 200, Jim, may I ask? Hello? Yes, this is your daily reporter from the Chronicle Times. We were going to ask you, Jim, why did you sell it at $5.50? Well, basically, we have the 200 SMA right here, and you can tell we hit the 200 SMA here, and the EMA, 200 SMA and the EMA, and the 200 SMA and the EMA. And I wanted to get out while I was still in the heat of the moment, because it could have went up and broke and hit the 200 EMA, but that's the wicks. I'm chasing the bodies. So that's called a head and shoulders. Also, at the 200 SMA. Do you understand? Okay, in the kitchen, I have done my 3rd batch of coffee now, and I'm going to take a picture of it after my 3rd scientific test. I think I've got it down packed now. Along with that, we'll go a belch. Randy, did you get in it? We're back at the VWAP. Oh, really? Well, that ain't good. I can show you how to do that too. Craps table or the roulette. I could have better odds at the dog track even. Well, chicken train running all day, get it off. We're back at 540. I'm going to go turn the light on behind me. Prepare for trade number 4. Snake breakout, 3 white soldiers, double bottom, high or low. Three black crows, tweezer bottom to the 200 EMA. So far, it's looking okay, but the market. I don't understand this. Oh, that's the 1 hour. No wonder. On AMD. Dang, these things are 580 now from 470. Boom, to the orb. Jesus loves me. I'm all out. The 66 50s, that's no doubt. How's he do it? 2 contracts at 420. We got a double top on the orb. Out at 5.50 and $6.10. One, 2, 3, 4, 5. Sold it and sold it. And that's a triple top if you want to count the wick. It's a triple top if you want to count the body to the orb. I drank so much caffeine yesterday I couldn't hardly sleep. I just got to drinking that coffee. I loved it. It's a lot different when you don't have all that acidity in there. And I'm getting ready to have me a batch here after lunch. Uh-oh. You ready? We're at the 63. Now we got a Head and Shoulders. A kind of sloppy one, but I'm going to call it one. I don't care what you think. Well, I do care, because I love you all. If you all were women, I'd fall in love with you and date you. We've got a 2-headed snake. We got a, well, almost a 2-headed snake at $4.60. Oh shit. Okay. Oh God. do anything right. You bumbling idiot. After this, I'm going to clean my chart up. $4.60, the 66.50s. Am I pushing my luck? I think so. But we'll find out. I heard one girl had $23,000 on her EBT card. I want to hold this shoulder line. There, I get out. I don't want the cost average down today. This is it. Can't go any lower than this. Oh, shit. At the 63. Before I could even get back in it, it's back at 460. I mean, before I could add on. So we got a making of a Head and Shoulders, 66.71. $4.90. Yeah, I don't think I want to stay in this one too long here. 460. Well, I think I won the bet. Magnificent. I said down up. I haven't seen the score yet. I'm trying to be as honest as I can here. $3.50 off the 50 SMA. 3.50. Double bottom. Double bottom. Come on. I need 386. Oh. There's 410. I could sell them here. We're at a pivot point. $4.20. There it is. $4.50. Woo! Woo! Yeah, thank you. Who wants my autograph? Does anybody want my autograph? Magnificent. Jimmy called a double bottom here. Just say that you want me, shy-eye. Double bottom, baby. Hello? This is the CIA. We're looking for a James Howard. We have an invitation for you at the White House tonight to have dinner with Donald Trump's wife. Will you accept? I would love to. I have the biggest crush on her. Okay, we're coming down for a triple bottom now. I think this is to the point now where we're going to either hold or we're going to break out. Do you understand? Now, I sold my contracts. I'm going to clean this up. I'll be preparing for another trade here once I clean it up, because because I'm in the now or never mood. It's either going to be a put or a call. Do you understand? Randy, I'm 4 for 4. Rob's going in puts. Triple bottom, Rob. Or R. Raphael. Angel, did I ever tell you that I love you? I'm not on the list. I'm not on the Diddy list either. Triple bottom on the slash ES. Triple bottom on the slash ES. We got a true triple bottom now on the SPX. I think we're going to go up, but we're going to see. Still some negative sentiment in the market, probably for another week, but then a couple days into Thanksgiving, boom. I'm not on either one of those lists. This is it. I'm going calls. There's not much you can do about it. $3. 66.50s. Oh shit. There we go. Jimmy said do or die. They were at 350 there for a second. I feel a nap coming on today. Oh gosh, I don't want this. I'm going to give it a few more seconds. I thought I had a... Am I looking at the right one? Thought I had a double wick there. Oh, there we go. $65.45.29 has to hold. There's a gap up. Somebody about it at the ad. Ask. Remember, the Bulls got faked out yesterday. Could just sort of get out even here and make my coffee. Well, that was kind of uncalled for. Yep, that's it. Looks like the die is coming into play. Right back. I'm not out of it yet. We're at yesterday's low, 53.3405. Into close. Now, come on, let's have a little breakout. We've kind of just went sideways, most part. God darn, man, I should have got that dip. 220. That would have been a nice trade right there. There it is. That resistance again. I'll be right back. Okay. Oh. Boom! 310. 3 white soldiers. Where's my phone? There it is. Ha ha! Woo! Okay. $4. $4.50. Bingo. I'm out. What do you got to say about that one? Five for five. Five for five. Well, I'm Washboardjim. We have a special guest coming on today. Today's a scalper's day so far. 3 white soldiers. 3 white soldiers. Took it to the 200. I'm quite impressed. Yeah. I didn't check to see if the guys can hear me on YouTube. Good morning, Parge. Good morning, Bobby. On YouTube, where I'm Washboardjim, the trading strategist at the trading strategy desk, teaching the sneaky snake trading strategy, chart patterns, moving averages, and being in the now. I can keep doing this all day long if I want. We're now at 285, Randy. Oh. These are the 6650s. I'm going to do a paper trade right now because I'm getting ready to go make lunch. $2.50. And I've done my trading. I've hit my limit. I think I might have soup today. I was going to have a salad, but I might have that for dinner. Just have soup and toast. They're $2.50 to $2.70. These are 66.50 paper trade. At $2.50, we're at $3. Scalping, I'm telling you. Where's Randy? Did Randy say goodbye? They're now at $2. Where's that SPY at? What I have a. Did I say 648? $648.92 is what I got for the SPY. There's 195, 150, and I didn't jump in it on the SPX. The 6650s. Oh gosh, look at that. Missed that one. That's not bad trade there. 150 to $2, 215. SPX is back at support, which is now resistance. So that 66.45 is now a pivot point. Back to support at the orb. Back at the orb. Remember yesterday was a very, 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 very bad day in the market. And I think we're just consolidating on that bad day. I'll be right back. I'm gonna go start my lunch.
Morning Trade Live comes back.
Hey, investors, you know the market moves, and Schwab is here to help you move with it. So, whether you're buying, selling, holding, or planning, whether you're ETFing or 401k'ing, saving, spending, or even retiring, you can count on Schwab for market insights, live support, powerful trading platforms, and 400 branches. All at your service, all so you can invest your way. Sounds nice, right?
I'm out of stock.
And I'm Jenny Horn. This is Next Gen Investing, where we track the trends shaping tomorrow's market.
From tech to energy, crypto to consumer, we focus on what's driving investor sentiment right now.
Clear analysis and forward-looking market coverage every trading day.
This is a make or break level for this stock. That could certainly be a short to near-term catalyst.
Next Gen Investing, 1 p.m. Eastern.
Only on Schwab Network.
Morning Trade Live, Palo Alto Networks is down nearly 10% this week after earnings failed to impress Wall Street earlier this week. HSBC has now downgraded shares to reduce from hold while keeping its $157 price target. The analyst believes the stock's risk reward is turning negative with limited potential for upward revisions for fiscal 26 and 27. So it's down around 2% in trade right now at 181 and change. Let's go inside out on cybersecurity stocks as a whole with Paul Powers, CEO of Business. Thank you so much for joining me here. Talk us through what you've seen as far as some of the cybersecurity stories this week, because, I mean, Palo Alto Networks was an interesting one. The earnings weren't too bad, but the thing here that people seem to latch onto was this acquisition of Chronosphere, and that seemed to be the big story driving things. But then an interesting note out from HSBC. What are your thoughts?
So, Palo Alto Networks, I mean, they did beat their earnings expectations by just a little bit, but their strategy right now is to be this one-stop AI security platform. And so they're buying Chronosphere, which is for cloud monitoring and observability, and they're also planning on acquiring CyberArk for a substantially larger amount of money for identity and privileged account access data. And so the goal makes sense because they're trying to get the network identity and system information all together so AI can learn from that, and it's all combined in one platform. The risk, though, and I think this is what everyone's worried about, is that it's such an M&A heavy approach that there's a massive risk of integration. Are you able to stitch everything together in a way that's cohesive for the end user, and are you able to keep those margins in a really cohesive product? And we just don't know that yet.
But what if they do pull it off?
Well, then I think that they're positioned to do really well. I mean, I actually would be quite bullish on Palo Alto Networks if I could see into the future and knew just about knowing the numbers, just knowing how the integration was going to go and whether it would be cohesive or not. But again, it's not just about the cohesion of the product and the user experience, it's also whether or not they're able to keep all those margins the same, you know, without it looking like a Frankenstein product. And because there's multiple large acquisitions for a substantial part of their business, it just is a bit risky. But if it goes well, then I think you have this really appealing platform where you have multiple, you know, compelling products that have insights throughout your entire organization, and it's a relatively simple way to approach cybersecurity for a company. So I would be bullish if it actually goes well.
Okay. So as Palo Alto looks to be acquisitive to try to, I suppose, carve out an edge for itself as sort of a one-stop shop to address all the client needs, and that's certainly been a big focus for investors. You actually say if you could pick a winner across this space and this AI and security story for the next few years, you'd pick CrowdStrike. Talk us through that.
I'll put a small asterisk on that statement. That is, let's see the earnings report from them coming up. But assuming that that is not a shocker to the downside, then yeah, CrowdStrike I think is positioned really well. They've got pretty healthy recurring revenue, about 1.2 billion. They have about a little over 20% growth, and their cash flow is pretty strong. They've got a pretty strong core product with Falcon. It's an agent that lives on your devices, and a cloud platform that looks for attacks. And so what they're also adding is Charlotte AI. So think of it like a ChatGPT agent that your security team can just talk to in plain English, and it does all the heavy lifting. And I think that from a user experience perspective, that's quite compelling, but also it's a cleaner, more focused AI story. They're building an AI brain for your security team and selling more high margin modules they have on top of that for what I think is a pretty compelling go-to-market case.
Okay, Paul, a great look across the cybersecurity space as we unpack Palo Alto Networks earnings and look ahead, of course, to CrowdStrike as well. Thank you so much for joining me. Happy Friday. Paul Powell is CEO of FISNA. Really appreciate it. Let's trade it now with Alex Coffey, co-host of Next Gen Investing, and an example trade. What's the approach for Palo Alto Networks this morning, Alex?
Yeah, like many names, Sam, this is a stock that's sold off quite a bit.
What did you came off?
Froze. It's too early to be freezing on me.
Or at least for the next quarter, looking at the vertical in Palo Alto, looking to collect $1.50 credit. If you do collect that $1.50, your max gain would be $150. Your max loss potential at $3.50 if the stock goes below 170, with a break even of 173.5. So you got about $6 in cushion here, Sam, but really looking for stabilization in the cybersecurity player post earnings over the next month.
Okay, we're looking at Palo Alto Networks trading down 2% this morning in trade, or 181 and change right now. An example trade for us. Thank you so much for that, Alex Coffey. I'll check in with you a little bit later. And let's just quickly check in with the markets, see where things stand right now. About 90 minutes into trade, because we have seen some degree of stabilization. Things looking a little bit wobbly as far as the S&P 500 is concerned. We did dip into the red at one stage there. We've recouped some of those losses just now. So a little bit range bound, a little bit wobbly. We've got the NASDAQ underwater by about 0.2% as we're continuing to see some of the Max 7 members under pressure, namely NVIDIA today. A bit of rotation perhaps out of the 7 into the rest of the bunch, like we were talking about with healthcare stocks, which were on a tear today. But we are seeing some broad gains across the sectors, suffice to say, even though we do see technology somewhat under pressure this morning along with utilities. But all in all, we are seeing a little bit more of a broadening out of the green today. The Russell 2000 up at 1%, particularly off the back of Williams's comments around the potential for the December cut. That's going to do it for us here on Morning Trade Live for this Friday. Thanks for watching. I'm Sam Bartis. Download the Schwab Network app, available in the Apple App Store, and tune in 24/7 on schwabnetwork.com. We've got Trading 360 coming up next. Have a great rest of your trading day.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. The Platforms and Tools webcasts are designed to help you broaden your knowledge of platform features and resources available from Schwab. You'll learn tips and tricks to help navigate schwab.com, thinkorswim, and mobile-based platforms. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/coaching and start learning today.
Welcome to Schwab Network, where real-time market coverage meets expert strategy.
From the opening bell to the closing bell, we've got you covered.
Get inside the minds of pro traders.
My point is that they're getting a higher rate of change in sales based on their guidance, but not the same rate of change on EPS.
Follow the biggest headlines, live analysis, breaking news, and sharp trade ideas minute by minute.
With shows built for action, we break it all down in real time with speed, accuracy, and precision.
I think one of the most important things is you're making a play in a risk-defined way here going into earnings.
So that would be a further downside area to watch.
Smart insights, actionable data, veteran traders, and trusted financial journalists. Streaming live and on demand.
Schwab Network, streaming 24/7, any screen, anywhere, free. schwabnetwork.com.
2025 kept investors on their toes. Now, get ready for the road ahead. Join Schwab's panel of experts on December 11th for 2026 Market Outlook.
your guide to the forces shaping stocks, global markets, inflation, rates, and more. Hear from experts on where the markets may be headed, spot opportunities, and see what could drive your portfolio next year. Tune in on December 11th at 7 p.m. Eastern on Schwab Network. I'm Sam Barnes, live from the New York Stock Exchange. When the market moves, we're on it, getting the reaction, the strategy, and sentiment in real time. Stream Schwab Network at schwabnetwork.com.
We are 90 minutes into the trading day, and welcome to Trading 360. I'm Jenny Horn, filling in for Marley Caden today, and coming to you live from our Chicago headquarters. Now, here's what's coming up on today's show. In our 360 Spotlight, we will highlight growing demand for more cybersecurity in AI as the race to build out data centers continues. Later, we'll look at Intuit as shares rallied after the company beat earnings expectations. Kevin Green will bring us the news and an example trade in our Disruptor segment. And coming off the back of retail earnings, we will look at the state of the consumer in our 360 panel. Now let's take a quick look at markets as we're seeing some green shoots today, but overall seeing some pullback in the NASDAQ. NASDAQ is down about 0.3%. S&P is up modestly about 0.1%. The Dow is up about 0.5%. And the Russell, our leader of the moment and of the session today, up just shy of 1%. Now taking a look at some of these futures products, we are seeing pretty collective strength here in gold. Gold is higher about now 0.25%, as well as right now the US dollar also up modestly. Then we're seeing a drag a bit on some of the other futures products. Crude down today 2.3%, 10-year yield down about 1%, and Bitcoin slipping below that key 85,000 level, now down, just below actually even 83,000, pulling back today though 4%. But now to shift gears and look at some of these top moving stocks, really key on today. I'm joined by Alex Coffey, Senior Equities Contributor, and of course my co-host on Next Gen Investing. We are talking Ross Stores here. So Ross had a really strong report. I think that now adding some fuel to the narrative, really highlighting TJX as this bargain retailer where consumers are still very much seeking value.
No doubt about it. Really, really impressive quarter from Ross Stores as the stock continues to move higher, now up almost $10.50, which is about 6.5%, Jenny. Adjusted EPS $1.58, better than the $1.40 that was expected. Showed nice EPS growth year over year. Revenue at $5.6 billion also was better than expected on growth of about 10%. And the comp store sales, this is really the story, I would say, Jenny, showing this 7% jump in comp sales for the third quarter. That was way above the 3.3% consensus. This also highlighted a strong back-to-school season that carried through the quarter. Their operating margin was better than expected. So despite the fact that they're a lower cost, more value-oriented merchandiser, they do, of course, have 11.6 margin versus the 10.6 that was expected. They also guided for nice momentum into this holiday season, into their fourth quarter, with comp sales guided for a 3 to 4% increase in EPS projected between $1.77 and $1.85. As far as tariff-related costs, they're anticipated by Ross to be negligible in the fourth quarter after impacting the full-year results by an estimated 16 cents per share. So some of those really big fears that I think really surrounded a lot of these type of names early in the year around tariffs have subsided. There's a number now, there's some certainty around it, and there's some confidence going into this last quarter or last half of this quarter this year in the holiday season.
Okay, and obviously today with a new all-time high, we pulled back, I mean, modestly, but we're pretty much at those key levels now. So as far as the street's reaction, I mean, I've seen nothing but praise here, but walk us through somewhat of the analyst takeaways of this report.
Yeah, you're right. Maintained overweight at JP Morgan, raised the price target to $200. Evercore ISI, a lot of the same, except raising to $195. Telsey, they have a market performance, still have to raise to 175 on this. So one of the key parts of the commentary was just how excessively good the report was, around that 7% comp sales, saying even the most bullish of analysts didn't really get to that number. So really impressive quarter, and it looks to be continuing to execute at a high level going into the end.
SPY's at a double bottom.
Yeah, as consumers continue to spend, maybe more selective with some of those dollars, as they highlighted, and really resonating with
This, I think, is a major milestone here.
I think encouraging that you can see really the results that were even ahead of those even more bullish expectations. That's a clear win for retail. But appreciate it, Alex Coffey, my co-host of Next Gen Investing. But now to take a more macro read on these markets.
Now these are starting to get better priced up there, around 6,600.
Session. I'm now joined by Luke Lloyd, the president and CEO of Lloyd Financial Group. And so really curious your thoughts here, of course, Luke, on really yesterday. Yesterday was wild. I mean, I know that we blame NVIDIA, but there were several other factors that I think many believe contributed to the market's reversal. So really discuss really what we're seeing as far as this systematic selling by CTAs and this low liquidity. I mean, walk us through your thinking there.
So I think that yesterday was a lot of plays on the derivatives market, a lot of these market makers just selling into the pressure, and frankly, based upon the fact that the rate cut odds in December are now a 50-50 shot. I mean, basically a coin flip chance that we're going to get this rate cut in December. And it's crazy how that small, minute, just one thing can absolutely change kind of the trajectory of the market. But if you look back the past month, there's two reasons why essentially we had some issues coming into the market with selling pressure. And that's one, the government shutdown that got figured out, obviously, but all that liquidity that we spent 40 plus days trying to figure out that shutdown, that's billions and billions of dollars loss of liquidity in the system. That's a month and a half of back pay for all those workers and all those government jobs. That's liquidity not in the system. So that was issue number one. Then if you take a look at the stock market, the S&P 500, you take a look at when Jerome Powell and the Federal Reserve members started to become a little bit more hawkish about keeping rates a little bit higher, not so dovish, talking about the chances of rate cut in December not being guaranteed. That's when the stock market started selling off. So I think yesterday was just a reaction to the derivatives market that we might not actually get this rate cut in December. And this is a revaluation of the tech market, and all that money's flown into these different other areas like we're seeing today, with the RSP index doing pretty well, with small caps doing well. I think that's what you're seeing today, that rotation. I think we're going to see that rotation continue into year end.
Okay, you did mention, of course, Fed speaker sounding more hawkish, yet, of course, these rate cuts odds rising. So how critical really is some further rate compression? And right now, how do you sort of justify that disconnect that we're seeing from some of the Fed speak versus the expectations for rate cuts?
Yeah, so we pay attention to three things here at LFG. It's inflation, liquidity, and growth as a whole. You can look at GDP, you can look at growth and other economic data, but the three main things are looking actually still pretty well. Liquidity was looking really weak there for a few weeks because of the government shutdown, because of the chances of rate cuts going down. That liquidity came back in the market a little bit. So, I think as we head into, again, December, this rate cut is going to be something we have to pay attention to, because it is going to be a deciding factor, I think, as we head into 2026. Because it's not just about this rate cut. It's about next year. It's about 2026. What are the expectations?
Boom, just like that.
I look back about a year ago, I think November, probably this time last year, I think there were like 3 or 4 maybe rate cuts expected as we head into 2025. We only got a few, right? Or we might only get a few. So my point is the expectations are what really matters as we head into 2026. And right now, the markets want liquidity. The market wants more government spending. The markets want lower interest rates. They want to keep this tech and AI bubble almost alive. And the fact is, I hate talking about bubbles because are we in a bubble? Are we not in a bubble? What is a bubble? It doesn't matter until the bubble bursts. So far, we're seeing a little bit taken out the past few days, but I think this is mainly temporary. So we actually sold Ulta.
Beautiful.
One of our base core positions that actually held up pretty well over the past few months and have done well this year. We sold Ulta this morning to prepare to buy some of those more techie names last week into the dip, which kind of sold off a little bit even more this week. So
590 to 7.
We bought OWL,
760.
OWL. It's like an asset management firm, private equity, credit lines, more of a kind of a beta-ish name that we added to our portfolio. Then we also added Take-Two Interactive last week, which is more of a beta name in the tech sector with GTA 6 release, more around the gaming sector. So we're looking to add beta into this drop because we weren't very beta intensive into this drop. I'm also expecting Bitcoin probably to do somewhat well heading into probably December, as maybe recovering close to back to $100,000 because of the liquidity spigot being turned back on, because of quantitative tightening ending in December 1st, and because of maybe some more optimism as we head into the holiday shopping season.
Okay, that's really interesting that you are right now buying into tech, and I think that you're not alone there, but a lot of the criticism right now I've seen on this market is that tech isn't holding up, and I mean, like, evidenced by yesterday, of course. So, I mean, is there anything else in tech that you're liking right now? Because I think it's a really interesting contrarian a bit stance to say, hey, we're going, a bit more long even on some of these tech names that we were not exposed to before.
I want to clarify here and make sure that we're on the same page here. I am not very bullish on Mag 7. I'm not bullish. Google's and Microsoft, a very, very small weighting in Microsoft, like 5% less than the S&P cap weighting. We have like a 1% exposure to Microsoft. I think we have about 3.5% to Google. Those are the only two big tech names that we own at LFG. So I'm not bullish on Mag 7. I'm not bullish on NVIDIA. I'm not bullish on Palantir. I'm not bullish on a lot of semiconductor names. I'm bullish in other areas of tech that basically have not been as loved, or might be actually an ancillary area where that big tech money, as it comes out, is going to flow into. So Bitcoin and cryptocurrency is one of the areas that I think you have to maintain. So Circle and Bullish have been two of our crypto plays. They've been hit really hard the past few weeks and past month. I think that's still a good area. We've been adding to that positions for a lot of our clients are dollar cost averaging in. So Bullish and Circle still remain a spot to be if you don't want to play Bitcoin directly, you want to play the ancillary areas. But also you can look at a stock we've owned that actually is still way up from our cost basis, and that's an AST Space Mobile, ASTS. I mean, it's a $20 billion company that doesn't have much revenue, but they are revolutionizing cellular networks with satellites for AT&T, Verizon, and Vodafone. All these different kind of contracts are landing. But this stock's, I think, trading around $50 a share now. We bought it below $40, so we're still 30% above our cost basis. We were about 150% up on our cost basis, but that area with that sell-off, I think, is still a good area to add to, with beta, I think, coming back into the market probably as we head into December. I still think we have quite a week of volatility. I don't like catching falling lives, so I'm not saying deploy all your cash right now, but I think December is going to be a little bit more of a stabilizing bullish month. January is where I start getting a little concerned again because of tax loss harvesting, or not tax loss harvesting, tax selling into taxes for 2026 in January. Obviously, tax loss harvesting is here in December, but there's not much tax loss harvesting to do with the market gains still so far this year.
Okay, Luke, I've got to get your quick thoughts before we go, because you kind of just blew my mind, frankly, that you are not bullish on the Mag 7. This is a take I have not really heard addressed that explicitly, so I do respect that. But really quickly, could you tell us what really is driving some of that, not pessimism, but maybe just not optimism on the Mag 7? I mean, is it just valuation concerns?
It's mainly valuation concerns. I mean, there is going to be a reversion to the mean, especially when you have the three things we pay attention to: inflation, growth, and liquidity. When you start seeing some of those very weak, which we haven't, but I think that's going to come. Liquidity was a little bit weak, but I'm saying when it comes to growth concerns, when it comes to maybe re-emerging inflation concerns, I'm not too worried about inflation concerns. All of those, especially the rate cuts, I think rate cuts are going to impact big tech the most if we don't get rate cuts in December. So I'm staying away a little bit from that side. I think the most bullish side from a risk management standpoint is playing the other area. I mean, there's so many other areas, financials, industrials, materials, all these different areas that are basically well below historical PE ratios. So I'm looking at stocks like Dow. I mean, it's trading at $21.50, down 50% this year. We've been adding to DOW as well. I mean, these are stocks, as we kind of turn on the manufacturing spigot here. There's all these different other ancillary areas that just money needs to flow into. So I think that mean reversion to valuation, the mean reversion of big tech coming down, and the mean reversion of the equal weight S&P 500, the other 493, that mean reversion up, I think that money flow is going to benefit all those other areas. So again, the stock market's all supply and demand at the end of the day. So if the demand's been for big tech, I think supply is kind of constrained. That supply spigot's going to open up. Big tech's going to sell off, and we could see a market where the Nasdaq actually sells off, but there's still a lot of money being made in other areas. I think that's kind of what we're heading into. Today is a very good example of that.
Okay, what a great, I think, take on what I
Back
just
to the
talked
orb.
so much about the Max 7 this week, where I really appreciate that more contrarian stance of, like, you know, flows need to go. And other places, there's depth in this market outside of the Max 7. So really great points, and so appreciate that commentary on this Friday. Luke Lloyd, President and CEO of Lloyd Financial Group. Thank you so much for being here this morning. Now, plenty of still come on Trading 360. Coming up next, it's time for the big three. 3 stocks, 3 charts, and 3 trades. Rick Ducat will go through the technicals, and Tim Bowen takes us through the technicals. Coming up next.
From the most iconic trading floor in the world, this is Opening Bell with Nicole Petalides, live on the floor of the New York Stock Exchange. The countdown, the setups, the stories that make markets move. Minute-by-minute breakdown of the biggest headlines, earnings, and global movers. Just the trades that matter. As the bell hits and the markets react in real time, Opening Bell, live at the NYSE, right when it counts.
Believe me, when it comes to investing, you'll love Carl's Way. Take a left here, please.
But there's a...
Carl's Way is the best way.
Is it? At Schwab, how I choose to invest is up to me.
Exactly. I can invest and trade on my own.
Yes, and I let them manage some investments for me, too.
Let's move on, shall we?
No can do.
I'll get out here.
Where are you going?
Schwab.
Schwab, a modern approach to wealth management.
Welcome back to Trading 360. I'm Jenny Horn, and it's now time for the big 3. 3 stocks, 3 charts, and 3 trades. Rick Ducat will take us through the charts, and here to take us through the trades is Tim Bowen of StocksToTrade.com. So great to be with you both, of course. And Tim, let's start with you. Really want to get your thoughts here on the week that was, and just, you know, your overall thoughts on the markets as they stand right now.
Well, first off, I hope the cap isn't too bright, but my office is on 120 acres of hunting land. It's the middle of hunting season, so you got to stay sharp out there. And plus, I'm headed to the tree stand as soon as we get done with this. So stay safe out there, my friends, especially when the guns are firing. So that being said, market-wise, you know, I look at, obviously the market moves with NVIDIA, and got the announcement we expected out of NVIDIA. You know, I had a big feeling that they would crush
920.
earnings. But, you know, we had that big gap up and then sell off in the markets and everything else pretty much following that, the 800-pound gorilla. Now, when people ask about how to react to that, I just, you know, I work with literally thousands of retail traders. And one thing that I struggle with every day is there are so many retail traders that are just using way too much margin out there. And I think that move on NVIDIA and a lot of these stocks, people saw that gap up, they panic bought in with margin. I mean, we're seeing that with Bitcoin. I mean, all these forced liquidations. I mean, people need to learn how to trade before they use margin. People bought that big gap up on NVIDIA. When it didn't continue the next day, they panic sold, panic buy, panic sell. You know, there's all the worst way to trade, but it's the reality of what we have right now. So I continue to stay very bullish. AI names, Mag 7, particularly AI. But, I mean, in the short term, you're going to have these very volatile days. But if you do it the right way and you trade technical analysis like I use and like Rick uses, there's opportunities there. A lot of these stocks pull right back to key levels and bounce off them. They butt into resistance levels and pull back. So if you know the technicals, like Rick breaks down, there's tons of opportunity out there. Now, if you're a long-term holder, it can get pretty scary day to day for sure.
I mean, so I think that speaks perfectly to our first name here today, which is Rigetti Computing, which has still been able to hold on to a 30% run this year, but has now contracted almost 50% so far this month. So speaking exactly to the conditions that you just outlined, which is you do see some of these volatile periods. So how do you think through a name like this when, of course, you have been on a pretty nice run? There's a lot of enthusiasm tied to Rigetti, but we've pulled back substantially now on a month-to-date basis.
Yeah, and so this was one of those ideas that I shared a couple, going back, it was on Trading 360 when it basically broke that 20 level. I mean, you can see it on that chart right there. Broke out. I was like, hey, I love this as a quantum computing play. Went from 20 to almost 60. So it was a great run. But
well, that's good stuff.
To this day, they're asking me about it. Like, hey, do I buy now? And when
you got a knife here.
50s, I was like, hey, you missed it. But I think, and great chart, I love that. We pulled right back to that area from earlier in the year. Now the key is going to be if it can hold that level. I think there's a very good, I don't think it'll go all the way back to 60, but I think this creates a great trading opportunity.
We just had a big red candle.
Hold that previous breakout level from the spring, which I think, with resistance tends to become support. And as of today, at 11:19 a.m., those low 20s are support.
Okay, and a good trading opportunity. Perhaps if you're not using too much margin, I could not second and third that enough. But now as we do look at the charts here, Rick, I mean, walk us through the momentous run up and then unfortunately the pretty substantial pullback we've seen here.
The market giveth and the market taketh away. It's a common situation here, perhaps not to this extreme here, but big swings can happen. You got to be prepared for them. The $20 level is what stood out to me first of all as well, because that was around where we saw our best close earlier in this yearly period of our chart. We had a significant gap down then. From there, though, this light green line here, that's what really stood out to me, because we had a situation where we topped out around that point twice at that 14 level, then one more time, then we bottomed out there 2 more times. So the old resistance became supportive, as speaking to what Tim was describing there. So now we're approaching a similar point once again, that 20 level. Will the old resistance become supportive in this case here? That would be a key level to watch out for. That's also kind of where we had our extreme breakout point when this huge run up began. So to look the other way, though, some of the significant upside horizontal levels that stand out right here around 28, 29 or so, we had a series of lows. That's also about where we had our most recent gap down. And then 34, high points, low points, and then breakdown point, and we failed to retake it then. So those would be some other areas that traders may have their eye on. When we look at our moving averages, we can see that we have our 21-day and 63-day exponential moving averages.
Unbelievable.
In yellow and orange respectively, that are very
660 to 1030 just now.
Sloping trend line.
These 2 candles.
Getting at those highs. So that level 3060 or so
on that red candle.
That could be a breakout point here if we do start
to a great day.
See a rise in our
Randy
here, then the next stop could be 34. We can see that RSI is also kind of modestly improving here. We broke through our downward sloping trend line, but we haven't really made any gains from this point here. We are staying above that oversold area. Perhaps improving is not really the best word. Maybe not worsening as much as you might fear, I guess, from this. So if we were to dip below that 30 level, that would be another bearish development. Finally, if we were to look at our volume profile,
we just hit the 200.
Significant volume area is all the way down here near $12 or so. Things really start to pick up once you get around that 14 level, like we mentioned. But 20, that also stands out here. Relatively speaking, that's where we start seeing volume, stand out there. It also lines up with our -1 standard deviation channel and our purple 252-day exponential moving average, our long-term moving average. So that stands out as a supportive area to the downside.
Okay, and now let's shift gears into Walmart. Now, Walmart has seen a pretty nice uptrend on the year, and I mean, expecting to close out this week up over 3%, which does feel like a win as far as these retail earnings moves have been concerned. So, Tim, really walk us through your thinking over the long-term moving averages we're seeing, and I mean the overall long-term, pretty sustained uptrend we've seen in Walmart now.
Yeah, so Walmart is, most weeks I like to bring kind of, I'm here every week, so most times I like to bring, more speculative ideas that can kind of be, big spikers before I come back on the following Friday. But I know there's a lot of fear out there, and listen, people still want to be in the markets and, might be shying away from a Rigetti, obviously, and there's nothing wrong with that. But, this is Walmart. I was on with Nicole a couple months ago. We kind of broke this one down. It was at about 100.
Man, that's good.
It's up a little bit.
Okay, I had lunch.
Along. But I do really
Then I get
like
back
the
to trading.
chart, and it's kind of my
The
favorite.
660s took them to 11 right there.
As I mentioned in the opening statement, I'm still very bullish overall. But hey, I could be wrong.
Who's this guy?
The market's always right.
Getting ready to go deer hunting?
Opinions aren't always right. So I just like this as that number one kind of flight to safety, and they're also kind of an AI play. I kind of really.
He's not addressed appropriate at all.
So, if you're looking for that kind of safer play and you want to avoid some of the more.
I didn't know they allowed crackheads on here.
Walmart is definitely up there as my favorite, especially if I'm wrong and things get shakier in markets and the economy.
Yeah, and I think that was definitely felt by the market in reaction to their earnings. We saw a pretty nice lift and a lot of positive commentary. I mean, especially even from their CEO, where we're seeing just further strength ahead, and I could not agree more.
Jenny Horning.
Channel presence they're really honing in on. So now let's look at the chart here.
Horning in on.
Hasn't managed to get to the upside. We've had some areas of pullback, but it feels a little bit like an EKG to the upside, if you will.
Yes, I see kind of zigzagging back and forth here.
Yes.
Mostly our price action is contained between our two white trend lines here. You started by drawing one off of our low point here, connecting subsequent lows more or less. You're really looking for just the general trajectory here. If you were to duplicate it though, it matches up fairly well with many of the highs we experienced here. So that's one tactic you can include in your technical outlook here to give a potential idea of where to look for resistance. And indeed, that is about where we topped out today so far and yesterday, right around that 108 level here. But to revisit the concept we talked about with our last chart, the level right here near about 100, just around that 100 level, a high point multiple times here. Then it became a low point after we had our breakout. We did collapse below it eventually, but then it was lows many more times here. So this was once again that idea of old resistance becoming new support, one of these key kind of pivot levels that you see in a stock here. If we did not have this earnings event, I would have said that this looks like quite an interesting head and shoulders type setup here if you're interested in that kind of pattern activity with our neckline down here at that 100 level here. But as earnings can be such a major potential catalyst, it kind of throws that into the wind. You can see that this bearish pattern did not play out at all. We broke through our trend line to the upside and are still hanging on to a large degree of those gains. So now, when we look at our moving averages, we have our two moving averages, 21 and 63-day EMAs, again, near 102 and 103 or so, so that gives us a confluence point to watch to the downside. We can see that RSI has also had a matching breakout with price. We are in the bullish territory once again above the 50 midline here, so some improvement by that measure as well. When we do look at volume profile, our biggest node that's anywhere close to current prices lines up with the moving average confluence that I just was
moving average.
You can see right around 103 again. That also happens to be our teal line there, our linear regression line, our line of best fit. That stands out as a supportive area to the downside. The upside point, 109, 110, those old highs that we saw, that's the mark to beat.
Okay, and last but not least here, we're diving into IBM, which has become a really interesting player in all things AI, frankly. I would have never guessed this name would be as interesting this year as it has been, but we also have pulled back about 9% from those highs, so pretty substantial repricing we've seen with the overall tech weakness. So Tim, how do you think through some of the recent pressure? Do you see this as an opportunity?
So, IBM is kind of, I don't want to call it like a sympathy idea to Google. Back on Halloween, was on Trading 360, shared Google, really loved it for, both AI and quantum. I know quantum kind of gets a lot of love and then seems to get a lot of hate. I'm a big believer in it, and IBM's a leader in that. So was very happy with that call back on Halloween, even though Rick and Marley was here that day. I did forget my Halloween costume, but
you're wearing one today.
Still pushing today. Warren Buffett bought in a few weeks later, But IBM is one of those names that
He says he forgot his Halloween costume. I said, what you talking about?
Really, the research and development of
He looks like he's ready to go
I always think it's like,
trick-or-treating.
you know, as a child of
At least he's
the
color
70s,
coordinated.
80s, it was all everyone talked about IBM, but I just kind of look at it as a forgotten name, and I think there's a good trade.
He's making it known I go hunt
because
deer.
I think
I'm a turkey hunter.
Can't predict the future, but I think as
We used to
head
go
into
rabbit
next
hunting on
year,
Thanksgiving.
They're going to be making a lot of announcements, kind of like Google did with their Willow quantum computer, etc. So, and then also, you know, just a strong chart that's kind of held up in the chaos.
660 strikes on the calls on the SPY.
Compare it to of course Alphabet, which not to say
And the
it's more, maybe
SPX
the
is
old-timer version
the
of it. I think they've done a great
6600s.
job with some of these earnings events where they've
You see a
been able to
correlation there?
crush some of that narrative around what I would have said was a stale tech company.
There's 125,000 contracts on the 660s, which is about double everything else, all but the 656s.
The recent, I mean, uptrend in this year's
That'd be a good
gains
one
are
to
still
get
very much
too.
intact.
Yeah, kind of the
Or
sleeper
got.
hit of the tech
Now the
sector, as you
6600s
guys
are
said
at
here, strong
1340.
performance. We did have
Called
this
it
area
660.
288 to 295. That's where we found a little bit of a range previously in our chart. Once again, you can see that the support became resistance going forward. Shortly after that point, we had our breakdown here. Then the 265 level came into prominence. Now, though, we have broken above that level here. We topped out near 315. That was about where we had our best close, despite intraday highs going beyond that point. But now we are retaking 295 after bouncing off 288. So our old range came back into prominence once again as a notable supportive area. So we can see, though, RSI is still not really making a convincing breakout just yet. We are still below that 50 midline here, just a hair, though. So if price continues to show some strength and RSI also gets a matching breakout, that would be an interesting development for the bulls. So finally, when we look at volume profile, we can see we have our volume node right here, our supportive area coming in right around 285. So that's a particularly heavy trading area. Our moving averages come in pretty close to that point as well. Volume picks up again when you get here near the 305 level or so.
Yeah, and I think that three really interesting names to look at, especially as we recap this week. So appreciate it to Rick Ducat as well as Tim Bowen, StocksToTrade.com. And also, I do appreciate the orange hat. Stay safe out there. I'm envious that you are near nature, as we are in Chicago, not very far from nature here. But coming up next, we are going to spotlight cybersecurity and the growing need for privacy as the AI race continues.
Man. Sometimes, you know, you could have done better. Same goes for where you invest. Level up and invest smarter with Schwab.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. The Platforms and Tools webcasts are designed to help you broaden your knowledge of platform features and resources available from Schwab. You'll learn tips and tricks to help navigate Schwab.com, Thinkorswim, and mobile-based platforms. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/coaching and start learning today.
Welcome back to Trading 360. I'm Jenny Horn, live at our Chicago headquarters, but it's now time to spotlight cybersecurity and AI. And joining us is Ian Tian, CEO and co-founder of Mattermost. So Ian, thank you so much for being with us on this Friday.
SPY just hit the top of the orb.
Here. How are you
We're at
starting to see
1410.
enterprises redefining the digital transformation and their overall priorities?
So there's a lot of excitement in enterprise around AI and different investments. The IT market in general is growing very fast, 9.8% projected for next year. Next year will be the first time IT spend globally is exceeding $6 trillion. What enterprises need now is to see the ROI from those AI investments. It's a little mixed. And the key bottleneck has been cyber, has been trust and safety. There's been a lack of guardrails for these AI projects, and there's a lot of risk around things like knowledge exfiltration. And there's a new wave of technology that will need to come in order to get to unlock the full potential of these AI investments. Governments and enterprises are the largest purchasers of AI, and what they're looking for is control. They're looking for control in a connected world. And what you see is a trend of, before everyone was going to global infrastructure, now governments and enterprises are thinking about sovereign infrastructure, thinking about, I'm going to buy my own GPUs, I'm going to have my own data center, I'm going to have my own sovereign AI system. And why that is so important in today is that they see AI as a competitive advantage, and they want to own that competitive advantage. They don't want any data flowing out that they don't control. They want these AI models enriched for them, for their purposes. They don't want it off the shelf. They want it to be really customized because it's so important, and because the market hasn't yet been able to deliver those trust and safety guarantees around AI, things are moving a little slower than they need to. Now, what you see is a number of cyber companies that are innovating, they're doing acquisitions, they're doing core research in the trust and safety mechanisms for this new AI layer, and I think that is going to create a transformation in the cyber industry along with the AI productivity.
Okay, so as far as some of these individual companies, it has been, I couldn't agree more, a bit underappreciated, I think, the cost to obviously, see further growth, because like we had Palo Alto Networks, for example, coming out with acquisitions. Street didn't like that yesterday, but as far as some of your favorite picks in this space, what right now is resonating? What do you want?
Horrible day.
Maybe short to long term.
So I think that there are going to be more acquisitions. They're going to be capital intensive, and the street might not like them in the short term, but I think they'll pay off in the future. So one example is Zscaler with Red Canary, thinking about on-premise security and trust.
Didn't you hear what I said yesterday?
To sovereign AI, enterprises and governments buying their own GPUs, that's going to be a differentiating capability for the leading cyber companies. So it is going to take CapEx spend. It is going to take a minute to see those returns, but what you're really doing is you're cementing yourself that long-term trend. So it's Zscaler, I think, is someone to watch because their investments is doing very well. Their stock continues to grow, even though we've got a little bit of a sort of cooling off period right now. But can they turn that success?
We just hit the top of the orb.
And their portfolio across different cyber offerings and extend that, whether with acquisitions or with native R&D for that new AI age. So I think CrowdStrike is in a great position to consolidate, to offer multiple products to enterprises, to be a multi-pronged solution. Can they add AI to their portfolio? I think that is the upside story on CrowdStrike. And the last one is thinking about Snowflake. Now, Snowflake is a great indicator of consumption-based signals about AI workloads and AI use cases. And they actually have made very unique inroads into sovereign data integration capabilities. So they're playing the game. They're saying, okay, if you want to own your own data, if you want to put it in the cloud, in a public cloud versus your own private cloud, it can do both. And I think that's showing up in their results. So I think those are three to really watch, this earnings seasons and in future.
And I think really great takeaways here, especially coming off of, I discussed it at Palo Alto at length yesterday, so I appreciate hearing some other names that are coming into the fold that are really going to be, I think, the dominant as far as enterprise spend. So we appreciate it. Ian Tian, CEO and co-founder of Mattermost. Now coming up next, the disruptors. We'll be looking at Intuit shares rallying after earnings. We'll break down those numbers and look at an example trade coming up next. Stay connected to the markets with Schwab Network.
Tune in 24 hours a day, 7 days a week on SchwabNetwork.com
and on all your favorite streaming services. Schwab Network.
Available anytime, anywhere, on any device for free.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Do you like using charts when analyzing your stocks? Our technical analysis webcast series breaks down different charting techniques like trend analysis, price patterns, moving averages, oscillators, and much more. Best of all, you can ask questions directly to an education coach. It's interactive learning at its finest. Tune in live or on demand. Head over to schwab.com/coaching and start learning today.
Yippee-yi! Yippee-yi!
Welcome back to Trading 360. I'm Jenny Horn here in our Chicago headquarters. Let's head out to the New York Stock Exchange, though, now for a check-in on the market. And welcome in, of course, Nicole Petalides, the host of Opening Bell and The Watch List. We are 2 hours into the trading day today. What's really caught your eye so far, Nicole?
I think the fact that you didn't extend the losses of yesterday was a nice sign. The fact that we had some up arrows this morning. We had extremely heavy volume, so there was conviction to the downside. It was the most volume we'd seen since Liberation Day. It was also the most selling we had seen since Liberation Day back in April. NVIDIA had a $16 swing. That was very notable. It was at 196 at the high and closed at 180 bucks. So it really shows you what a wild day yesterday really was. And you lost well over, I think it was $2.5 trillion in market cap yesterday, value, I should say. But today, getting some of that back. And a lot of that is because you had NVIDIA, which brought some optimism. The rate cut story is back. That was put on the back burner, and people thought there wasn't going to be a rate cut. Now you had Williams out and saying there's room to cut in the near term. You have private equity under pressure, and that also certainly has got to be on the minds of the Federal Open Market Committee. I know they're not looking at that, but they have to see that private equity is sort of faltering a bit. KKR, for example, is down 17% in 3 months. SoftBank tanked 10% because of its exposure to OpenAI. So there is some volatility. But for the most part, most of the gaps are still optimistic. And hey, I like seeing Eli Lilly hitting $1 trillion today. I thought that was a cool stat too.
Yeah, that is a great stat. And also, as you were speaking, I noticed that we've turned around a bit. Now we are firmly in the green in all 4 of our major averages, which is amazing because we're not really seeing the same strength in the bulk of our Mag 7. So just an abnormal day right now for the NASDAQ specifically. But now to focus on retail. Retail's been the dominant earnings force this week. Gap really closing out a really strong week on a bright spot. So what really stuck out to you of that earnings?
Well, I think the Gap story, just the story itself, and the fact that they've had a 7th consecutive quarter of positive comps, that's good news, right? You've had a new CEO who came in and has been turning around this company. The other big
11:30 Eastern Time.
Bucking the trend of what we've heard from some of the other consumer stores like Target, TJX, Bath and Body,
I heard a screech.
Home Depot, that talked about a cautious consumer. The Gap didn't really talk that much
Sure, I
about
heard
that.
it.
In fact, they talked about the strength of 3 of their 4 stores.
And a phone call.
Down 11%. But the strength of the namesake Gap, Banana Republic,
Hello?
and Old Navy helped to bring those numbers up to have a beat. And not only that,
Hey, this is Ellie with Smart Alarms. How are you today?
I'm all right. But you sure you got the right number?
Raising their guidance, feeling confident. They talked about Old Navy.
So I'm calling because we're offering a new state-of-the-art wireless alarm system with a free doorbell camera, and I just need to confirm, are you the homeowner?
I own about 20 homes.
Republic more premium and more for the modern Explorer. I'd like to go be a modern Explorer. It sounds exciting.
If we gave you a state-of-the-art wireless home security and automation system with no upfront cost, I'm sure you'd use that, right?
If it didn't cost me nothing.
But they're going to be choiceful.
Absolutely, and I think continuing
Well,
to
the
reiterate
equipment,
that
installation,
we're
and
spending, we're
activation are
just
all
trying to
free.
seek value at
The
the
only
moment, and
thing
I would
that you'd have
definitely
to
choose
keep
the
up with is
Explorer
the
option over
monthly
the
monitoring
low-res Gene
fee,
option.
and
That
for
is
that I
just
do have
wild,
my
but
manager
still
standing
very
right
much
by who
appreciate
can
it, and
customize the
having
best
ability to
package
stay as
according to your
almost
affordability,
9%
okay?
here in real
Can you
time.
have her call me about midnight
It's
when
now
I get
time
off
for
work?
The Disruptors, and Kevin Green, senior markets correspondent, is here with us for today as we discuss into it.
Hey, honey, are you there?
Topped earnings
You
estimates,
bitch.
issued strong guidance. Really, Kevin, what are your thoughts initially on this report?
Yeah, we're seeing the shares higher, about 5% so far in the session here, and it was actually a pretty decent report. I mean, when you looked at the earnings announcement and the reaction right after, it was a little bit mixed, but once you
How
started
dare
to hear
you.
the conference call and some of the commentary from the CEO...
I can't keep women on the phone. I don't know what the problem is with me.
For this name, the company
I try my best.
revenue at around $3.89 billion, about 18%.
That had her blur so she's eating out of my hands.
The share came in at $3.34, Q is equal to $3.09. They are seeing an uptick when it comes to the adoption rates for
All I had to do was tell her that I'm worth $20 million, and she would have went for it.
Mentioned that customers are actually adopting the automated bookkeeping capabilities as well.
Come on, girl.
They also inked a deal with OpenAI.
Call me back.
Around $100 million, but they're going to be able to
I
have
just heard another screech.
access to OpenAI's APIs and AI features, and they're going to be able to integrate that within their platforms as well. So they are seeing some strong growth, good year-over-year comps. If you're kind of looking at top line, bottom line growth, margins are holding up here, and they're one of the other companies. I mean, I would say ServiceNow is probably another one that really has taken artificial intelligence, put it into their platforms, and then seeing an immediate result. A lot of software companies really cannot say that for right now. So once again, you are seeing the shares a little bit higher here today. And let's see if it's going to be able to maintain these gains.
Yeah, the monetization of some of the AI spend has been definitely criticized. So seeing it actually seemingly work very well for Intuit, at least for this quarter. But take us through your thoughts on an example trade, trading the name that was just now up over 5% on the session.
Yeah, so this is actually a counter trend type of trade here, just looking for a pullback for next week. This is actually a November 28th, 665, 655 put spread. Buying the 665, selling the 655 here. Doing this for a debit of $3.75. So this is risk defined. The max loss on this trade, $375, with a break-even point of $661.25, with a max profit potential up to $625. That's if the stock is below that $655 level at the time of expiration. So once again, looking for a little bit of a pullback, maybe a rotation within the market, selling into it, getting into some of the Mag 7 names that they have been able to sell off. That would make this trade profitable if it goes in the right direction here, Jenny. But once again, also risk defined. So if it goes in the other direction, if a market's available, a trader is going to be able to manage the trade accordingly.
Yeah, and obviously looking at things with a bit of duration on the back of this example trade, so we have a bit of time. But so appreciate it for all of that breakdown. Kevin Green, Senior Markets Correspondent for the network. Now coming up next, it's time for our 360 round as we look at the consumer ahead of what will be a very critical and highly watched holiday shopping season. Trading 360 will be right back.
Trading at Schwab is powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization, and track market trends with up-to-the-minute news and insights. Trade brilliantly with Schwab.
I'm Alex Coffey.
And I'm Jenny Horn. This is Next Gen Investing.
Okay, we're going to come back and retest the orb.
From tech to energy, crypto to consumer, we focus on what's driving investor sentiment right
Jenny
now.
Horny.
Clear analysis and forward-looking market coverage every trading day.
She's standing in for Marley.
Level for this stock. And that could certainly be a short to near-term catalyst.
Next Gen Investing, 1 p.m. Eastern.
Only on Schwab Network.
Hello, my name's Jenny Horny. I'm standing in for Marley.
I have a question for you.
Sure.
Dad, how come Grandpa doesn't sleep with me anymore?
I had an account with Schwab before there were branches in the area.
Well, I do,
We started
honey.
with nothing.
Oh, that wink.
And
You just...
after he passed away.
Oh, look at
the
him.
torch has been passed
This is
to me.
disgusting.
And my advisor, Jennifer, she was with me with the journey, helping with the estate distribution.
I wish it-
grandchildren, planning for their college.
They just showed a nude of that old man.
Someday it'll be their turn.
This is
Disgusting.
Fast Market, built for traders who want more than just headlines.
We walk
Dad,
you through trade ideas,
how come Grandpa doesn't
structure,
sleep with
risk
me
management,
anymore?
and a focus on execution.
From options to earnings to volatility plays, we bring decades of trading experience to every segment.
With
Well,
real-time
he's no
insight
longer with
across
us, honey.
products
It's-
and sectors, we deliver what
I'm taking it
traders
over.
need to stay ahead. Fast Market weekdays at noon Eastern, live on Schwab Network at schwabnetwork.com.
Welcome back to Trading 360.
The video had a
I'm
nice
Jenny
little
Horn, and
bounce.
It's now time for the 360 round, and for that, let's bring in our panel to discuss consumer
Yesterday, I gave a
sentiment,
speech
featuring
about
Dolly, VP and Principal
have your
Analyst
watch
at
list
Foresight
ready?
Research, as well as Ted Rossman, Senior Industry
Okay.
Analyst at Bankrate.com.
Because today would be a good
Thank
day.
you both so much for being with me on this Friday. I mean, consumer sentiment not strong as we are seeing
When you have
right
a
now
sell-off
falling in
like
November
yesterday,
and right now dropping
I mean, that
towards
was huge.
these low levels we haven't seen in quite some time. So
I mean,
Ted,
it's
I'll
like a
start with
bottomless
you.
pit.
What factors are contributing to this despite the fact that inflation is seemingly coming down?
if you know what I
The biggest thing
mean.
is the cumulative effect of inflation. So
I
it's
saw
not so much what's changed in the
a
past few
$5
months
call
or
go
the
to
past year.
$1,100,
It's
go
more
to
when we zoom out. And that's something I hear from talking to
$110.
people about. Hey, when are prices going back to pre-pandemic levels?
I
Unfortunately,
mean,
as
that
we
is
know, it
just
doesn't really work that
humongous.
way. But it's the cumulative effect that's important. It's the fact that prices
I used
are
to
up an
had a
average
couple
of
trades with
25%
Tesla like
since
that.
the start of 2021.
Where I
Wages
get in
have
at
not
around
kept
5 or
pace for a
6
lot
and
of
the sucker
people.
would run up 8 or
Even as
9,
the inflation rate
90
has come
bucks.
down,
And then one
higher
time it run up to
prices are the biggest
150.
obstacle.
I mean, absolutely, and it's something that I do think could not echo more, that we're seeing more and more of those.
Stellar NVIDIA
more
earnings,
regulation or more just,
no match for crypto margin call, rising Japan yields hurting
this market and the overall economy.
to carry
So,
trade.
Rita, what are your thoughts here on this falling consumer sentiment? Again, despite
Oracle.
the fact that
Oh yeah,
still
Oracle.
some positive indications from the market.
Well, a lot of the consumer sentiment numbers are tied to
Oracle's definitely at
investment
a
in
soft spot
particular.
right
You
now.
have a lot of retail spending still happening, so that's, I think, one of the most curious elements of.
I have a feeling this thing. I mean, they pumped this one. This had $100 and some gap up on earnings, and they were pumping it
There are a lot
to go
of
higher.
reasons that consumer
And
sentiment.
look where it
could
is
be low.
now.
We've seen everything from fear of AI, which
You can't believe these guys when they pump these stocks at all-time highs. You just can't believe
some
them.
of the younger consumers who may be entering the workforce.
345. I mean, this thing runs from all the way from,
about essential goods
what was it,
being
around
more
226
expensive
all the
than
way
they
to
have been
245,
in the past,
$120 run.
housing prices and
And now it's back down
interest
below
rates,
support.
being still relatively high and an affordable housing crisis still looming in a lot of urban areas. So all of these are factors. You also have the news cycle.
This thing's
which is
gonna
very
bounce up.
polarizing and leads people to
I'm
think
almost
that,
positive
things
about
are
it.
bad, when in fact
It was
a
up
lot of the macro
350%.
data, it could be relatively positive.
All the way from 118 to
Absolutely. And to speak to that,
345
we are seeing more and more of this trend discussed of this K-shaped economy.
in less
And so,
than
Ted, what are your
6
thoughts on that,
months.
especially as we go into more of the political front, but obviously this plays into
Pull up
the
them
broader
yearly
economics
charts,
of the
and when you
country.
see something that's up like 300 or
That's a huge theme right
400%
now.
in
Basically,
6-7
the rich get
months.
richer, the poor get poorer. The gap has widened. Moody's says the top 10% of earners.
This is when I
are
started
over
calling
half of all spending,
stocks
which is
were
an all-time
overpriced.
high. We see
Not a
it in
bubble.
so many ways. We see it with
Definitely
stock
overpriced.
ownership. If you own stocks, like 60% of Americans do,
118 to
you're feeling a lot better than those who
345.
don't. If you own a home, you're feeling a lot better
That's
than
nuts.
those who are renting and maybe trying to enter the market and feeling like everything's too expensive and mortgage rates are too high.
It still might be
We see it
overpriced.
just really across the economy. Credit card debt would be another one. Half of credit card holders pay in full every month.
Oh, God.
And they benefit from
The
rewards
6600s are at
and then the
1950.
other half are carrying debt at an average interest rate of 20%.
The
It really is the dominant theme
6600s are
right
at
now, and it helps
1950.
explain why many people are feeling bad about things, and yet these overall numbers are growing. Upper income households are carrying a lot of the spending.
Yeah, and definitely evidenced by some of the earnings reports we've gotten this week. And Sucharita, you made a really good point that consumer sentiment is not really driven by any key factor, or there's not really any major reasoning behind it. So does that give you that encouragement as we go into the holiday shopping season, as that is going to be, I'm sure, just hugely scrutinized by the street, but definitely will matter, especially in a time when the consumer is seemingly...
Jenny Horney is in charge.
Right.
I'll get right back to you, baby. Please do, Jim. 2670. I'm going to be a rich motherfucker today. Where's Randy when you need him? 2750. Oh my God. Well, I called the SPX at a double bottom. They're sitting right at 31.90. That's 2,500 a contract. Now they went to 34 today. It's the SPX. Watch 'em fly to the sky. Oh God. Whoop! Whoop, 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 whoop. Sneaky snake. Unbelievable. I wish. I could buy a car with what I made today, that's almost for sure.
Ready.
Oh wow, oh wow. Washboardjim trade stocks at dawn. He's got his eye on the charts till the night is gone. Patterns dance like a wild old song. Breakouts rip and dips of gold. He's got the secrets the wise ones hold. 3 black holes in the morning light. Bull flags waving like they're gonna take flight. Washboardjim, yeah, he knew it. All right. How does he do it? Yeah. How does he do it? Moving averages, they paint the tail. Up and down like a shipping gale. Catching the wind, he sets the sail. Green candles climb, the bears retreat. Jim's got rhythm, the markets beat. 3 black holes in the morning light. Bull flags waving like they're gonna take flight. Washboardjim, yeah, he knew it. All right. How does he do it? How does he do it?
Unbelievable. That's what you are.
From not only the consumer sentiment, but also the inflation expectations both came down. I never thought we would get that on a day like this, but even early in the morning, a lot of 8-9 sectors of the S&P 500 were up, but we were missing what? Information technology as such a big part of the S&P. Now that's positive, and now you're looking at 11
Magnificent.
sectors higher.
I nailed it.
Be careful.
Down then
with
up.
the all everything rally, Diane and Joe.
Yeah, we're looking at the heat map right now. What's interesting is even though NVIDIA is still in the red, it's not by much. It's fighting back off the map. Joe, what's your take when you think about this week? We got data back, but at the same time, we also have the headwinds when now investors are questioning the valuations of, those in the AI space. What's your broad strokes take?
So yesterday was a really, really interesting day, and I'm sure you guys have talked about it numerous times, but the turnaround from being 1.5% up and 1.5% down, that's only happened 4 times in the last 30 years. So yesterday we had the April 8th bottom, and we had 2 times in October of 2008, where you saw that type of move. I believe it was the 7th and the 9th.
Well, the numbers came out. Jim nailed it. Numbers came out. Jim nailed it. Woke up in a good mood. Never thought the day would be like today. And I said on the way home that I was going to make it day. No, it couldn't be better. up with a girl named Mary. I said, baby, let's go get married. She said, yes, sir, we will. Let's go. I killed the market today, yes, I did. That has a special ring to it. Jimmy called a double bottom, then we bounced to the moon. Snake break out, pull back, boom. Does that not have a ring to it? Okay. I'd say I nailed it. Okay. Damn, 3670, baby. We're up double top. Triple top. We broke it. So we got a channel of resistance. I'm going to draw that out real fast. Oh, hell. Boom, baby. I got a resistance channel right up here. We're squeezing between the 9 and the 21. As long as the 9's above the 21, we're still bullish. We've got a double bottom coming back up. Okay, we're at a double bottom here. I'm gonna go make me another cup of coffee and I'll be right back. We pulled back to support off this here triple top. Back to 3,500 again. Unbelievable. I wish I could do this all the time. So we had a triple top, it breaks out and it pulls back and holds that triple top, bounces up. Go get my coffee and I'll be right back.
We can collect a small credit of about 67 cents. And what this allows us to do, this allows us to be a little bit patient as we're waiting for the stock to kind of correct itself, if it does that, right? And it also gives us the ability to make some money on the downside if it continues to push back down. So embedded in this short put, right? Because since we have short two of the 95 strikes, we also have a long put vertical where we're long the 100 strike and we're short the 95 strike. So that long put vertical that we have there is financed by selling the additional put on the 95 strike. A couple things I like about this is right now the skew is a little bit higher on the put side, and that allows us to do this thing as a credit. And if you think about how this works, this will expand in value for about another 10% move to the downside. So if you believe that maybe this this move isn't done and you got a little bit more room to go, another 10% move to the downside would take this to our ideal spot, which is our short strike at that 95 put level. And it also has a break even of not 95, but all the way down to 89.33 because you have another put spread that's kind of embedded in there. Plus, remember, you collect that credit of 67 cents. So it maxes at its value at that 95 put level, or that 95 strike level, and it gives you a break even all the way down to 89.33, considering the fact that you collected a credit for it.
Yeah, Joe, breaking this down for our viewers, I think what really helps is this looks like one trade, but it's really two trades, right? It's a long vertical and it's a cash.
Two trades.
Put. And if you look at it like that, you can make $5 on that long vertical, right? And you do it for a credit. So there's your $5 plus the 66 cent, 66 or 67 cent credit. And then there's your entry where you would, where that cash secured put would put you long 100 shares of stock. So what it does, I used to refer to it not jokingly, but as the buy the dip spread. Because if you think it's bearish, but you would want to buy it down there anyway, it really lowers where you would enter this name. So it's a great way. You have to have the capital, right? Because you have to be able to finance or own that cash secured put. That's got risk all the way down to zero. But the good news is Netflix just split. So it's a lot less than it was when it was $1,100, $1,200, or $1,300. So this is one that really takes advantage. And by the way, on the bullish side, everything goes to zero and you make the credit. So Joe, throwing it back to you, throwing it back to Diane for your final thoughts on this one.
Joe, your final thoughts?
Yeah, I mean, with this trade, that you give yourself a lower break-even point.
Netflix.
Okay, I think we've lost the audio there. All right,
Yes, we have.
Let's put a pin in that conversation. We've got cash tags coming up. The team from Likefolio will be along with new data on NVIDIA that has been under some pressure earlier today. Keep it right here on Schwab Network. Fast Market will be right back.
Hi, I'm Alex.
I'm Jane. And I'm his mom.
Sometimes, you could have done better. Same goes for where you invest. Level up and invest smarter with Schwab.
I'm Sam Vardas, live from the New York Stock Exchange. When the market moves, we're on it. Getting the reaction, the strategy, and sentiment in real time. Stream Schwab Network at schwabnetwork.com.
Trading at Schwab is powered by Ameritrade, giving you even more specialized trading support. Connect with the Schwab Trade Desk, our team of passionate traders ready to tackle your trading questions, no matter how complex.
Very complex.
Plus, get 24/7 live help and access support.
So the SPY,
email, and in-platform chat.
The SPY has to break 66189. SPY has to break 66189.
And we saw major swings in how NVIDIA is traded, a bit under pressure, as you mentioned, and it's interesting because when we look at some of our gauges, you know, at least from a demand perspective and an overall sentiment perspective, our data for NVIDIA remains bullish. And then it's about a 10-point gap between kind of that overall, you know, consumer sentiment versus investor sentiment. And when we dive into this, we think a big part of this, you know, discrepancy could be, or at least in the mentions that we're seeing, is that, you know, there are some questions about, you know, a growing portion of NVIDIA's revenue is now in this accounts receivable, inventories are rising, but when we look at what major, you know, other, you know, big tech players are saying, you know, NVIDIA's customers, we see signs that, you know, server spend is increasing, CapEx is increasing, that really the bottleneck here is infrastructure in the sense that they can't get data centers built fast enough to plug these computers and machines into, and they can't get the power necessarily that they need. So really, to us, a bit of this uncertainty feels more like an infrastructure bottleneck than an actual demand bottleneck. And so long term, our data supports a bullish position on NVIDIA. You know, whenever we look at this, we see demand continuing to rise. And when we compare NVIDIA versus other players, not only does NVIDIA command the massive
NVIDIA about to break.
but also it's growing its piece of the pie, which is really hard to do whenever you're a company this large. And so, you know, for us, I think that, you know, there's a little bit of a gap in that investor and consumer sentiment, and sometimes that can present long-term opportunity.
You know, Megan, it's great to have you on a Friday talking about NVIDIA because it's kind of a head scratcher, right? The expectations were high and they beat all of them, both in the numbers they actually put up and the way they guided for the future. There's almost a disbelief out there that it's going to be this good and be doing this well. And now they're taking that cash. They're not buying back stock. They're not putting out a dividend, but they're reinvesting in the company. So when AI does start to pay off, they're going to be in like a spin wheel of profits from these other companies as well. Obviously, the risk is that AI is a bust. Let me know the small percentage of people that think maybe that is. But Megan, here's my question to you, and it has to do with competition with NVIDIA and AMD. Now, in the past, AMD has made promises. They're going to be, they've got chips that are better than NVIDIA. They're going to compete. And then NVIDIA comes and strengthens their lead on AMD. Are you seeing any gaining or losing ground?
I thought I did.
Home Depot Lowe's relationship where there's one clear leader, but there's a solid number two. How do you guys see this relationship between these two companies?
Might run up to the
I
store.
think that's a really good way to look at things if you think about this as like a Home Depot versus Lowe's, because we do have NVIDIA as the clear larger player, the clear leader. But if you look on that chart, we still see a lot of momentum building from AMD, and we think that AMD is really improving its offerings and potentially, you know, positioning itself better to take advantage of this AI compute demand in the future, especially as it leans into inference. And so I think that there's an opportunity there, but we still see in this data, you can see this year-over-year compare chart of, you know, web demand, and this for us has been pretty nice forward-looking indicator of overall demand for the company at large. And you can see while NVIDIA is leading, AMD is still overwhelmingly positive at a time when it's getting harder and harder to beat those year-over-year benchmarks, right? This is pretty impressive that every quarter I feel like we come to you and we say, how can demand still, you know, keep growing at these levels? And we're still continuing to see momentum pick up. And so whenever we look at this, you know, we think about AI at large, you know, there's all these questions of is AI a bubble? And really, you know, this doesn't feel bubble-like to us. This feels like AI is truly transforming things beyond most of our comprehension, and that demand is continuing to rise at a pretty incredible pace. And so obviously we'll continue to track this in the meantime, but every macro trend that we track, you know, we're listening to all of the different things that are driving consumers and what they're interested in.
What is a stock bubble?
These major companies from robotics to AI to autonomous driving, and NVIDIA has its hand in all of those areas. And so for us, we see, you know, a continuing kind of macro tailwind propelling this, at least for now, and we'll certainly watch for any signs of a slowdown, but we just aren't seeing it quite yet.
Megan, some say that that question about an AI bubble is not so much is there a bubble, it's
So
just where
what
are
is
we
a
in the
stock
bubble? I
bubble?
want to ask you that. I want to ask you, go back to
You
the
ever ask
brand.
yourself that question?
You
A stock
mentioned
bubble
because,
is a rapid rise
CEO
in
Jensen
stock
Huang said that,
prices
quote, Blackwell sales
that
are
far
off the chart and
exceeds
cloud GPUs
their
are sold out. Shares of AMD
interest-
have outperformed
intrinsic-
NVIDIA this year.
intrinsic
Both are outperformers compared to the
value
S&P 500 year to date.
driven by
AMD handily outperformed,
speculation
up
and
70%
investor
year to date.
psychology
NVIDIA's up
rather
more
than
about
underlying
35%
fundamentals,
year to date. So my question
which
to
is
you
true.
is, how do you all look at this, especially when you think about the earnings score?
because
that
there's
you
no
all
fundamentals
apply
behind
to,
this AI.
these companies?
It's all speculation.
You know, whenever I can tell you that I
mean,
believe
it's
our
not
earnings
bringing
score
any
was
money
bullish for
in,
both of these
or it's
companies
starting
heading
to in a
into
way.
the most recent earnings event. I think
The
AMD's might have been a little bit
substantial
stronger than
surge
NVIDIA, and part of that is because
is
they're starting
evenly
from a
followed
lower
with a
bar.
sharp
You know,
or
similar
sudden
to
price
that
collapse,
hurdle versus the
known
H3,
as
you know,
the
to go back
bubble
to that comparison.
bursting,
When we look at Lowe's, it's doing better
which can lead
versus
to a
itself
significant
comparatively
losses
than it
for
has,
investors.
in the
Bubbles
past.
are
And so
often
we see that
characterized as
AMD as well.
irrational
That's another,
exuberance.
top name to watch.
I know what that
partially
is.
What we're seeing and what we look at is that it's
And
really leaning into
and
kind of
herd
this next
behavior,
phase of
which
AI
it is a
that we're
herd
looking into
behavior. You
versus
got
AI training versus AI inference.
the
and
Magnificent
we're
Seven,
well positioned there, so that's something that we're watching long term.
which owns
and it's kind
what,
starting to
30%
catch
of the
up.
market,
However,
40% of the
NVIDIA
market.
is still the ultimate leader when we look at consumer mindshare. If you were to compare, plot those three.
Where a large
companies
number
that I
of
showed you on the
irrational
pie chart,
exuberance or herd
NVIDIA
behavior,
would
where a
be about
large number of
55% that
investors
pie
rush into
and
buying
growing.
a
And so I
asset,
think that's
driving
pretty impressive
prices
whenever
even
you think about
higher
it from
until
an
the
NVIDIA
market
outlook, but also,
realizes
AMD
the
not one to
disconnect
sleep on. It
from
is,
reality.
it's improving much faster than
I
it has
explained
in
it
the past.
yesterday.
Okay, all right, thank you, Megan. As Megan Brantley, Vice
It's
President
much
of
better than the
Research at
dot-com
Portfolio
era,
with the
which
latest
dot-com
look at
era brought
NVIDIA.
millions of
Mat
dollars
right
to a
now,
lot of
almost
people.
0.25% after, it needs some kind of
To even
recovery
the
after
middle
day
class
that it had yesterday.
and
So
the
for
poor.
the trading perspective of all things NVIDIA, I want to yield the
I know
floor to you,
people that
Kevin.
make
I
a
know we'll
living
bring Joe back in.
just on YouTube
Kevin, your
or
final thoughts.
Well,
being a clown.
if you're looking at NVIDIA from
Or
a
just
long-term
'cause-
perspective,
and I think a lot of that has to do with because fake news. You can't sit there and watch news anymore without,
the stock hit $5 trillion.
asking the question,
I checked
which
just
is
before
usually
we went on the air. It
bullshit.
was like something like 4.35
You got too partisan.
trillion now, so it's lost a significant amount of market share.
That's where I get
from that
most of my
5 trillion
news,
level.
not on the news,
So
but
there's doubts
on
right?
YouTube.
And there's doubts about AI. Now, Jensen Huang relieved a lot of those doubts this week when he gave the numbers in the
3660
guidance and
now.
showed they're actually doing what they said they're going to do. I'm excited to hear what the Ruby
Spy's
chip-
gonna try to
is
break
it gonna
my
be a big
resistance.
improvement on Blackwell, or just the next version like the
662
iPhone,
more or
right?
less,
Numbers coming out.
661.89.
So I'm really
We'll
anxious
see.
for that, Joe. I'm also anxious to find out what kind of trade you're putting on here in NVIDIA, because I think it's important how you structure this going forward, where you line up your strikes. Are you worried about movement? What are you thinking about here, Joe?
Might have been a little bit of premature here in my sell the call vertical trade, but I'm looking at the response of the markets to what was, undoubtedly a really fantastic quarter and really good guidance. And at some point,
Had an itch in my ear.
whether or not it's fundamentally correct, you kind of have to look at the what the market's showing you, and it's showing us that they're selling the rips, and they are
Emma
selling
Cruz
positive
on Cruise Chat.
stories, because there is I don't know if it's a fear, as you were talking about,
This was
Kevin,
my
that
first
they're not gonna
non-Norwegian
continue
cruise line
to
cruise.
deliver,
Are
or
you
if there's
serious,
something
baby?
along the valuation lines where the market's just saying that look, we're
I think
paying
this girl's
too much
cute.
for this AI narrative, but you do have to respect the kind of how the market has responded.
Emma.
So what I was looking at was
There
a
she is.
December trade, and it's actually the weeklies. It's the December 12th expiration. It's selling the
Say hey,
call
baby.
over 185, 190.
So my brother
At
is
the
my
time I
editor
priced it
now.
up, I think
He's editing that
we
video,
might have been
just
trading
editing.
about
So
$3 or
this
$4
week
lower
we
in
will
NVIDIA. And that's when you would have got about
finish
$150. You
editing
probably
that.
get a
I
decent
just saw a
amount
comment
more
that
for this
said Black
trade.
Friday. Is
So
that why
it's a
you're
little
wearing
bit
that?
of a-
Hadn't even thought of that. So no, but that's pretty good. So yeah, my brother is editing the.
Is
Trails
today
to
Black
the
Friday?
Cruise. That's why I why I booked this cruise, where I hoped we would go, where we went, what was the dining like, what's the entertainment, like the whole story of the cruise. And then of course I'm going to do a cabin video because it's interesting. I upgraded to what is
Next
called
week.
a superior ocean view. I had a bath. And it's kind of like, was it worth doing that? I'm not going to spoil it, but that'll be the next video. So
I love you, Emma.
pretty awesome ones coming up.
Could I have a smooch smooch?
Really interesting. How do you feel with all the AI channels in the cruise space currently? Drives me absolutely bananas. There are hundreds of channels that just scrape content from me, Sherry, Alana, Tony. They almost
Jim.
speak the exact points that we say. They AI voice it. They AI videos over the top. And they even use clips of me on cruises in there. And the thing is, it takes me so long to take this stuff down that it's just not worth it. But I have had emails from people saying, Emma, I didn't know you had this channel, and it's absolutely nothing to do with me. Nothing to do with me. I just can't keep up with it. Because these channels can be made so much faster than we can take them down. So, yeah, drives me absolutely nuts. The thing is, I think if you're going to take cruise advice from someone, you want it to be from someone who is a person, for a start, and who has been on a cruise. Because if I said something on here, I don't know what I could say, but if I gave you some terrible advice right now, you would know that it was me that said it, and there would be a consequence because you would know.
Oh,
With
God.
these AI channels, when I see some of their tips are out.
Goodbye, baby. I love you. We're going to see if we're going to break resistance. Orbs at $200. Got the bounce on AMD. Jimmy called NVIDIA bottom. Belch. We're squeezing again. Got a rising wedge on the SPY. Puppy hour. Might take a small little break here. Got awful quiet all of a sudden. Pulled back, didn't hold up. And then we got the 63 coming. And I said I was getting ready to squeeze, and I was right. I'll be right back. I'm going to take a few minutes. NVIDIA.
That some do believe that the NVIDIA report card that we actually got is good news for Palantir because of all these data centers, all this infrastructure, which NVIDIA, of course, is talking about with the strong demand there, particularly for the GPUs. The purpose of all of that is to help enterprises, to help businesses, to help government agencies actually work with that AI, which
we got 63.
Really sets the stage for Palantir here. But yes, of course, adding to this has been Michael Byrie, obviously disclosing put options, 5 million worth of Palantir shares as well. That attracted a lot of attention, perhaps putting a little bit more sort of downward pressure on the stock as well. Carl has pushed back on that. I mean, we've seen these media reports also talking about how this is outrageous behavior, market manipulation, and dismissed all the lofty valuation concerns. You had Ives weighing in on this as well, talking about how everyone's going to keep fretting about valuations as well, but this will ultimately be, in his eyes, $1 trillion market cap over the next 2 to 3 years. So, you know, I think everyone's really looking at this, not to mention it's just got also this certification under the Australian government for a bit of an expansion there as well. So there's just so many moving parts for this company.
All right, yeah, it is. But the question about valuations has been around for a while, but suddenly it doesn't seem to matter now. Thank you, Sam.
Thank you.
That is Sam Vadas, host of Morning and Trade Live with a breakdown on Palantir. All right, let's get Joe and Kevin back in here. So, Kevin, you've got the example trade in this one. What's the approach that you're taking?
You know, to read about this company and really dive into it is such a fascinating read of what they do because they're involved in AI, but their programs help make the decisions from the data. They pull decision making out of the data and help it. And you know how you counter argue about valuation? You grow. U.S. commercial revenue up 121%. Do I know the valuation? Nope, I'm not an analyst. I don't know the valuation, but this stock will probably move. It's already moved significantly from $207 down to where it is right now. So, Joe, looking at the trade, I'm not smart enough to figure out exactly when to buy or when to sell and where the stock is going. So what I want to do, I want to give myself a chance to be profitable in either direction. So what I did, I gave myself some time. I went out to the December 12th expiration and I bought the Iron Condor. Remember, a short Iron Condor is a range-bound strategy. This is the opposite of that. I want to move and I don't care which direction. I bought in the December 12th, bought the 165.70 call vertical. I also bought the 135, 130 vertical. So I'm looking for a $5, from a $5 call vertical for one of them to go to $5. The debit I had to pay, about $2.25. Now it's trading about $2.20, Joe. This gives me, I mapped out what the expected move is during that period, and I put my short strikes right there, Joe. The long Iron Condor, your thoughts?
Here's why I like this, because if you were to buy a straddle or a strangle, you're going to pay a heck of a lot more for that type of trade than what you're paying for this long Iron Condor. The theory behind this trade is that the stock's going to move. What proves that theory? Well, the fact that it's sold off $50 and it's had such a massive move over the last 2 years that the probability of it continuing a big move, one way or the other, we don't know which way, is likely pretty darn high. And so the fact that you have the ability to make money in either direction, it's going to take some movement, right? We have to understand that. I would much rather be long the Iron Condor than short the Iron Condor because I think the theory that this thing is going to move is probably pretty strong.
All right, that's good stuff there, guys. I love it. We had our coast-to-coast fast market today. Well, that is going to do it for us today on Fast Market. Happy Friday, everyone. I'm Diane King Hall alongside Kevin Hinks and Joe Mazzola today. Download the Schwab Network app. It's in the App Store and tune in 24/7 on schwabnetwork.com. Stick around. You've got Next Gen Investing coming up.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. The Platforms and Tools webcasts are designed to help you broaden your knowledge of platform features and resources available from Schwab. You'll learn tips and tricks to help navigate schwab.com, thinkorswim, and mobile-based platforms. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/coaching and start learning today.
Welcome to Schwab Network, where real-time market coverage meets expert strategy.
From the opening bell to the closing bell, we've got you covered.
Get inside the minds of pro traders.
My point is that they're getting a higher rate of change in sales based on their guidance, but not the same rate of change on EPS.
Follow the biggest headlines, live analysis, breaking news, and sharp trade ideas minute by minute.
With shows built for action, we break it all down in real time with speed, accuracy, and precision.
I think one of the most important things is you're making a play in a risk-defined way here going into earnings.
So that would be a further downside area to watch.
Smart insights, actionable data, veteran traders, and trusted financial journalists streaming live and on demand.
Schwab Network, streaming 24/7, any screen, anywhere, free. schwabnetwork.com.
2025 kept investors on their toes. Now, get ready for the road ahead. Join Schwab's panel of experts on December 11th for 2026 Market Outlook, your guide to the forces shaping stocks, global markets, inflation, rates, and more. Hear from experts on where the markets may be headed, spot opportunities, and see what could drive your portfolio next year. Tune in on December 11th at 7 p.m. Eastern on Schwab Network.
I'm Nicole Petalides at the New York Stock Exchange. Live interviews, market movers, and real-time coverage right from the floor. Subscribe now at schwabnetwork.com.
Hey, Pop.
Hey, Andrew.
Last year, my dad had a stroke. Big shock to see this person that I've always seen as a force in our family be vulnerable.
Wait, had a stroke?
Yes. Now we're in the car together almost daily. I started to realize, what can I pick up from my dad? He's been with Schwab for a long time.
Jim, my financial consultant. I called him that 20 years ago.
Jim's really been there to answer any questions I ever have. Makes a huge difference when you have someone that actually cares.
Welcome to Next Gen Investing. I'm Jenny Horn alongside Alex Coffey. And Alex, I will say, checking in on markets here, we are in a pretty nice rally now and across all four of our major averages with strength led by the Russell 2000 actually. But now even S&P is up 1.2%, the Dow's up 1.4%, of course Russell up 2.75%, and the Nasdaq, which was our I mean, still is our laggard of the group today, but was read a bit earlier, is actually seeing almost a % now gain on the session here. So closing out what was a busy week, at least on a bright spot.
Yeah, and in the first like 20 minutes of trade too, you had a market that was losing momentum, but for the most part was still mostly green. And even at most of those points, you still had the vast majority of stocks higher on the day. It was just this AI-centric trade, whether it's the Oracles of the world, whether it's the NVIDIAs of the world, the Broadcoms, were dragging things down. But 92% of the S&P higher in real time, about 81% of the NASDAQ 100 real time is higher. NVIDIA is like exactly unchanged. But earlier, I think I saw a 175 handle in NVIDIA. I mean, that's a $250 billion turnaround in NVIDIA intraday.
No kidding, as NVIDIA now is expected to pull back about 5% this week. So not its worst week by any means, but it's been definitely felt by these markets, especially on the heels of what was, I mean, a really clean report from NVIDIA, giving no worry about AI demand going forward. Markets were definitely critical of this report, though, as we saw things reverse yesterday. But at least now, I know we're now slightly lower in NVIDIA shares, but starting off this morning lower again was a bit of a different tone than we've seen in NVIDIA. We've been able to see markets that buy most of these dips and a lot of the weakness we've seen in tech, where it felt like 2 consecutive sessions of NVIDIA pressure on the heels of a brilliantly put report was abnormal.
Yeah, and I actually misspoke. It traded into the 172 handle on sort of the spike low. So big moves intraday in names like NVIDIA and others. You know, when you look at this, Jenny, I think the most interesting chart to me, the one that I'll be watching, I would say the rest of the day, and that'll give me indication of how the rest of the day may shape up, is the VIX. Mm-hmm. The VIX is very elevated from where it's been, but it's almost in a full 10%. Now, I know we don't always quote percentages in VIX, but that's substantial. It's sitting around, or actually sub 24 now. So to me, this is where it begins and where it potentially ends today. You start to see volatility work its way back 25, 26. Even if the market doesn't turn around, that's going to indicate that there is still a fair amount of uneasiness. And even at 24, there's still uneasiness, but it's coming in, and that's what you want to see going into the weekend. Volatility come in and a green close.
Yeah, that is very true. And I just remember the days of sitting around like a 12, 13 VIX, but I guess long gone are those days here, as the VIX is falling, but still, to your point, it's been quite interesting to follow. So wide variety of coverage to get through for the next hour, as we'll start things off with some of these movers to keep on your radar. Then we will chart and trade Dell and HPQ, two names that have had pretty brutal Novembers, but have earnings on next Tuesday after the closing bell. We will also be discussing Gen Z and the future of banking and some trends we're seeing amongst those younger consumers that are getting into the financial world. We'll dive into Palo Alto Networks, which saw some weakness on the back of its earnings, but now further pressure today, down about 0.9% on some analyst downgrades. We'll discuss more on business owners and some of the data we're seeing right now behind being a business owner, as well as closing out the show with under 30. We're talking MGM with a downgrade today, but shares are ripping up 5.5%.
Yeah, one of those days where as long as you don't have something really negative going on, or you're not an AI-related stock, for the most part, pretty easy to see why so much is green. Let's get to some of these earnings, though, because this is a great day to be an earnings release, because the market's rewarding some stuff today.
It is. So, I mean, we'll start off with Gap. First of all, I feel like we've talked about Gap from just like an analyst perspective more than we ever have in the last month or so. So Gap is one
I finally also have got into my head, it's Gap as the symbol. No more GPS, and I finally made the switch.
I don't know if I've fully made that switch yet, nor have I made the switch from you know, actually calling Block, Square, XYZ the right company. But yeah, Gap, the ticker change has thrown me through a loop, but clearly not the street. It's up 8% nearly today, on the back of seeing Old Navy, Gap, and Banana Republic all putting up same-store sales gains in the third quarter. A phenomenal report from Gap. So they did really start this rally off yesterday after hours, after we did see the chain offering this more upbeat full-year outlook, as well as consumers right now dropping by the namesake store more than they had been expecting, and low-income shoppers increasingly shopping at Old Navy locations. But the real standout on the earnings call was namesake Gap, where the CEO highlighted they're attracting these younger, higher income consumers while keeping their other consumers relatively strongly engaged. But they said that this unlocks this competitive stance of premium and value. And so they said that they've had, these denim ad wars over the summer, which they were able to really hone in on and generate substantial, not only loyalty, but also revenue as a result of that. So like Gap has the same sort of sales growth of 7%, well beyond what the street had been expecting. Okay. And they said this was hugely because of the denim push that they're seeing with Gen Z and some of these younger content creators that are really honing in on Gen Z. I didn't realize this was as trendy as perhaps it is. I'm not very much on trend with Gen Z, but I do know that more and more of these like old school 2000s styles are coming back with Gen Z.
Well, and we're starting to see Lulu, struggle a bit in recent years. Athleta is clearly the weak point of this report. And you start looking at it and you're saying, maybe there are some real trend shifts. The return of Abercrombie, American Eagle, Gap, would go down the list. So, yeah, impressive quarter, I would say, from a company that's, probably been in need of one, despite the fact that it's been mostly pretty sideways over the last year.
It has, but yeah, today a pretty notable move to the upside, and all of the analyst coverage we've discussed on this day that has been pretty bullish, that was definitely correct as we saw a nice pop on the back of this report. So our next name today is also another leader of the session, that's Ross Stores, which is up 7% today. Now really reiterating the trend that this value-seeking consumer is still definitely shopping, just finding brands that resonate with them. So we're seeing overall momentum here, as they did say these, again, low-income consumers are still spending. Ross Stores really was able to put up better than expected earnings, a top forecast on this stronger assortment, and this also did help fuel comparable sales. So quarterly earnings of $1.58 were above forecast. We also saw comps rise about 7% on higher transactions, as well as unit transactions and average unit retail.
And
they also
average
did issue
unit.
upbeat fourth quarter guidance, projecting around 3 to 4% comparable sales growth on earnings of $1.77 to $1.85 a share. And they did say that right now they're increasing not only their fiscal 2025 estimate by 5 and 4%, but they also did say this improved sales outlook.
200 EMA on the SPX.
Strategy, saying that they've really been able to hone in on ladies apparel specifically, which did outpace at least some of the overall chain sales in the quarter.
Yeah, you really see analysts piling on to tons and tons of price target increases on this one after this results. But yeah, one of the things that really stuck out in the commentary was just that, a couple of the analysts were basically saying, even optimistic expectations couldn't get to a 7% comp sales, and then that's still bleeding into the holiday season, and that's what they provided. So when you're better than even your most optimistic, kind of expectations, it's a recipe for a really, really nice rally, and that's what we have today.
That is definitely what we have today, yes.
Yes, we do, baby.
2% gain right now. And now our next name today, Intuit, also on the back of these earnings, which very different type of company, but also gives a great read on what we're seeing as far as the different financial and sort of back-end systems. So seeing right now a really strong, again, earnings report, as we did see strong revenue as well as very strategic AI investments that have led to significant upside. So they saw their online ecosystem revenue rise 21%, or about 25% if you excluded MailChimp. Now their total online payment volume growth was 29%, and across all their brands, Credit Karma rose 27%. We saw TurboTax rise 6%. Pro-tax revenue was also up 15%. And they did purchase around 851 million shares during the quarter. Their quarterly dividend is now $1.20 per share. That was a 15% increase over last year. And their guidance was implying, first of all, it was better than expected, but also implies growth of 12 to 13%. Their earnings guidance, though, implies growth of 13 to 15%. So strong guidance going forward. And this is a company that has a component of seasonality around, naturally the tax season, but still posting a pretty strong first quarter. All things considered, we're up about 5.6% in real time.
Yeah, their AI adoption shows 2.8 million customers using AI agents, and that delivers, of course, some time savings for
SPX
them.
calls.
The AI age is here. It's not just the build out now. We're seeing products being adopted and used, and if companies like Intuit are bringing them to market, that's going to be more small and medium-sized enterprises taking advantage of this technology.
That is absolutely true, and I think evidenced by, I mean, not only the fact that the commentary was really optimistic, but also we just saw numbers that proved that this is actually something that's monetized in real time. It's not this concept that we have to wait years and years to see it actually start to generate significant returns. We're seeing that right now occur, of course, in the current quarter as well as the foreseeable future based on their guidance. Now, last name today, not an earnings mover today, but an IBM. We got a note out of Oppenheimer, which started coverage on IBM with an outperform rating, $360 price target, which, as far as I could see, based on these FactSet consensus, that was a new street high on IBM. They did say that their bullish stance is predicated on the belief that IBM's software portfolio should sustain now double-digit revenue growth driven by the strength in automation and improving growth in Red Hat, which is, they said, should continue to really drive this application development and management, as well as additional revenue optionality with creative management of AI applications. They do believe these drivers will result in strong expansion activity with existing customers that continue to really drive this pre-tax margin expansion, and the stock, in their opinion, should also re-rate higher as they pivot more to software, which they said is widely right now appreciated, or I guess I would say argue underappreciated based on this read. But the IBM does have around 9 buys, 10 holds, 3 underperforms. Currently, not a hugely covered name, but previous high I was seeing was around 350. So this is definitely then a very bullish take on the recent price.
Yeah, Goldman's James Schneider as well as Milius were at 350. So Parham saying, lap in the field, becoming street high. And whenever you get a new street high target, great headline to have if you're an investor of IBM.
Especially if you're, a name like IBM, which has pulled back, almost 9% from these recent highs. I know we're still up about 34.5% on the year, but has been lower by about 3.5% this month and still down about 3% this week, but closing things out on a bright note here as we're up about 2% on the session. Well, that'll leave it here for the top of our show today and some of these top movers to watch. But coming up next, we'll dive into the charts as we'll be looking at some charts and example trades of both Dell and HPQ ahead of their earnings Tuesday afternoon.
Come on, baby. $5.50, man. He's back. I was wondering where you were, Randy. You missed out.
Stay connected to what moves markets. Download the Schwab Network app.
Now this one might be a little tougher trade.
Wherever you are.
What's up, Carl Nation? It's your #1 broker with the best full-service wealth management skills in the biz.
Actually, I'm seeing something from Schwab.
Uh-oh.
Yeah, Schwab lets you invest and trade on your own.
And if you want, they can even manage it for you.
Not to mention, Schwab is a team of specialists for taxes, insurance, and estate planning, all with low fees.
We're experiencing...
We'll look at the put, too.
Carl.
Schwab. Schwab, a modern approach to wealth management.
Whether you're a bull or a bear, you'll want to catch the latest market action on Morning Movers with me, Diane King Hall, live from the floor of the New York Stock Exchange, only on Schwab Network.
Damn.
Welcome back to Next Gen Investing. It's now time to dive into the charts with our chart master, of course, Rick Ducat. And today we are talking two names in the broader tech world, I would say software as well as, hardware-focused stories here. Dell and HPQ both have earnings after the close on Tuesday. So we'll start off with Dell. Dell's up 3% today, but has seen a lot of its strength on the year really erased in the recent pullback we've seen in tech. So walk us through this chart here, Rick.
I think my very first computer was a Dell that I bought myself, honestly. So this is a company that's been around for a while now, one of these more legacy computing names here. And we've seen a bit of a turnaround here lately, a pretty sharp decline, a very narrow, very steep, downward sloping channel type shape here between our two white dashed lines. We had our highs near 168. We couldn't quite clear that point, though. We formed a brief double top around that area and then our collapse. So now we have pulled back to what looks like it could be an interesting area for potential support here. 117, our green line here, is where price topped out multiple times in this brief sideways range, where we had a corresponding floor at about 108. So now we have held on to that 117 level. If you look back even further, though, our red line, 121, that was a frequent high point for prices all the way back here as well. We did have one close that was notable that pushed outside of that boundary, but stayed on pretty consistently there. And then we can see that once again, our lighter green line near 108 was a floor for many points in that area. Also was a ceiling briefly once again. So you can see that these levels that stick out, these horizontal levels, frequent stopping points.
I had to add on to this.
Often act as kind of a pivot or a point, when you see this trading activity that fluctuates around it. So when we do look at our moving averages, we have crossed below our shorter term moving averages here, our faster 21-day EMA in yellow.
Come on, turn around, baby.
Below our slower 63-day EMA in orange. Not the greatest trading signal to use in and of itself here, but an easy visual cue that the trend is worsening here. So we can also see we are below our purple.
I'm in between the 200 now, so I don't know.
Moving average.
I wanted to hold that 200.
That comes in near 124, so that could be a point that the bulls would want to keep an eye on for as we head into the close to see if we can clear it and move back above that level. RSI oversold as well, still below that 30 level. That signifies that shift into the notable extreme territory here. We have broken through our shorter term downward sloping red trend line though, so perhaps a mildly encouraging piece of information here, but not really any good price breakout yet at this point. So when we do finally also look at our volume profile study, we can see that our point of control lines up very closely with our purple 252-day EMA. So that adds extra emphasis on this as a point of interest to the upside here. That's our heaviest trading area. You can see very obviously too that the volume significantly drops off once you start getting too far above that area. To the downside, there's another standout volume node. You can see right here, you're about 110, 111 or so. This shaded area here, that also sticks out on the road down to 108. So that could be another speed bump if we do start to see greater declines.
Yeah, and all things considered, I know it's been not the strongest, November for a lot of these tech names, but we are at least higher now by about 2.8%. On the session here without really any major news catalysts. So all that to be said, as we now think through trading Dell, for example purposes, Alex, say leaning into more of the same. Dell is not going to be a huge volatility generator. At least as history would tell us, but obviously just hoping for perhaps a continuation of the recent trend.
Yeah, more volatile in recent years with this AI build out, I would say, than historically. But looking at Dell,
come on,
a couple
baby.
of the areas that stuck out to me, and Rick talked about a few of them, around 100 and around 130. So giving you a shot in either direction here.
3.90.
Double calendar spread. So rather than just the mountain peak, Jenny, that we often talk about with this risk profile, it's more of the mountain range. We got two separate peaks, both corresponding with the strikes selected. So it's the 100 put calendar, selling next Friday's expiration, buying the following week. So that's the November 28th, December 5th. That would be this peak here, and then the 130 would be that one there. Combined as a four-legged spread, the double would go to about a $1 debit. That means the total max loss is $100. This is not the fastest of moving trades, Jenny, But really what you want to happen
Four-legged spread. Come on.
This to move to either 100 or
Sure.
130 or in that area. A chance that an unchanged-ish move because of the volatility dynamics could be not a lot of working against you, but it probably wouldn't work for you either. The risk is really a move well beyond one way or the other.
Okay, yeah, so obviously a highly customizable trade as well. So depending on your conviction on Dell going into this earnings support, highly adjustable trade. But now as we look to HPQ, a similar story in terms of the recent pullback, but we're pulling back from very different levels. So we're seeing a very different performance from HPQ, obviously has that hardware exposure. And to your point, your first computer was a Dell. I believe my first computer was an HP. So not necessarily the chart you want to see, but we are actually up 5.7% today. Hardly, though, really erasing the recent downtrend.
Printers are much less fun than computers, though. I mean, printers are so frustrating, whatever. But anyway, so we can see now that a decline in this name here. We have a trend line that has gone down across our highs here, but for a while it looked like you could have also drawn an accompanying trend line just very slightly gradually along these progressively higher low points here. However, that has been rather resoundingly broken at this point here as we approach the kind of conclusion of that pattern. Our two lines increasingly narrowed. Now you can see that we have a shorter term white trend line in play, rather much steeper here. For now, that's where price has topped out, roughly at that same point there, your 24. If you were to look back here, you can see that 24 to 26 was an important range as well. Price repeatedly bounced around in that area for a couple months there until we finally got that breakout. Then the 26 level was supportive until we eventually had that breakdown once again. Now, 24 is resistance. Kind of the same point I keep making is these areas of prior interest of resistance and support can come back into focus down the road here. So we'll have to see what happens. Earnings are coming up that could obviously rewrite this entire story, but for now we are kind of sitting at the verge of a potential upside tipping point here. We have our moving averages here. They are continuing to diverge farther apart from each other and accelerate to the downside. These are lagging indicators, though. That's one of the inherent issues with using them, is that they don't reflect the current price activity as quickly as we might hope in some cases. So these are used as resistance when we start to experience upward movement here. So 25 stands out. That's our 21-day EMA. That would be a potential point to look for a speed bump or stopping point. We can see here, though, unlike our last chart, we have gotten that breakout above the RSI trend line. So that's kind of interesting because we don't quite have a corresponding breakout in price just yet here. So that would be something that the bulls would certainly want to see. Price is always the more important measure here. The technical indicators can give you false signals or what have you here. So price is always the important one. Remember that. So when we see our volume profile, our point of control lines up very closely with our 21-day.
I'd like to see 66.0390.
So that's the mark to beat to the upside in the shorter term. To the downside,
We're getting ready to squeeze right now, so we'll find out here.
Channel. That stands out if we were to break below those recent lows that we experienced near 22.27.
Okay, yeah.
Don't overtalk me.
5.8% today, and so maybe hoping for some upside.
So we got to stay above the 9.
Yet this quarter, we've seen a lot of big moves in tech. Unfortunately, haven't been able to say it's been hugely positive, but obviously
I was at
different
570.
markets could naturally, of course, see some different results. So we'll be watching those numbers as they release Tuesday after the close. Tuesday. But now, as we do think through an example trade here, Alex. I mean, HPQ has been very much punished by this market, but always areas of opportunity if you're, again, a supporter of some of the hardware return to this market.
Yeah, definitely the more hardware element of Hewlett-Packard. And I must say, although the chart is relatively volatile, given the low implied volatility relatively and also given the lower stock price, there's just not a lot of premium in these options, just objectively. So kind of changes the strategy playbook just a bit. And I looked at something a little bit more fun, buying a call. Hey, it's a simpler option strategy, it's just a single leg, but You know what's fun about it? Unlimited profitability. If this stock really takes off to the moon, as they say, this example could do quite well. But it expires at the end of next week, so it's going to be November 28th expiration. It is an in-the-money call, so it's a 22.5. It's meant then, of course, it doesn't represent stock, but of course it's a derivative that potentially gives the owner of that the right to exercise to buy 100 shares. So with it being in the money, that increases the likelihood of it potentially being economical to exercise that. It's going to trade with a little bit higher delta, as they say, and perform theoretically a little bit more like stock, especially to the upside. So this is the way to get a risk-defined strategy, Jenny, that has performance to the upside, much like 100 shares of stock, but risk definition to the downside because it's an options trade. So $1.50 debit means you have 150 at risk. Now, the stock isn't quite trading for 24. You'll notice that's the break even. You add the debit spent to the strike price, you'll get 24. So for that leverage component, for that risk definition, you pay a little bit of a premium versus the current share price, which makes sense. That's the idea of options and why there's time value. But if you get a big move post earnings next week and this thing gets off to the races, chance to really see a quite substantial return potential because of that unlimited profitability that's uncapped by it not being a spread.
Yeah, and I think that really great breakdown on, a more simple strategy. Obviously, this is pretty much what you learn, I feel like, when you're learning to trade options, but obviously simple sometimes works and does have that unlimited upside potential. So we'll leave it there for Chartmaster today. Coming up next, we will dive into banking, specifically the trends we're seeing out of Gen Z consumers and how they're overall shifting and changing the banking landscape.
For instant reactions, earnings breakdowns, and hot takes that teach you about stocks and markets, follow me on X at @NPetalides and connect with me, Nicole Petalides, on LinkedIn, Facebook, and Instagram.
Trading at Schwab is powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim Desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization. And track market trends with up-to-the-minute news and insights.
Damn it.
Trade brilliantly with Schwab.
Live from Chicago, this is Trading 360. I'm Marley Caden. We track macro forces, market trends, and company news that shape investor decisions, all with expert analysis and
It's kind of being,
context. From inflation,
I don't like this lower low here.
Earnings to policy. It's a comprehensive view of the market every trading day. Trading 360, in-depth market coverage straight from Chicago. Weekdays at 11 a.m. Eastern on Schwab Network.
Stay connected to what moves markets. Download the Schwab Network app and get live coverage wherever you are.
Hey, Dad. I have a question for you.
Sure.
When did Granddad first start investing?
Granddad had an account with Schwab before there were branches in the area.
Head and shoulders,
He really
that's what that
started with
is.
nothing. He worked hard, and after
So
he
it's kind of
passed
like a
away,
fallen wedge.
the torch has been passed to me, and my advisor Jennifer, she was with me with the journey, helping with the
Yeah,
estate,
I like that one
two
better.
grandchildren, planning for their
I
college
can deal with that
educations.
one. But
Someday it'll be their turn.
I couldn't deal with the triangle though.
Welcome back to Next Gen Investing.
If it comes up like that, that could be a continuation down.
Specifically with Gen Z consumers. Joining us now is Gentry Davies, CEO and founder of
It's really not
Prue.
made its
So
mind
Gentry,
up
thank you
yet.
so much for being with us on this Friday. Now, I will say we've seen an overall shift in the financial world. I mean, there's no doubt about that, especially with more and more of these fintech players becoming very relevant. But what are you seeing specifically
It's almost
right now that's
descending,
resonating
but
with
this is a head
Gen
and shoulders,
Zs?
so
I
that's
know
bullish
millennials
and
get
that's
a lot of
bullish.
perhaps blame for the evolving trends, but Gen Z is, I think, such an important, really cohort to focus on.
We're gonna find out. We got a
it's
triple
huge driver
top,
for
quad
sure.
top.
Thanks for having me on.
If you can
we've
count to
seen all
four,
the
you might make a
interesting
little bit
trends here,
more.
from Gen Z
It
and
needs to
millennials.
break out now,
One of the main
I
things that
think.
is really interesting is that in the last couple of years, obviously fintechs and digital banks have done really well and have owned like a huge portion of new account openings. But in the last year and a half or so, it looks like things have slipped there a little bit. And I think part of the reason
And I got
is
a
that
double confirmation
many of
right here.
The first generation of digital
There we
banks,
go. See?
fintechs, a clean UX, simple experience. But these younger generations are looking for more than what most of them are able to offer.
I have to try out my new chord progression here on this next song.
Budgeting tools,
No.
subscription management, virtual cards, things that give like a more proactive.
Well, if this thing don't
involvement
do
in
something real
finances.
fast, I'm going to get out with a little bit of
So if
profit.
we kind of look at, what we're looking for in the younger demo, this next gen demo, combined with how
We're at
we got
$5.20.
here, has it been more marketing that has led us to some of these different apps?
We're at
or
$5.40.
Has it been, I would think of a younger millennial
$5.70.
or Gen Z.
There it
maybe
is.
Their entire life since they were children, they've been on the phone. Is some of it just going with what was available? And so if some of these companies you talk about were first to market, are now adding different functionality.
$5.80.
They already have the consumer, just keeping them. Is that
Does anybody have any questions? $6.
I think there's multi-step to a complicated story where, I think it was the first generation of fintechs and digital banks. It was kind of their game to lose, where they were gaining traction. But with Gen Z, I think they're expecting more than what that first generation was able to offer with just no fees and a clean.
I don't know how he does it.
Check, sort of the things that were originally
But he did it.
people to the digital banks and the neobanks. And so it'll be very interesting to see if that trend reverses.
$5.90
is able to meet their needs with some of these modern tools because they expect
$6.
a lot more than what maybe baby boomers, Gen X expected of banking.
Come on, give
banking
me more.
Has been overall a bit
I got
slower to
$5.90.
catch on to, really
$6.20.
strong mobile apps, really strong digital experiences in places that the new innovators have excelled. But I think their needs go deeper. They need credit monitoring. They need help with their taxes. They need additional services that
We're in between the.
some have kind of done a good job of adding, and some are still struggling to add in both the digital banks and in the kind of traditional banks.
Okay, and so digital
$6.80.
because we've seen some ground lost
That's
recently. Why do you think that is perhaps maybe overlooked and not necessarily a huge driver of right now what we're seeing with this younger demographic?
From Washboardjim, 3
I
white
don't
soldiers.
know the answer, but there's some really cool information out there from Ron Shevlin with Cornerstone Advisors. He has a theory that
$5.90,
some of these
$6.80.
people, the Gen Z folks look at some of these apps and think, oh, that's kind of a millennial
And
app.
$7.50.
And they're looking for something different.
$7.70.
But we're seeing on our side a lot of demand
So the last
for
one now.
more innovative, more involved financial tools, and so specifically, AI being able to personalize the experience for younger audiences is something that we're really excited about. We're seeing a lot of pull from embedding budgeting inside of your banking experience, which is something that is I think new and hasn't been possible for a long time. So we're excited to see how that develops.
Okay, so if we kind of combine all the things that you're saying and think about some of the things that are wanted or desired, particularly around budgeting,
Gosh,
and a little bit
$7.90.
more beyond
Shit.
this early stage, fintech, they were just first to market. I think about also, some of the companies that work in this space, like the Rockets, advertising through media like podcasts and stuff, trying to reach target demos that way. And it sounds like a lot of the things that what you guys are doing is in that same realm with budget management.
Hickory dickory dock,
And so,
the
if
mouse
I start
run
to
up
think
the
about
clock.
it, are the younger demographics more comfortable switching between a bunch of different apps for this, or would they much prefer it all in one place because they already got all these subscriptions, they got so many things that we're managing? AI might help with that, but if you can offer more, seems like an advantage, right?
100%. Yeah, I think all of the banking apps out there realize that share of wallet is the name of the game, and if they can win over more of their customers' business, all of their economics work better. I think we went through a period where best of breed was the strategy, where millennials, Gen Xers, we didn't mind signing up for a few different apps, bolting on a budgeting reporting tool on top of our bank account, our spending cards, a few different credit cards.
This is how they
there's been
do
some
it.
pullback from that, where you lose the plot if you split your finances across too many apps. And so we're definitely seeing an increasing number of people that are saying, can we just consolidate? And it's certainly what the financial institutions want as well. Certainly, the younger audiences are comfortable. They have the ability to, manage several different apps. But there's I think a reticence to have that complexity as they try to maintain a clear picture of their finances.
Okay, I am curious because, of course, at Crew you do specialize in these various, integrated budgeting tools,
it.
essentially, how you're able to, integrate AI, but also make this, obviously applicable to the younger demographic that says, starts to millennial, which is something I love because I know that is like their greatest insult. But hey, I take it as a compliment as a millennial myself.
Same, yeah. One of the funniest things for me as like a millennial is
in the valley for me someday.
for budgeting. So, TikTok, you've seen trending videos on cash stuffing, which is,
Did
been
you take it,
around
Randy?
since, the 50s or something. And I think part of that is just that life is very expensive.
I'm hot today, I'm telling you, I'm on fire.
Coming to terms with that and feeling a bit out of control. It's never been easier to spend money that you don't have on BNPLs and that sort of thing. And so I think as they are looking for solutions to figure out, like, how can I get back in control, cash stuffing and kind of the old school, like, let me put the money into the budget and then spend from the budget is starting to gain some ground again, which I think is like a really great way for people to stay in control of their finances.
Gentry, we were talking about some different fashion trends that are maybe coming back at the top of the show. I'm not sure if you caught, but as someone who's running a business within fintech right now and is looking at the younger demo and perhaps learning from them as much as anything, what are some of the older demographics maybe aren't doing as much as millennials and Gen Z are right now that you envision becoming more agnostic across demos in the next couple of years?
Oh, it's a good question. Hard to predict where the older generations are going to shift their behavior, but I do think that there's a trend towards having more control over your subscriptions, your digital spending. We're actually seeing really great interest across generations here. Our median age at Crew is 40. We have different channels that are trending much younger, some that are trending, more millennial, Gen X. Baby boomers we see every once in a while, and it's interesting to see how those trends kind of span.
$8.90, and I got out way too early.
There's opportunity for people
So I
across all
left
generations to take better control of their finances, and we're
$420 on the table.
Yeah, and it's definitely been an exciting space to follow and watch it evolve in real time, as it will, I'm sure, continue to evolve very rapidly before our eyes. But we so appreciate it and really great insight on right now what we're seeing shaping the overall banking system. So thank you so much, Gentry Davies, CEO and founder of Crew. Now, coming up next, we'll dive into the state of small and mid-sized businesses and what really we're seeing from some of these smaller players, which are diverging from their larger counterparts.
I don't know how he does it. $9.60. $9.80. God darn it! Now I'm really pissed.
Believe me,
now they're
when it comes to
10.20.
investing, you'll love Carl's Way. Take a left here, please.
But there's a...
Carl's Way is the best way.
Is it? At Schwab, how I choose to invest is up to me.
Exactly. I can invest and trade on my own.
Yes, and I let them manage some investments for me too.
Let's move on, shall we? No can do.
I'll get out here.
10:30.
Where are you going?
Schwab.
No.
Schwab, a modern approach to wealth management. Stay connected to what moves markets. Download the Schwab Network app and stream live coverage wherever you are.
Morning Movers brings traders the biggest headlines to start the day, from volatile overnight swings to the earliest analyst calls. Get your watch list ready. 8 a.m. Eastern, Morning Movers only on Schwab Network.
Welcome back to Next Gen Investing. It's now time to discuss the latest moves we're seeing from the sell side on Palo Alto Networks, which had a really strong report but saw some downside and seeing further right now revisions to the downside, unfortunately. So joining us now is Diane King-Hall, the host of Morning Movers, for some more insight on this note out of HSBC with a downgrade on Palo Alto Networks. So Diane, what is the latest here?
Well, heck.
So they've downgraded it to reduce from hold. So they're essentially making a call from their view to lighten up on Palo Alto. And you make a great point about how shares sold off despite doing better than expected. Clearly they didn't clear the bar far enough for Wall Street to justify, in terms of investor reaction, to justify for instance, the acquisition that they're making. So that also led to some of the pressure. What HSBC is saying, the issue for them is the stock's just too expensive, especially when you compare it to the sector. And they say it's tough to justify without essentially big upside surprises. So in other words, even when they did better than expected, just wasn't enough of a beat here. They see limited room for estimate upgrades. They've cut their long-term growth expectations for Palo Alto to 17%. That's down from 17.5%. So that's a small tweak, but basically the view is clearly that the stock is priced for perfection. Now, to be clear, not everyone is bearish on this one. The broader analyst group still leans by. The price targets, though, are all over the place, all the way down from 131. That's obviously not in the more of the bullish camp. The higher camp looks for all the way up to 255. Where you see bullish sentiment, you got Stifel, BMO, Piper Sandler, Cantor, Wedbush. They've all have bullish views on this one. Their targets cluster around 225 to 250. But again, HSBC out with their view is that this is a downgrade. They have moved to reduce from hold, so essentially a called layoff of Palo Alto. And you're seeing shares lower by 1% right now, guys.
Yeah, and adding to, unfortunately, some of the pessimism from yesterday's session. So I do think a really good point. It was a strong report, just not good enough. And right now, everyone's questioning valuations of some of these really high beta growth and tech names. And we're seeing that continuation a bit today. Obviously, Palo Alto Networks down about 1% on the session. But appreciate it to Diane King-Hall, host of Morning Movers, for all of that breakdown. Now I'd like to welcome in, though, Kara Hugensen, the Senior Vice President at Workplace Benefits at Principal Financial. So, Kara, thank you so much for joining us on this Friday. I'm really curious your thoughts here on some of the diverging trends we're seeing from small to mid-sized businesses, of course, versus a larger firm.
Great. Well, thanks for having me, Jenny. Excited to be here. We recently fielded the third in our annual series of research that takes a look at the sentiment of businesses between 10 and 10,000 employees. And what we saw is that, probably stating the obvious, that businesses are experiencing higher costs. 73% of businesses, in fact, are experiencing higher costs for materials, for supplies, and other expenses, and that's been happening for some period of time throughout.
I feel like I'm by myself
But where
today.
we see that divergence is between the smaller
You know what?
businesses and the larger
You ever feel
businesses.
lonely?
So with those higher expenses, larger businesses, to a greater extent, are passing those expenses on to their customers. In contrast, just over half, 51% of small businesses are passing along those increased expenses to their customers. So that is one of the places where we're seeing divergence.
Sounds like those rising costs are pretty persistent across the board in terms of a challenge that these different companies are facing. You talked a little bit about how they're mitigating that depending on the size, but I want to ask you about healthcare costs as well, which are another one of the top concerns for different businesses. I'm sure many larger companies, if they have the opportunity, are maybe taking more self-insurance path and taking some of that risk on. But is that even viable or reasonable for a smaller mid-sized firm, or what other strategies are they using?
Sure. Healthcare costs have been the #1 concern for most businesses throughout 2025. In fact, 62% of all businesses, and if you break that down, 66% of businesses that have fewer than 500 employees have listed the cost of healthcare as a significant or major concern in the information we gathered in October. there are alternatives. I think we're in an environment with healthcare where there are multiple approaches to providing healthcare coverage for employees, fully insured, self-insured, leveraging insurance for a portion of that self-insurance if costs exceed a certain threshold. We also are seeing
it just won't stop.
Uptake in what's called
I just can't stop winning.
Individual coverage health reimbursement accounts. So it really is an employer-provided dollar amount that allows the individual employees to go to the exchange or off exchange to purchase the individual policies that best meet an individual family or a person's needs, which can often provide some additional flexibility for not only the employee but also the employer. So the market, the health health coverage market, I should say, continues to evolve in an effort to help employers address that concern. Healthcare does remain the #1 benefit that employees seek and that employers offer in terms of their benefit program.
Okay, now to shift gears a bit, how do you see AI influencing, not only just workforce planning,
that was
but
so
also
perfect.
talent shortages for some of these SMBs?
Sure. So it's hard to go through any
I
conversation
can't tell you how,
included without talking about AI to some extent.
I've always been involved with adrenaline rushes,
companies that either already are embracing
everything I've done
artificial
ever since I was
intelligence or expect
old
to
enough
do
to
so in the next 12 months.
play
60%
baseball.
of those companies expect that employee wages are going to increase, and 79% expect
Basketball,
staffing to increase
boxing.
or remain neutral. So that point is really
I wish I'd have had
to a lot of the
that same
conversation
adrenaline
that we hear
drive
on
when it come to
daily basis
learning
around
English
AI
and
replacing the human worker.
reading books.
But it does align with the broader data that we're seeing in our own data and across the market that really overall staffing levels have remained.
I wish I
pretty
became,
stable
was
throughout
more academic.
2025. In terms of divergence between smaller and larger businesses, we do see a little bit of divergence around AI between the size of company. So if we look at those
Growing up,
larger businesses, we're seeing
took it more
them
serious.
use AI as a force
But
for expansion. So they're doing hiring.
I was a party
they are
kid.
seeing pay increases and expecting that, given the productivity gains that they are experiencing from the early deployment of artificial intelligence. In contrast, smaller businesses, as they use artificial intelligence, really are using it more as an efficiency tool, looking to do the same or maybe a little bit more with do the same amount of productivity with the same amount, not saying that correctly, more productivity with less staff, or the same amount of staff is the better way to think of that.
Well, that last part may tie into my last question then. Optimism, I think I saw, was like the 3rd lowest it's been post-COVID. What are employers, or what can they do? What are you hearing they're trying to do to maybe boost some of that confidence, despite what the numbers say, things being relatively stable, but also maybe get some of that specialized talent that's so sought after right now?
Sure, absolutely. So while we have
What?
seen with this most
You gotta be
recent
fucking
information
kidding
that
me.
the overall index is at the 3rd lowest point over the
God
last
darn
5
it.
years.
What in the
there
heck just
still is
happened?
Optimism on the part of businesses. So in aggregate, businesses do expect to grow. In fact,
You gotta be fucking
62%
kidding
of
me.
businesses expect to grow in the coming 12 months. And as part of that growth, they are looking to increase their number of employees. They're looking.
Okay, so I think we may have lost Kara
What
here.
in
So
the-
appreciate, though, all of the wonderful takeaways here, especially on these SMBs, of course, diverging from what we're seeing from some of these large corporations. That's Hera Hoganson, Senior Vice President, Workplace Management at Principal Financial. Now, coming up next, it's time for Under 30. We are talking MGM, which is actually having a
You
really
gotta
strong
be
session
fucking
despite being downgraded to neutral.
Unbelievable. I'm having the best day of my life. Had some fact. Jumped in the SPX, oh yeah. Got in at $5 and bought more $390. And it just bounds real fast. I'm so pissed that I did not vote. Can you imagine that? That would have been $6,000 freaking $9,000.
Anytime, anywhere, free on SchwabNetwork.com.
Morning movers, be the first to find out what's shaping early
Unbelievable.
market action. Tech check, options corner, futures focus.
You gotta be
Technical
frickin'.
analysis. Morning movers covers it all. Grab your coffee
Oh
and tune
my
in every trading day at 8 a.m. Eastern, only on Schwab.
No.
Stay connected to the market with Schwab Network.
Tune in 24 hours, 7 days a week on SchwabNetwork.com.
You gotta be
And on
kidding
all
me.
Streaming services. Schwab Network. Available anytime, anywhere on
Ugh.
any device for free.
Stay connected
Damn
to
it.
what moves markets. Download the Schwab Network app and get live coverage wherever you are.
I'm Nicole Petalides, live at the
Oh.
New York Stock Exchange, and this is the Watch List. Your midday view into the trends driving the markets with a sharp focus on technology, innovation, and
Are you
companies
serious?
leading the next wave of growth. Big
It's
movers,
$3,300.
real-time interviews, and insight from analysts, founders, and market voices you trust. The Watch List, 2 p.m.
Oh my
Eastern,
God.
only on Schwab Network.
Welcome back to Next Gen Investing.
I didn't
It's
see that
9:30,
coming.
And today we are looking
If I
at
did, I'd held
MGM
him.
downgraded to neutral at Citi, although shares are having a pretty nice day, all things considered. So joining us now
He
is Sam
started
Bada
playing
from
a song and then
Morning
sucker
Trade Live
bounce and go,
one of
"What?"
our close for the Schwab Network. So Sam, I mean, we're not really seeing price match this more downbeat tone today. So walk us
My
through what we're seeing out of
God.
Citi.
Right, that's what you're seeing here, actually 5.5% higher despite this downgrade coming out from the folks over at Citi. It's actually just interesting if you look at the chart for MGM. It did have a nice run up actually off the back of the April lows there, but it has started to come off since around September here. It's down around 6 or so percent year to date. And now, obviously, as you mentioned, we have had this Citi analyst downgrading MGM to neutral from buy with a price target now of 35.
Oh, you wouldn't believe that.
However, from 47.50, and this came after assuming coverage of the name. They're saying that basically this company faces pressure in Las Vegas and uncertainty regarding the promotional environment in its regional markets. Now, these regional markets do actually refer to the casinos outside of Vegas. So you're talking about some of the areas like Detroit, Mississippi, Maryland, Ohio, etc. But Citi believes that the regional concerns are offsetting the company's success over in Macau. Now, just to give you an idea here of Macau, obviously this is where a lot of these casino operators, these resorts do see a lot of strength coming from the Chinese market, because this is obviously a place where a lot of the mainland Chinese consumers do like to go to participate in some of this gaming. This is where they pull in some fairly substantial revenues and is really seen as a bright spot within their business. So Citi does acknowledge that MGM China, the Macau operations have been performing quite well. The demand in Macau has been rebounding, particularly off the back of what we saw with 3 years of zero COVID. And MGM has been growing market share there because, of course, it does compete with the likes of Las Vegas Sands, Wynn as well. Suffice to say, actually, both of those names are up today as well. So we're seeing some gains across the board. But the Vegas business, which seems to be the concern here, is the company's biggest and historically most profitable segment. But the pressure that they seem to be referring to is around the visitor spend, the room rates, the table results, the costs.
Were you in that one, Randy?
Here as well. I'm just looking across their latest earnings report, which came out at the back end of October. And actually, if you take a look at the Las Vegas Strip Resorts revenue
On the bounce?
$2 billion, which was down from the 2.1 that was a year earlier, down 7%, primarily due to the room remodel over at one of their resorts, as well as a decrease in the average spend per room, the decrease in table games in percentage, and also food and beverage revenue as well. Now, when you compare that with what they saw in China, for instance, they actually pulled in $1.1 billion in revenue there, which was up 17%. Thanks to a lot of the main floor table games and other revenues that they're pulling in from that particular market. So basically what they're saying is that the weakness that they're seeing here in this market in the US, particularly in Vegas, not managing to offset the strength that we're seeing in some of those key other markets internationally. But it's not just Citi. If you take a look back at the last few weeks, actually you had Stifel lowering the price target as well, keeping a buy rating, however, on the shares. They basically said that the results that we saw, which I just ran you through, were nothing to write home about. They've actually cited some of the summer weakness. They do say that this should have been well telegraphed by now and properly actually priced into the shares, but then the analyst basically says, I guess that's just not the case, though. So they're also pointing to the fact that, you know, while things might not improve overnight, they do see it still compelling risk reward. You need to be a patient investor as well. And then you've also had Citi actually previously lowering the firm's price target. So this seems to be, once again, looking a little bit more bearish on this name just because of the softness we're obviously seeing in Vegas, guys.
Yeah, and I do think that great take on what we're seeing, not only just here in Vegas, but also, of course, overseas in what is still a hugely important aspect to the overall tourism business, which is Macau, and some of the things we're seeing out of course, the Asia-Pacific region. So we so appreciate it, Sam, for all the breakdown on this Friday. Of course, host for the Schwab Network. And before we go, Alex, as we do check in on markets, we are closing on a pretty bright spot here.
You know what's pretty amazing is this feels like a market that is unraveled, right? If we were to close right here, this is basically where we closed on Wednesday. It would be higher than where we closed on Tuesday for the S&P 500. In the case of the NASDAQ, that doesn't apply. It would need a little bit more help to get back there, but we really haven't gone anywhere.
That's actually a really good way to frame it because yesterday felt pretty substantial, obviously the erasing of the gains, but closing things out on a week-to-day basis lower, but at least easing some of that pain in real time. That'll do it for us for Next Gen for this week and for this Friday. We have coming up next.
I'm feeling good about the market.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. The Platforms and Tools webcasts are designed to help you broaden your knowledge of platform features and resources available from Schwab. You'll learn tips and tricks to help navigate Schwab.com, Thinkorswim, and mobile-based platforms. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand.
I sold the last one at $7.50.
Schwab.com/coaching and start learning today.
I had 3 of them at $4.45.
Where real-time market coverage.
You have any clue how much money that would have been?
From the opening bell to the closing bell, we've got you covered.
Get inside.
I heard when the VIX is at 26, that's the time to be swinging.
Rate of change in sales based
This
on the
morning.
guidance, but not the same rate of change on EPS.
Follow the biggest headlines.
Do you hear me?
Live analysis, breaking news, and sharp trade ideas minute by minute.
With shows built for action, we break it all down in real time with speed, accuracy, and precision.
I think
Yeah,
one
they
of the
weren't-
most
they weren't
important
cheap
things
today.
is you're making a play in a risk-defined way here going into earnings.
I mean, that gets me off of the headline. What,
Smart insights, action.
I gotta figure out what Trump team floats idea of selling NVIDIA H2 chips to China.
Schwab Network, streaming 24/7, any screen, anywhere, free. SchwabNetwork.com.
2025 kept investors on their toes. Now, get ready for the road ahead. Join Schwab's panel of experts on December 11th for 2026 Market Outlook, your guide to the forces shaping stocks, global markets, inflation, rates, and more. Hear from experts on where the markets may be headed, spot opportunities, and see what could drive your portfolio next year. Tune in on December 11th at 7 p.m. Eastern on Schwab Network.
I'm Nicole Pedalides at the New York Stock Exchange. Live interviews, market movers, and real-time coverage right from the floor. Subscribe now at schwabnetwork.com.
Good afternoon. Welcome to the Watch List. I'm Nicole Petalides. It's 2 p.m. Eastern Time. We're coming to you live from the floor of the New York Stock Exchange on the corner of Wall and Broad, where stocks are bouncing back after yesterday's big sell-off on heavy volume, which
That's what I was thinking, Magnificent. The liberals are going to say, well, Trump's,
back in April. Today, a different
we want the
picture.
market to
We're going
tank. And Trump comes
the
out with a
state
tweet.
of the AI trade as tech
He's
stocks
pumping the market.
continue to experience volatility. Will AI capex begin to weigh on the overall market? We've also
He got some smart people that work with him, that's for sure.
New York Fed President John
I
Williams
can't believe
says
that,
he
man.
sees
I'm just
room
sitting there
for a
going,
Fed cut
shit.
in the near term. That helped to turn this market around. People like to hear a cut in December. And our panel is standing by to take a look at those retail names. Gap, Ross stores,
I mean,
and
it's
more ahead of the holiday shopping season. Which ones may
I'm
fare
sitting here.
best? In the meantime, here's a look. The Dow was up over
I can't find, I mean, all the rooms that I'm looking at are just bored as hell. And I'm sitting here pumping the shit out of the market, saying I'm having a great day.
Industrial average is up 755 points at 46,507, up 1.5%. The S&P's up 1.5% at 6640. The Nasdaq's up 1.5% at 24,414, and the small caps, the Russell.
I went through this speech yesterday.
Up 3%, big move.
I mean, I sat there and I told everybody, I said, don't be scared of this market right now, because tomorrow could be one of the best days that we've had.
And the 10-year bond yield creeps a little higher, is at 408. 84,665 on Bitcoin.
And to get that top watch list going, because you just don't know, I mean.
And under 85,000 has been a big part of the conversation.
Bubble this, bubble that, screw them.
Taking a look at some of the big picture stories. I mean, it's definitely the rate stories, the AI story, Bitcoin, private credit, right? And now we're hearing that NVIDIA may be able to sell some chips to China. But you're looking at something, a piece of good news when it comes to Eli Lilly.
Yeah, with all the news today, Nicole, breaking right now about selling H200 chips to China, NVIDIA. So we'll watch that. I'm sure you'll cover it as it breaks. But Eli Lilly, first drug maker to cross the $1 trillion market capitalization. Why did it do it? Weight loss, diabetes drugs. It's the two names, Zepbound and Mounjaro. Plus, the analysts really like the pipeline.
I gotta get some water.
Drugs that they have coming out. So Eli Lilly, it's right around, if my calculations are correct, Nicole, it's right around $1,060.
$600, I could have had like 9,000.
It's right, very close to there, within a couple pennies right now. But this is the popularity of weight loss and diabetes drugs that Lilly has, Nicole.
I'm sitting here strumming.
And we take a look.
All of a sudden I see $25. Are you kidding me?
You know, sometimes people don't want to hold position. Next week, Monday, is the MSCI rebalance. I know the guys here are getting ready for some heavy lifting on Monday, but it's also short and trading.
And it's not the time I want to be in the market. It's 2 o'clock Eastern time. This is when it really sucks.
Here's what it is. Yes, it is a short trading week, but Tuesday and Wednesday of next week, Nicole, in terms of economic data, we're going to get 4 the top 6 economic data points of the month. We already got payrolls from before, but we're going to get on Tuesday, we're going to get the retail sales data that's delayed. We'll also get consumer confidence on Tuesday. But then Wednesday, right before the holiday, it'll be a data dump. It'll be jobless claims, then it'll be GDP, durable goods, and personal income and outlays. So we'll get that PCE data that is so important in inflation. Why is that important? Because before the next Fed meeting, which is 19 days away, we are not going to get another
Watching
CPI
the video.
report. So this PCE will be vital to set the tone for the Fed going forward. So yeah, next week is a short week, but it's packed with top economic data. 4 of the top 6 names.
Look, and we saw third quarter earnings from NVIDIA, stellar, incredible, as Jensen Huang himself described them. I mean, better than expected outlook. And all of that was sans China, ex-China. And now we're getting this Bloomberg report that you and I touched on about the idea that you may be getting the talks, early talks, about getting those H200 chips to China from NVIDIA. That could really be a cherry on a cupcake.
Well, here's what it is. It's definitely going to be something that the U.S. will use to make other trade deals, right? That'll be the cherry on top. Think about this. All the things that China can buy. Number one, grains. They promised to buy grains. They're not buying at the pace they thought. How about Boeing planes? You think they might not have an order of those? In the backup, there's a lot of things that can really turn the trade deficit around for the U.S. if the probably luring point is those H200 chips from NVIDIA, Nicole.
I'll tell you, this is a nice move for NVIDIA now here. Because now we're at 183 and change. We're up 1.7%.
You look hot today
Our
too,
low
baby.
Today was 172.
Yesterday
and
you look
change. So
much hotter.
It's a nice, that's a $10 move from bottom to top here.
Yeah.
Every single day. Yeah, Kevin Haynes, great to see you. Let's take a look at the bigger picture. Rob Almeida's with us, Global Investment Strategist, MFS Investment Management. Some of your thoughts on the market action we've been seeing. I know people are waiting for this bell to ring today. Tell me about this wild ride, and how does it make you feel going forward?
Sure. Well, unlike hard sciences,
If I could feel you, I'd go a lot
there are no facts,
further.
there are no laws
Forward.
in soft science, economics, finance. It's ultimately all about profits and cash flows. And so what I think investors have been discounting here over the last couple of years is an avalanche of future cash flows and profits, obviously from AI companies and other technologies, which you were just talking about. But on the other side of that, I think what perhaps maybe some investors are forgetting about is we're shifting from a paradigm of structurally low cost, capital, labor, goods, et cetera. And what's happened since 2022? Just the opposite. All those things have moved up, and I don't think they're going to move lower. And at the same time now, AI and other technologies invite competition. So looking out into the future, I think there might be a little bit perhaps too much optimism from a broad standpoint about companies' ability to cut costs and sustain revenues and ultimately profits in the face of what is
Double top.
going to be, and already is actually, just a very different, more challenged operating environment.
And then what do you think about the retail investor? How are they behaving? What's the mindset? And what would you advise them?
Sure. I think a little bit more caution here and a little bit more discretion. What you're seeing right now is a pattern that plays out through cycles. So this isn't new, which is what tends to happen is investors behave on their worst financial instincts, right? We love to buy when prices are high and we sell when prices are low. And I think that's actually a function of our biological programming, right? It's a dopamine effect. You run towards something that tastes good or feels good, and we run away from things that smell funny or are dangerous. And as that parallels into financial markets, what you see over time is retail investors, specifically households, tend to increase their buying pattern as prices elevate and decrease when prices are falling. Or said differently, they're attracted to high trailing returns and repelled by low trailing returns. And that's a dangerous playbook.
Look, today, as you know, there's a lot of cyclical spend, and in fact, they're, you know, sprinting and making all this capex and spending. But the truth is, they're making small numbers of sales in between, and not necessarily justifying the big capex spend. However, the AI trade, maybe you call it a tough month or bubble, but it may be down but not burst or not out, because you're a believer that this will help to keep things propped up, right?
Well, I think maybe let's take a step back. So I think investors are perhaps assuming that this technology, which I'll just affectionately refer to it as Internet 3.0, will resemble the profit characteristics of Internet 2.0. So let's assume that the technology works, which I think is probably a pretty good assumption. Let's assume that you're going to have some profitable enterprises that are delivering that technology, but what's a differentiator? So during Internet 2.0, right, so in the mid-2000s into 2010s, what you had was network effects. So technology companies attacking massive, large profit pools. So what do technologies do? Or what does technology companies do? They remove a friction in society. So as you remove that friction away, wealth or margin or profits get transferred. So you saw a huge profit pool transfer, places like advertising, retailing, etc. That was transferred to a few number of winners. This technology, I think, is a little bit more like other GPTs, whether it was, you know, railroads 150 years ago, electricity 100 years ago, automobiles, radios, televisions. You know, all these products ultimately became fairly ubiquitous and undifferentiated with GDP-like margin structures. So as we take a step back, what's playing out is to build this technology is far more expensive than what I think these companies thought, which is why they're now tapping debt markets, why they're tapping special purpose financing vehicles, why free cash flow levels are falling, and why they're not really expensive stocks like they were a year or two back. However, on the flip side, what if this technology is actually a bit more
I'm gonna go get my water and I'll be right
than
back.
those other technologies that I mentioned, which is vastly different than Internet
Did you get out, Randy?
2.0. So that, I think, is the risk for AI investors. Not that the technology won't work, but that what's going to be different about it. And ultimately, it's that differentiation that drives pricing power, which is what drives free cash flow and what ultimately drives stock prices.
So where's the opportunity for buyers who want to make money, or people who want to make money in the market? Is it something that's sold off and you're buying the dip? Is it a sector? Is it a certain stock or type of stock? What's the advice here for folks? Because this is quite an opportunity here, maybe.
Yeah, if I can give you two answers. So high level, it's always a company that has a product or service that is a little bit different, that drives their economic moat, and that's sustainable over time. Those are generally good businesses with above average returns on capital that drives above average stock prices. That's my sort of generic evergreen answer. More direct to your question, though, I think in 2026, we transition away from the immediate suppliers of AI power generation, e.g. chips, which you were chatting about in the prior segment. And I think it transfers to the bottleneck. So where's the bottleneck? The bottleneck is, if we zoom out,
who is this guy?
Beginning when the Berlin Wall came down, almost 40 years ago, and then accelerating post 2008 with QE, the United States became an asset-light company. We stopped building houses. We stopped building manufacturing plants. So where's the bottleneck today? So now you have this emerging technology that feels like it came out of nowhere.
You're muted. I don't want to listen to your bull crap right now. I don't want to hear about your stories. Nicole, get rid of him. Before I cut you off. These options are expensive. That's no doubt. Oh, well, I'm way in the money. Let's move these down a little bit to the 6660s. I'm gonna get my water and I'll be right back. 610, I didn't jump in on them, I should have. The 6660s. Because we got an ascending triangle set up right here. Rick looks good today. Look at Rick. Damn. Boy, you're looking good lately. Look, he's got them bedroom eyes looking at Nicole.
For now, we are up very high off of those initial lows we saw today near 173. We've reclaimed that 180 level. That's a key supportive point here. It's hard to say. NVIDIA could likely be one of the first places you start to see that AI trade start to unwind here. So certainly one worth watching here, a pivotal cornerstone of the market here. At least one trader seems to feel some positivity here. A very large bullish opening trade.
I am.
In our
There's your drop
here,
right there.
Plus 3,212, December 26th, 180 strike
Got it.
call at a 920 debit here. So what that
$5.60.
$2.9 million debit paid here, 35 days out for this particular trade. This did seem to be an opening trade. The volume was greater than the overall open interest in this particular strike here. Max profit, as is the case with long calls always, is unlimited here. Max losses are debit paid of $2.9 million. Break even, 189.20, about 5% or so to the upside here. Expected move for that time horizon for our option series here comes in at about plus or minus 13%. So well within the range of possibilities here to see some appreciation here. Overall activity for NVIDIA today is elevated. The sizzle comes in at 2.1. Total volume of this trade, just a drop in the bucket, not even 0.1% of our total options volume of 4.2 million.
Wow. I mean, obviously, this NVIDIA story is going to keep developing. I know that NVIDIA hasn't yet
We're at 840.
of maybe getting
Triple
this chip over
top.
to China, and really has been sort of planning that's not in the big story at the moment. It's all about just the incredible demand they have seen for the Blackwell chips. So this really could bring us more optimism. How about a name like Lennar, which is trading higher, still down though this year? Some of your thoughts.
Right. So home builders as a group on the move today, moving higher.
Come on,
Well,
break.
It seems like perhaps
Break it,
the
break it,
prospects
break it.
for interest rate cuts are improving today. Fed President Williams said he sees room for adjustment in the
So we got an ascending triangle here. I got in on this knife right here.
Fed Watch tool was mid
At 560.
It's been a volatile reading lately, though, kind of whipsaws back and
And
forth.
this is called an ascending triangle. This is what I called out when we were up here.
Related to housing, mortgages,
It was coming back up, and then it pulled back right there. Boom.
Sure. One other headline: the co-CEO.
So I could sell it at the triple top. That's a triple top, but this is a bullish pattern.
We started
So
out this week with a
this is 1, 2, 3. If you can count to 3, you can trade with me.
Today. Now the trade in question here, a very large trade once again, minus 4,000, December 5th, 150 strike straddle at a 27.95 net credit here. So meaning that they're selling equal quantities of calls and puts at the same strike to give us
There it is.
price. This is very heavily weighted toward one side, though here, weighted toward the put side here.
So that's an ascending triangle.
For about
And you know that's bullish.
Of our $1.1 million total credit received here. So a very large trade here. This trade would be bullish. It would want to get as near as possible to that 150 level at expiration for max profit here. Max profit would be that credit received as well there. So anyway, we can see that 14 days out, our break-evens, we have 2 break-evens. If it gets too high, it will start to lose money once again, but 122.05, 177.95 here. The expected move range about 8.6% as well. A quick anecdotal extra note here, there was a very interesting large closing trade as well in Lennar. Minus 11,000, November 28th, 150 strike put at a 26.96 average debit and a corresponding amount of buying back calls, it seems like here. So a $29.6 million credit received here. Seems like it's probably a closing trade here, but really, you know, both of these strikes here, these November 28th 150 calls and puts, there's still 100,000 contracts of open interest at both of them, even if you subtract today's trading here. So very, very large.
We're 1090
here. If all these trades were put together, they were 51% of the total market for this name today.
You know, once these mortgage rates move too, I think that'll be such a big story, Rick. I know you're following them. You know, this past week, we had the 3rd week in a row of gains. Where mortgage rates moved higher, but all the banks continue to come on and talk about a lower rate environment, and that's enough. Every time it drops even a little bit, we start to see more mortgage apps and more, you know, refinancing, and that really gets things moving too in the housing world. Last but not least, let's talk about nuclear energy. Constellation Energy is a name you're focusing on. You did find a bearish trade right now. It's down today over 2%. Some of your thoughts?
Yes, you know, big subject lately is this whole nuclear energy idea here. Constellation specifically had some leadership.
Go and sell the other one here if this don't break real fast like.
Stood out that was extraordinary in any kind of you know, negative way or anything like that. They do have a significant portfolio of nuclear power plants, though. These AI and data centers, as you said,
$11. I sold one at 11.
Power. The government's making moves toward acquiring stake in uranium areas. So there's I
might sell the other one because I'm up
area right now.
Almost 100%.
Also got finalized a $1 billion loan from the Department of Energy for a new clean energy facility as well. But remember, though, these legislative changes can cut both ways. It can all change in the blink of an eye. So a sector to certainly be aware of potential changes here for this situation. But anyway, the trade itself, plus 1,058 December 19th, 340 strike puts at a 21.99 average debit. So a $2.3 million opening bearish play here, 28 days to expiration. The break even for this one would be about 318.01, so 6% to the downside or so, quite close to what we see for the
We got to hold to
move.
21.
Moves only about plus or minus 6.4% for this option series here. So when we think about this, some trader is making a very large outsized bet in a name that doesn't typically see huge trading here on a bigger than expected move within the next month or so here. So if we were to see this trade not work out, that $2.3 million debit paid would be the max loss here. The sizzle, 1.9 suggests elevated trading activity here. This single trade was about 7.8% of the total volume in this name today.
Okay. Rick DeCat's, great to see you. Thank you so much. Have a great
Yippee-yay.
weekend. Thank you for Options Corner, real options trades that we're seeing here on Wall Street and all the breaking news. In the meantime, and we still have the news. What happens? They're floating the idea of sending some NVIDIA chips to China. It's certainly not a done deal. It may not turn out to be anything, but it's been a discussion in Washington, according to Bloomberg. All right, coming up next, we'll take a closer look at the markets and what the Fed may do next, because that will
people
draw
on
markets
YouTube,
one way or the
I'm
other.
going to show you
Of
something
course,
here.
John Williams has been making comments today about a further cut making some sense. There's room for a near-term cut. That brought some optimism to the market.
I'm about ready. I
What do
got
you
two
guys
contracts
think? All
at
right,
560.
some thoughts. We'll be right back.
And I want to see if we have another spike here.
Kick off the morning with the data and the decisions moving markets. Morning Trade Live.
Not too many people will tell you about this, what I'm getting ready to tell you. Get your pencil and paper out.
Growth to inflation prints and geopolitical risk. Smart, fast, and always live from Wall Street to your screen. Morning Trade Live, where the markets meet the macro, weekdays at 10 a.m. Eastern on Schwab Network.
Whether you're an experienced investor,
I'd like to get
or just
15
getting
out of
started,
this.
Charles
Well, I have a
Schwab
goal to hit
Right for you.
666.
Do you like using
Zero.
charts when analyzing your stocks?
And we're about there.
Analysis webcast series breaks down different charting techniques.
So there's two
like
things you want to
trend
know.
analysis, price patterns, moving averages,
Before you get in a
oscillators,
trade,
and
know when
much
you're going to
more.
get out.
Best of all, you can ask questions directly to an education coach. It's interactive learning at its finest. Tune in live or on demand. Head over to schwab.com.
This is what I want to teach you here.
Start learning today.
So I identified this as an ascending triangle. That's when your resistance level and you have higher lows. So when this thing dipped down here
Green, and I track
on this one candle,
identifying who's buying.
it was a solid red candle and I jumped in right at the bottom. That's a double bottom off that right there.
Trading at Schwab is powered by Ameritrade.
And that was a double bottom from that right there. Now this is a bullish pattern.
Get an expanding library
Because you have higher
of
lows.
online videos, webcasts, articles, courses, and more. All crafted just for
And
traders.
I want us to keep it above the
And with guided
21.
learning paths
So in
stacked
every
with content curated to
pattern,
fit your unique
there's a
goals.
sweet
You can
spot.
spend less time searching and more time learning.
And it's on the number 3.
Trade brilliantly.
So
with
we
Schwab.
come up here to a triple top. This is a formation of an ascending triangle, which is a bullish pattern.
Well, welcome back and a happy Friday to
That's
you.
the
I'm Nicole
sweet spot.
Pedaloides. This is
That's
the
where it
Watch
has to
After Live on
break.
the floor of the New York
If it
Stock
don't break,
Exchange.
it could
I
come
have a
back
few
down
market
and do a
movers
double
for you.
bottom
Watching
down
the
here.
home building stocks here today.
And
In
be
fact,
back
they've
down
been moving
here.
higher. We did have New York Fed President John Williams say that he sees
And that could be a possibility for another entry.
So names like
But that's called a
Jordan,
Darvis
Pulte,
box.
Lennar, Toll
But
Brothers. have
this
been
here
gaining.
is
You
more
can see them up
bullish.
6 and 7%, 5%.
That's
Some
an
great
ascending
gains
triangle.
during the session. And
So in that
Vicor
1,
Corp are
2,
also higher after
3,
Williams'
if you can count to 3, you can trade with me.
We're looking at
And that's your
Palo Alto
sweet
Networks,
spot. And
which
anybody knows what a
is
sweet
moving
spot
today.
is.
The earnings
If you play
failed
baseball,
to impress
it's like a
Wall
baseball
Street.
bat.
We saw the down arrows earlier today for Palo Alto, and we do see some downgrades. HSBC
And this
downgraded
could come
shares
down and touch that
hold,
triple
while
top
keeping the price target at
and then bounce up and have a
$157.
new
The analyst
breakout.
believes the stock's risk reward is turning negative,
So I'm
with
still in the
limited potential
trade.
for upward
If I go
revisions
below
for
this line, I'm going to
26
sell
and
it.
27, and you can see it down right now about 0.5%. So glad Ben Emmons is with us, CIO, founder of
But
FedWatch.
always when they
Advisors,
break
joining
out, they'll pull
today.
back
So
to the
we can make
previous
sense of
resistance.
lots of things going on. I have a
And that
lot of
previous
questions.
resistance was
So
the triple
keep
top
the answers
off this
concise,
ascending
Ben
triangle.
Emmons. Let's start with because I really have a lot that I want to discuss.
So if you're setting stops, you'd set your stop right under
right
that resistance line.
So I started the day looking at gold,
A trailing
Bitcoin,
stop.
and the Nasdaq, and I noted that each of them had a top.
You don't want to set it above it.
First Bitcoin, then gold.
You want to
and
set
then
it
the
below
Nasdaq.
it.
And then we kind of see that we.
And then it could be just a fake out, and it could run back up.
Actually following through. So I feel this is a very fragile situation currently, Nicole. And yesterday's sudden sell-off that came out of nowhere, and it's still unexplained exactly why that is.
But that's
Just
called
gives
an
you the
ascending
sense that
triangle.
People are looking for any kind of rebound currently to take some profit, and then sit on the sidelines, opposed to this optimism that we had weeks before of everybody, gung ho on AI. I think that seems to be really changed right now.
Okay. What did you think about Tom Lee's comment that maybe there was a software bug in
An
one
ascending triangle is a bullish chart pattern that
and
typically signifies a continuation of an uptrend. It is formed by a horizontal resistance line at the top of the rising trend line connecting higher lows at the bottom. The breakout above the horizontal resistance.
I know that sometimes in the crypto space,
Ideally,
particularly that you have certain
with
exchanges
an increase in volume, signals a potential continuation of a bullish move.
And he said actually in an interview that it was within the exchange itself, so not even
1, 2, 3, boom.
Other platforms being quoted this particular
1, 2, 3,
one
boom.
stablecoin can have a ripple effect to the entire
1,
market.
2, 3,
That's
boom.
telling. I think
So that's
I would
your
think
sweet spot.
Is something to be mindful of. That
1,
seems to be that
2,
we have very
3,
big positions,
comes back down and
positions
still got
that
your
are
higher
suddenly
lows.
unwound because of one particular technical factor. So that again underscores, I think, this
And
vulnerability of
it
this
don't
market
become
that's come to the surface. So whether it actually happens
bearish
exactly
until
what
you get a
Tom
full
described
body
is an
candle
exponential,
below that
probably
higher
is
low.
right, but I look at the ripple effect. I think, wow, that's something to really keep
Then
in
you
mind.
really got to
From here,
worry.
we have to indeed see more
I got out of it
leverage
at 10
positions
bucks.
to feel more comfortable where we're heading from here.
We heard from Williams today, who said there's room for a near-term rate
That's
cut.
important to
I
know
mean,
too. Your body
Harris
might
has
start to
been
go down,
sort of on the fence,
but it's not a whole
really
body.
big on
A
the
whole
rate
body
cuts.
has
The
to
big
be
ones
below
are,
that
Myron and,
higher low.
Waller and Bowman.
Even if it was just a little bitty one.
If we hear, and the likelihood of the rate cut went up exponentially
I'd still
in
would
the last
wanna sell
24
it.
hours from 27% to 70% for December. If we get some clarity that we really are going to get a rate cut in December, do you think that just gives the market the boost it needs? Maybe the market just takes off from here to that date?
We're still above that.
It's notable how markets reacted today to
that resistance
news,
line.
A bit of a relief because I think it has been buggy markets too.
So if you get a whole body
Always
below that
started
resistance
somewhere
line,
after the press conference with Powell, and it went on with one Fed member after the other, sort of coming out
it
saying,
has to be a whole body
probably we don't have to cut rates next time and all that sort
before
of
it becomes
language.
bearish.
That one comment by Williams today, as in really the two words near term, that near term it could maybe cut again, just suddenly shifts the sentiment. So I'm not sure if this rate cut is actually really on the table so firmly that the futures market is just as skittish as the Bitcoin market is. Like there's not much liquidity there.
Now this is at 650 again. So I'm going to take a little break. I'm exhausted.
Here's a relief, let's rally.
Another thing is you don't want to overtrade.
The comments that are coming out of most of the voters is really about we don't need to cut right now, given that the inflation picture isn't exactly cooperating the way
More or
we'd
less
like
that,
to. And I think that's something
these
for
are my
investors to
moving
keep in mind.
averages. So these are like support levels. This is the 50 SMA and the 63.
We know that Japan has put in stimulus. The cabinet approved $135
So if I'd have waited and sold
billion
that thing,
in
we'd be at
economic stimulus.
$5.80 here.
So that yen carry
You know,
trade that
where my
crushed
entry
us
was.
once. Is that still out there?
Yeah, that's very much out there. That's a very large trade.
Now you're definitely bearish.
Back then in
Until
August
you hit,
2024,
maybe you want to
maybe
wait
to
for the
extend on
63 and bounce off the
put
63.
Right back on later, when we went into the fall of that year and even this year. So the yen being
I gotta
weaker
get some
means
water.
also the carry trade again becomes larger because people are borrowing yen, and they're selling yen as a result. So the intervention seems to be maybe potentially looming here. A lot of rhetoric out of Japan, and they're watching how much the yen is changing on the month, and we're about now 7 yen change. It needs to be about 10 yen change to see the actual intervention happen. But if it does happen, then I think there could be somewhat reversal of yen's strength. That would affect the carry trade, so to speak. But I think the markets is a little decoupled here in terms of yields. Because normally when you get like yields in Japan going up, treasury yields go up here too, and that hasn't happened. So I think that it's being looked at more like this is a Japanese domestic situation. But the carry trade is very large, so if they do intervene, I think they will affect the carry trade significantly.
And that hit tech stocks pretty hard last time. Okay, I have multiple questions, but I'm going in order because one thing I haven't talked a lot about is Venezuela and the U.S. positions that have been sort of noted for military buildup around Venezuela on the way to Venezuela. And I just saw on Bloomberg, U.S. warships actually cut off the path of a Russian tanker that was headed to Venezuela. Do we have something really brewing here? Are you worried about this? And what does that mean for an investor?
Yeah, that's another macro factor that's sort of in the background that suddenly can come to the forefront if it becomes really like a tense situation. Because that example you mentioned, that is some geopolitical tension right there, right? If military aircraft, cut off this tanker, this Russian tanker, that's obviously irks Russia, obviously, because they're trying to sell their oil to Venezuela, and this is really an issue that I think that could potentially upend a bit the oil market, so to speak, because what Trump is trying to do, President Trump, is to really try to eliminate the oil sales to other countries. But Russia has a lot of barrels, so if it could really take it off the market, it could lift oil prices sharply. So here too, something that's hanging in the background, doesn't really play markets really right now, but that's something to monitor. So yes, that would be of my worry.
The Bitcoin trade here, how low does it need to go here as the VIX has also surged? I mean, we saw the VIX this week up 30% at one point. There's definitely some nervousness in the market. And just when people were saying, I want to get into Bitcoin, gee, I really missed it. And if they were chasing it and they got so excited at 120 and 125, the regular investor got squashed. That's for sure. And institutions are selling off their positions there. Are they just building up cash, or are they not believing in Bitcoin anymore?
I think it's more cash building perhaps, but it certainly looks like a falling knife, really sharply now. So actually on that basis, it's sort of like, if you want to have an opportunity, it is.
Okay, we're back to resistance. 665313. The top of that ascending triangle.
That at some point this will bounce. No matter what the news will be around Bitcoin, that seems to be also overextended. Just like we rallied really hard on the AI trade and tech stocks, that look also overextended. So the market in this case is, I think, gotten to a point where perhaps some level is to be found here, or you just buy it and catch the knife and kind of see like, well, there's a big difference by 80,000 versus 125,000, with a future view that Bitcoin will continue to play a big role in the ecosystem. Now, one story that everybody's been watching, I think, is this encryption, meaning the use of Bitcoin could be limited because of stable coins and because of AI. Still to be seen. Bitcoin remains, I think, the bellwether, the benchmark in the crypto space. So it looks to me like a very oversold opportunity here for investors that have not bought Bitcoin.
That is the one thing that you said go for, because the other stuff you were more cautious on. Ben Emmons, it's great to see you. CIO, founder, FedWatch Advisors. Ben, thank you. That was a lot. We covered a lot of great stuff. Still ahead, the market. We're looking at the AI trade. Certainly, we know how heavily concentrated the major averages are on the Mag 7. Max Wasserman from Miramar Capital will weigh in on his thoughts on the Mag 7. And what about the other 493 names in the S&P 500? Let's find out what he thinks next.
sometimes, you know, you could have done better. Same goes for where you invest. Level up and invest smarter with Schwab.
Real-time market moves, earnings breakdowns, and trade-ready insights. Follow me on X at Sam_Vardis and connect with me on LinkedIn or Instagram for more.
Trading at Schwab is powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim desktop with robust charting and analysis.
880, baby.
Including over 400 technical studies.
And double bottom.
Tailor the platforms to your unique needs with nearly endless customization. And track market trends with up-to-the-minute news and insights. Trade brilliantly with Schwab.
Welcome back to the Watch List. I'm Nicole Petalides. We welcome in Max Wasserman, founder, senior portfolio manager at Miramar Capital, to talk about the market action. I know you have some names that you do like, but you know, there's the Mag 7 and then there's the other 493 names in the S&P 500. There's no doubt people love seeing the growth of those Mag 7 names. Well, are you seeing opportunities today with the sell-off? Would you be buying some of the names that have sold off?
Hi, Nicole. In terms of buying the big tech stocks, I think you have to wait. There's so much risk right now that's being predicated on liquidity. So you look at what's going on in the bond side of the market with the oracles and the credit spreads, and it's telling you that people are a little concerned because of the cash flow demands. So those large cap tech companies that can self-finance with their own cash flow, they'll have a better time than those companies that have to go to the market and raise a lot of bond, a lot of debt. So we think right now you're seeing a lot of chinks in the armor, and people are starting to reassess how they're being financed. So I don't think there's enough of a pullback to go back in or to really increase your positions in these large cap tech. I think right now you have to see where the market plays out, because this rally today is predicated on liquidity, which is the Fed's going to cut interest rates and keep providing it. But I think there's a lot of inherent risk at these valuations.
All right. Well, if there's so much inherent risk in the Mag 7,
Tell him to leave.
Then there's opportunity somewhere else. And you did note some defensive plays, some staples. Tell me about McDonald's, for example. What kind of role does that fill for an investor?
McDonald's
Well, you look
sucks.
at the markets, the haves and have-nots, and you're starting to see a lot of pressure, and you're even seeing trade downs with the people who have the has. I mean, Walmart's telling you that. But McDonald's, you think, you know, again, with inflation and everything, people are trading down and they're being much more value conscious, and that's where, if you look at the value...
McDonald's ain't no value stock, you idiot.
McDonald's is not only becoming a staple for them, but it's also a treat because people are feeling the pressure.
Ugh.
And you're going to see more of this because you're starting to see corporate America basically right-sizing, meaning they're starting to adjust the employment, where you're seeing announcements of layoffs every day. And McDonald's, we think, plays into that factor. And also...
When's the last time you ate at McDonald's?
Rates, we think will help alleviate the pain with the consumer. So McDonald's, we think, is a good trade for that. And we also think like a Home Depot, if interest rates were to come down...
You're an idiot.
...to stimulate the mortgage market. But so we like...
Calm down, Jim. I'd like to ask him, when's the last time you ate at McDonald's? Seriously. When's the last time you ate at McDonald's, you bearded nincompoop? Okay, get ready. Randy, we're trading the Darvis box. The 6650s look so attractive right now. I'm changing the order to 6650. Oh, that's the ascending triangle. How did I get way up there? That's not what I wanted. Okay, get ready. Prepare ye in the name of the Lord. $6 to SPX. $66.50. And we are getting close to power hour too. So this might not be a big fat play. Oh, you stupid shit. Dun. Can you listen to the bleed? Dun, 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 dun. The Candy Man can. Uh-oh. Uh-oh. We could end up down here at 66.1955 if we don't hold this 66.3376. So I might have to. I'm down $100 bill. I think me and Nicole would make a perfect couple. We're now at 660. The Candy Man can, 'cause he mixes it with ool and makes the world go round. What happened to Livid Goose? Puts? What? How dare you? dare you? I'll be right back. I've been wanting to get some water for the last hour, and I'm afraid if I leave, I'm back at 6. Oh. $6 and $7.10. Yes. Oh, good deal. I didn't see you. You're in here now. How long have you been trading? may I ask? Yep, you are. Well, there's the phone. You're not a good trader, we'll make you one. Hello? There's a hammer. I have a lot of videos on my YouTube channel. I don't know if that's how you found me or not, but you know my YouTube channel? Okay. I trade with chart patterns, moving averages, and being in the now. We have 4 minutes to power hour. 4 minutes. I'm going to go over the watch list real fast and see if I see anything swing. We got NVIDIA now. NVIDIA is going to be a little bit more pumped with that Trump news. And it's in the green right now by 21 cents. This thing's acting weird.
More. Your portfolio next year. Tune in on December 11th at 7 p.m. Eastern on Schwab Network.
I'm Nicole Petalides at the New York Stock Exchange. Live interviews, market movers, and real-time coverage right from the floor. Subscribe now at schwabnetwork.com.
Good afternoon, happy Friday. It's 3 p.m. on Wall Street, 2 p.m. here in Chicago. This is Market on Close. Mouse Coffee filling in for Marley Cade.
I got charts on my screen and a rocket in my mind, riding every swing like a comet.
Hello, Alex, and I'm Sam Bartis, coming to you live from the floor of the New York Stock Exchange. Happy Friday, everybody. Let's take a look at what is coming up on today's show. We'll be joined by the founder of WeShop, which made its debut on the NASDAQ about a week ago through a direct listing. We'll learn more about that company later in the show. We'll also check in on the state of the labour market and discuss September's release earlier this week and what we can expect going forward into 2026. And in Options Corner, we'll take a look at Eli Lilly, which became the first healthcare company to hit $1 trillion market cap today. For now, Alex, take us through what you've seen in the market today.
Well, I've seen a roller coaster ride that's really continued for the most of this week, but right now we're on a bit of an upswing as we take a look at where equity markets sit with about 60 minutes till those closing bells for the week. S&P 500 in real time up about 93.5 points. That's just shy of 1.5%. The NASDAQ 100, the ever important NASDAQ 100 trails just slightly behind, up about 1.4%. The high beta small cap heavy Russell 2000 is the class of today, up over 3%, with the Dow Jones also up about 1.5%. U.S. dollar index firmly over 100, 100.11 as it's up slightly here today, 2 bips. Gold also a little bit of a move higher here, 0.7%, comfortably above 4K. Crude oil continues to slide well below 60, 57.87 in those now January 2026 active month crude oil futures. And then finally, probably the biggest headline maker, maybe outside of NVIDIA this week, which has been Bitcoin, continues its slide down 2.5%.
Yeah, some interesting moves obviously we've seen today, Alex, and a lot
They
of
said
that has
Bitcoin
been
at 83,000.
commentary. Obviously, we heard from New York Fed Reserve President, that is John Williams, earlier today, and that seemingly helped move financial markets throughout the course of the session. He says he's seeing monetary policy as somewhat less restrictive as before and therefore sees room for further adjustments in the near term. Now, that was a clear shift in tone this morning in the markets. We saw stocks moving higher, Treasury yields slipping off the back of those remarks, and because these comments help raise really the expectations of the potential cut come December. Now, the probability has jumped from below 50%. Remember, earlier this week we were looking at as low as 30% to now over 70% today. And the reason Williams' comments matter so much to markets is because he's really seen as influential and a powerful voice within the Federal Reserve. There is also a view out there that his comments may actually serve as a model for how Powell, Jefferson, and Cook may also be thinking here. Now, another story we've been tracking in the last couple of hours is NVIDIA's H200 AI chip in China. Now, a Bloomberg report in the last few hours that U.S. officials are in early discussions on whether to allow this to happen. This would be seen as a big win because remember NVIDIA's numbers this week? Well, expectations ex-China. So any development on the access to the Chinese market is being really seen right now as an added bonus, the cherry on top of the icing of the cake. Now, this comes after Reuters had reported just recently as well that the Trump administration may actually be considering delaying semiconductor tariffs to essentially avoid rocking the boat with China as they hammer out their trade negotiations. Let's just keep in mind, though, this is not the H20 chip, which is the chip specifically made for China. This is the H200, which is more powerful, but an older version of the chip. So it's unclear at this stage what appetite there is actually like in China, which companies want to get their hands on this stuff, but it certainly is an interesting development to keep tabs on. But for now, Alex, I'll send things back over to you with Jenny Horn in Chicago with some of
Jenny Horny.
Thank you, Sam. As promised, we got Jenny Horn here in studio with me. Jenny, let's start with where I think everything these days starts, and that's this AI epicenter of the market. And really within that, there's like an epicenter of that, which is NVIDIA. And that's been the story all week.
It has. And I mean, NVIDIA, I think, has signaled that something that has not been really, I mean, we've seen in markets this year, and that's this appetite for tech has been unwavering, unrelenting. We've seen pretty much every dip bought, and I'm not saying that that won't happen again.
Kind of already has, right? I mean, we're what, almost $9 off the highs, or lows rather.
That is very true. And so, yeah, I mean, that's, I think, I believe still very much in, I mean, the AI narrative, but it's more about right now questioning the depth of this market. Like, is it necessarily justified to see 30% of the market, 30% of the S&Ps in, 6 names? I mean, does that necessarily make sense, especially when you can see NVIDIA's intraday swings that can take down the entire market? But a lot of this weakness has been felt even outside of frankly, NVIDIA. As you look at some of the worst performers now in the S&P 500 on a week-to-date basis, and they are real leaders of this year. It's AMD, which is down 16.6% this week. It's Micron, down another 15%. Western Digital, as well as, Supermicro Computer. Oracle, though, is another one that's taken it on the chin here a bit just over the last several months. Oracle has now seen a 40% plus tumble since early September, losing nearly $360 billion from its market value since the company unveiled a huge jump in their projected revenue from the growing AI business. And that is largely because they're going to need to borrow a ton of cash to make these sales. So their overall debt stands north of $100 billion. They did tap the bond market for about $18 billion last month, and reports have suggested that now it's planning another debt sale worth roughly $38 billion. So all that to be said, spending all that cash on AI infrastructure is by itself a pretty major concern, but it's even more concerning that a lot of their anticipated revenue is reliant on these power purchases from OpenAI, which is a company that has been read as mixed as far as its also cash position. And also, the Wall Street Journal reported about a month ago that $300 billion, or roughly 65% of the additional revenue that Oracle spoke about, was really tied to that contract with OpenAI. So many question then the longevity and also how NVIDIA could threaten some of that partnership. All that to be said, the doubts on Oracle and its debt, I mean, you can't argue with some of those numbers, but I guess it depends on if you believe that AI will be monetizable the same way that the bulls do right now. There's still many believers that say, hey, there's tons of money still to be had. It's just the wait and see game now.
And you can always over lever, right? And that's the danger. The leverage is great. I mean, there's leverage used in home purchases. There's leverage used all the time in financial markets. In many ways, our financial market is built on leverage. But if you over lever and times do get a little bit hairy, that's when there's real financial loss. And so you bring up Oracle. I think it's fascinating that not only is it given back that entire jump post earnings, it's now a good 20% off where it was before we even had that news headline. So it's been a pretty wild turn of events for Oracle over the last month, down about 30%. But all that to be said, you're also seeing it show up. So credit risk broadly is not really showing up. But the Oracle swaps on some of that debt have started to increase a little bit, which suggests a little bit of uneasiness, which is how big some of these numbers have gotten. But you mentioned it wasn't just NVIDIA. Oracle, the second biggest contributor to the S&P's down move today, about 2 points. Microsoft is the biggest down, with its move contributing down about 3 points. But that's about where the end of the negativity today really is, though, Jenny, because let's get some of the positive stories. And you were looking at earnings as well. And this is one that we've talked about a few times throughout today's show, and that's Raw Stores.
Raw Stores. I think that we've talked about this day between the two of us 10 times today. I never would have thought that we would close out this Friday with Raw Stores, but hey, really promising move and also really promising read on the upcoming holiday season as they delivered 7% comp growth sales and raised their guidance. Revenue also did rise 10% year over year, ahead of consensus. Operating margin did see some pressure from tariffs, but still came in around 11.6%. And we saw some broad-based merchandise strength and really effective marketing campaigns that drove this traffic and engagement, as well as strong back-to-school trends. And they think that has actually even continued into the
I actually like this coffee doing it this way.
Expense control that supported the margin growth. So tariff-related costs.
I've never really drunk coffee cold.
This quarter, expected to be negligible now, though in the fourth quarter. I
actually like it. It's not as acidic. It's pretty clear. Sorry, honey, I had to let you go. Okay, well, Friday. Today's loser was snow. Big drop, 20-day low. Down $40, $50 today. I mean, in the last 1, 2, 3 weeks. So it could be maybe starting to turn around a little bit. And we got Mr. Mr's really, I think, going to be one of my longs. I heard Bitcoin last week or the week before at 83,000, and I think we hit that today. So that might be a one to start watching all the coins. We got CrowdStrike down. It's 566 and hit 480, so down $80. The AVGO is one we like. Last time it was down here, it bounced up in about 5 days. We got Netflix is at 105. And this is one I want to swing. 3-day rule is in effect. So it had the 10-to-1 split and had to bounce the day after. And then it's pulled back, and the market's not been in the best of shape. So I'd be watching Netflix real close. They said it wouldn't matter. And that kind of shocked me when they said the share split wouldn't matter. It usually matters to everybody else. And this company was, to me, was way overbought. Way overbought. I mean, hugely. And I'm not into Netflix. Someone asked me the other day, I'll give you the password to Netflix if you want to watch it. No. I don't have time to sit down and watch Netflix. Unless I was next to a chick, then I would. And I'll be watching her. TSM. We have a 20-day low on TSM this morning at 266. 310 high. So, you know, it's down $50. Let me put up the yearly chart here. I'm going to move this down. Actually, at 4 hour, 180 day. See, this was way up too. TSM. I mean, you know, you got stocks down here at 140 and it runs all the way up to $317. That's a big bounce. You know, I could see it being overbought. JP Morgan at 298. Ooh, had a big old fat finger today. No Fibonacci's on here. It's taking a sweet time. Those are the red ones on my watch list. Oracle. How did I miss Oracle? I think Oracle, they're talking about the financing, and they were pumping the heck out of this stock when it came out with earnings. Now look at it. I didn't fall for it. AMD at 206. So we had the gap on this one here. And we dipped below the gap, but now we're above the gap today. So as long as we hold the gap, we're still bullish on this trade. Turning it up to at least 219, 220, maybe 233 if it gets some momentum. A little bit below it. And we got Boeing's getting cheap. Boeing's real cheap. Now I heard there was a plane crash in Baidu today. Let me look it up. Plane crash refers to the story about the fatal plane crash BAIDU. AIDU. Baidu, Robotaxi, plane crash, Baidu. Well, I heard there was a plane crash. Robotaxi falls into construction pit in China, raising safety concerns. August 8th. Okay. Well. Today's winners was Target. Now, Target's nothing but a pump, but this thing's cheap. I mentioned this one yesterday when it was down at 83 bucks. And we're hovering above that support level. I could change this support level. I don't know where I got that from. Probably on the daily. It's an oldie. Let me look. Yeah, well, no, not on the daily. It'd have to be the weekly. Yep, it was on the weekly. So that's at a good spot. Target is, actually, for a swing trade. For at least $6, $94. Head and Shoulders at 94.29 off the 21 into the 21. We previously hit the 21 on the weekly right there 4 weeks ago. So I'd wait for just a little bit of adjustment. Put it on my watch list. And we got Chipotle's been hovering here at support for the last week. Oh. Let me look here. Last 3 weeks. We're at the 9 on the yearly. Yeah. We're definitely at a support level. We got to break $32, and we do that, we could probably run it $1.50. It's you got a huge gap to fill. Maybe it's 37 long. If you bought into it and swung it, I don't like Chipotle. Google is another good one that I called out yesterday. It's up $11. I don't know. It seems like it's too high. Intel was another Trump pump. And it's definitely at a support level. Right now, strong buy at $28. Real strong buy at 28. You got a gap. Bottom support gap. So if this thing hit 28, $30, I'd probably buy it and swing it. Oh, I want to look at AMC. I've been wanting to buy this thing. We hit 205 today. Yeah, I missed that one. I would have swung. I'd have scalped that one. Day traded it. Not a scalp because it don't run up fast enough. Here's them. And Regetta, that's down 50%. And Starbucks. I hate Starbucks, but today was the pop. We had a triple bottom this week on Starbucks. Right around 82.50. I think that's been here before many times. Well, actually, it's been lower, 78. But got a two-headed snake. At 82. Lulu. Nike's at 63. I don't know about this. Man, I'm getting wore out. Definitely. Usually on days like today, I just can't hardly take it anymore. That's interesting. Okay, we're at the 200 EMA on SPX. And we've got 34 minutes left. Jake Paul gonna fight Anthony Joshua? He ain't, is he? That can't be true. Are you serious? This gotta be a joke. No, there's no way.
The unimaginable, the unthinkable. Who would have thought just a week ago we'd be looking at this?
There ain't no way.
Former unified heavyweight world champion 2012 Olympic gold medalist Anthony Joshua.
If he fights Anthony Joshua, this has got to be fake.
Who dares to be on Netflix?
I don't know if that's a good idea, Jake.
The unimaginable, the unthinkable. Who would have thought just a week ago we'd be looking at this? Two-time former unified heavyweight world champion 2012 Olympic gold medalist Anthony Joshua against the man who dares to be on Netflix.
Oh, wow. Jake Paul's too much of a puss to fight me. I think so. Well, you have to give him. This will prove him if he fights him. I don't know if I don't think it will happen, but something will come up. I guess he didn't fight what's his name. I can't think of his name anymore. I can't see that fight happening. If he fights Joshua Anthony, I'll have a whole different outlook on him. Even if he loses, I still have to say, okay. 6,600, here we come. It's still a little high. WSHP. NVIDIA WSHP. I don't think I've ever looked at that one. I'll watch it this weekend. Okay. I'm not going to swing nothing.
Season.
Our pilot test is obviously the busiest month, busiest shopping month of the year. But at the same time, we are going to go at a steady pace. We want to do things properly. We want the community to build properly. We want to make sure everything's working properly in the US. So, we want to build this.
66.25 has just bounced up nice.
So we're going to be fascinated to see what happens over the next couple of weeks. Like I say, with shopping, we've got some amazing US retailers on board. So we've got Walmart,
I can't believe I sold that.
Bloomingdale's, Macy's, eBay. I think eBay's.
That was a trip at SPX. When I got out of it, I was so excited that it bounced, and then boom. I just, it took all that. I was real happy about that trade, and all of a sudden, boom, and I went, Jesus. 3,000 bucks, $3,300. I'm going, been $9,000, and I settled for 600. And I didn't have no clue that that thing was going to do that. Right when I sold it, and I got my guitar and started playing, I went, ugh. These things just went up 120%. The SPXs, the 66.25s, at 325 went to 8 something. Hit the 200 in and out. 850.
We got Rick Ducat here in studio, though, in Chicago, lead market technician for the Schwab Network. And Rick, we're looking at Eli Lilly as it's making history. $1 trillion valuation for a healthcare company. Monstrous performance again over the last year. How's it shaping up? Looks pretty good compared to some of its peers.
For sure. 10th company overall in the U.S. to join that $1 trillion club as well here. And really the story for Eli Lilly has been one of great strength in recent days, plus 31% or so in only the past 18 trading days. You know, when we get to our candle chart, you'll see only 2 red candles during that time as well.
What sticks out to me, I mean, it's up 42% in the last year, and you just said 31% of it essentially. I mean, that's like 75% of the gains over the last year.
Very true. Yeah, it's been a very swift climb to the upside here, and really doing quite a bit better than many other companies in this pharma space. Most notably, Novo Nordisk is arch rival in terms of these weight loss GLP-1 drugs. That's the maker of Ozempic here, down 53% during the same time period. So a very stark contrast. As you said, though, Alex, when we were chatting before this segment here, Eli Lilly has a diverse pipeline of drugs, lots of acquisitions, an obesity pill in development that the market seems to feel looks promising here. So it's really more than just this weight loss drug story. It would be tempting to just say that's all it is, but it's really not that.
Yeah, it gives it more stability than just sort of these pure plays, but also hard not to discount that that's been a big part of the growth story for a lot of these names with that exposure. But I think you keep an eye on the analysts as well. What else is sticking out here?
Yeah, mostly more positive analyst coverage here. The most recent one was a price target raise from Truist on the 19th. Kept their buy rating, raised their price target to 1182. We also saw JP Morgan, Morgan Stanley raise their own price targets to 1150 and 1171 respectively here. So seeming like these analysts are feeling like there's some room to run here, and really it's a
Lilly broke 1,000
here. This is kind of that period I was talking about where we had only a couple of
I haven't been watching that one at all.
there. But really, when we look at our trend lines, you can see the acceleration of trend to the upside. We're trading within this very narrow, very steep white channel here. A general thought too, just the steeper the move, the less.
That's one heck of a run right there.
Not really speaking to the long-term prospects
Too
or the
steep.
overall outlook. Just there's only so far a red-hot trade can go before some of it starts being given back a little bit.
Exactly.
It doesn't seem to be today. We're at the all-time highs, 1060, 665, almost at the highs of the day once again.
Well, incredibly too, this hasn't been the strongest like 3-4 weeks in the overall market.
No.
So it's doing this as volatility has started to swell a bit elsewhere. But I kind of double take. This is a candle chart, and these are daily candles. That almost looks like a line chart on like a 1 minute time frame. Like that's an incredible ascent.
A very sharp push to the upside here. When we look at some of our other studies, this is one of the times when moving averages are less helpful because of how fast the move is. They're a lagging indicator by their nature. You might consider something like a 9-period exponential moving average. That comes in right around 1021.50. Our 21-day, the normally what's viewed as the fast one is lagging quite far behind. That comes in at 962. RSI is still overbought, so quite strong, quite near the upper end of the range. But I will notice that our green trend line has been broken. We are seeing a tiny, tiny bit of bearish divergence as well because price is on pace for a higher close. RSI has not made an accompanying higher reading as well as we approach the end of this trading day here. Not necessarily a head for the hills statement I'm trying to make, just something worth noticing here. When we look at our standard deviation channels, the +3 and +4 channels, red and purple respectively, come in at about 1028 and almost 1100 on the nose. So those would be some short-term areas to consider as well. Volume, we haven't had much time to accumulate volume, but the nearest area here is kind of around that +3 channel, so that stands out as potential support. Not really much serious in terms of volume until we get all the way back down here near those old highs around 920, 930 or so.
Yeah, and is it one way to say, I always like to use analogies, or if we go back one real quick, so I know we got option stuff as promised, but is this almost like the RPM, like the speedometer or odometer, whatever, one of the odometers on the car that's like ramping up in terms of, we're way up in the red zone right now. There's really not any more, like how much faster can we go? I mean, what is that, 85 for the RSI?
RSI only goes from 0 to 100. That would be one way of thinking it. It's what we're seeing here is that the pace of the gains is starting to slow down. So it's the highs are getting more and more, I guess, incremental, you could say here. So there's only, with a car, for example, here, there's only so fast it can go before it has to kind of take a breather and
downshift, whatever, slow down. And
so that might be one way of thinking of it, yeah. But the other thing is, too, stocks aren't cars. They can keep going up in ways that you might not expect. That's the whole concept of these fat tail outsized returns that is the ultimate quest for traders.
Well, and again, I has got my attention and it's doing so well with some of the other stuff that hasn't been. But let's get some of this options activity. I'm sure with this move, there's been some added interest recently in LLY.
Sure, so we can see that what we have here, the purple shaded area, December 19th expected move, 28 days out, $85 plus or minus, so about 8.1%. Doesn't really line up super clearly with any technical points at this point in time here. So just a general boundary to consider as we go forward. We will say that for this December 19th expiration, there's very heavy call open interest at the 1,000 and 1,200 strikes, as well as much lower at the 880 strikes. The puts much more widely dispersed, as is often the case. The highest activity at 800, 960, and 1,000. One interesting trade I saw, plus 500, January 16th, 1040 calls. at a 77.90 debit and minus 750 March 20th. 1,100 calls at an 82.10 credit. That comes out to a net credit of $2.2 million. Kind of an unusual setup because the short calls expire later than the long calls, so there's the risk of having naked short calls. But even at the get-go, 1/3 of the position isn't covered by the long calls, so it makes me think there's probably a stock position going along with this one, but we'll never know for sure. We only have the information we see here.
Yeah, it might be a rolling trade, perhaps some sort of covered call-like position, but you never know. Could just be an interesting diagonal setup going into next year. But Rick Ducat, always a pleasure. Appreciate the insight. Fascinating stuff out of LLY as of late. So we send it back to New York and Sam Bottas.
Thanks, Alex. Well, coming up, we'll check in on the labour market after we saw a strong report yesterday from the September jobs print. Plus, we'll look at how AI could be impacting the workforce in the future. Market and Close will be right back.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Are you an active trader? Our active trading webcasts are designed to help you develop a deeper understanding of technical analysis, options, futures, and more. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/coaching and start learning today.
12 more minutes.
I'm Jenny Horn. We go beyond the headlines, tracking the trends, sector moves, and fundamentals shaping the market.
Jenny Horny.
This is Schwab Network. Subscribe at schwabnetwork.com.
How's it going?
First day, so sometimes, you know.
Next.
Try again.
You could have done better.
Please.
Same goes for where you invest. Level up and invest smarter with Schwab.
What's up, Carl Nation? It's your #1 broker with the best full-service wealth management skills in the biz.
Actually, I'm seeing something from Schwab.
Uh-oh.
Yeah, Schwab lets you invest and trade on your own.
And if you want, they can even manage it for you.
Not to mention, Schwab has a team of specialists for taxes, insurance, and estate planning, all with low fees.
We're experiencing technical difficulties.
Carl.
Schwab, a modern approach to wealth management.
Stay connected to the markets with Schwab Network.
Tune in 24 hours a day, 7 days a week on schwabnetwork.com.
And on all your favorite streaming services. Schwab Network, available anytime, anywhere, on any device for free.
Hey, Dad, I have a question for you.
Oh, God.
When did Granddad first start investing?
Word man. Now 10 minutes left. Here's the volatility. NVIDIA. Well, I hope everybody has a happy weekend this weekend. SPXs are at 105, the 66.25s on the nosedive. Yeah, I ain't gonna trade no more. I about jumped into that one at 105, and I'd be biting my nails right now. I'm done. It was a fun day. It really was. I think I left probably about 12 grand on the table. Probably a little bit more than that. And very small entry. I mean, 3 contracts was one of them, and the other one had 5. But the one I had 3 is like within seconds. Within, I mean, minutes. I'd been up $9,000 within a couple of minutes. Right when you sell it, boom. No one would expect that tweet to come out unless you're. That's what it was a tweet. Algorithm. We'll see if we hear anything about the news about it by the liberals. Trump's pumping the market. I guess he tweeted something about Congress the other day, put them on a firing squad, and well, they got all jacked up about that. See what the weather's going to be like tomorrow.
Is it changing the type of hiring? Is it slowing the hiring from your vantage point, Lisa?
It's slowing it a little bit, and what I'm seeing
Open
is
had a
companies
decent
are
day.
kind of rewriting the job description of each individual on the org chart. So when you look at, humans aren't getting pushed aside; they're kind of getting amplified with this. And so there's a new role that I see people hiring, which is somebody who just runs the AI integration, and they work with the COO closely, and they redesign the workflows. And this idea is like one senior executive on an org chart where they might have had 10 direct reports before will also have 4 AI agents that are helping them. It sounds scary, but really all it means, it's kind of like when we started using the internet or Google or any of these things. It's just another tool in their arsenal, but it is going to allow everybody to be able to be more strategic, think about outside of the box. And so it's rewriting the org chart a little bit, which is interesting. It's definitely a big organizational shift.
Absolutely. Lisa, thank you so much for joining us here on the Schwab Network today. Happy Friday, have a great weekend, and really appreciate your time. Lisa Flicker, Jackson Lucas there. We are nearing the end of the market session here. We'll bring in Jeff.
I will, Jesse.
Who will break down today's action and get us set up for next week. That's coming up next on Market on Close.
I'm Alex Coffey.
And I'm Jenny Horn. This is Next Gen Investing, where we track the trends shaping tomorrow's markets.
From tech to energy, crypto to consumer, we focus on what's driving investor sentiment right now.
Clear analysis and forward-looking market coverage every trading day.
This is a make or break level for this stock. And that could certainly be a short to near-term catalyst.
Next Gen Investing, 1 p.m. Eastern.
Only on Schwab Network.
Morning Movers brings traders the biggest headlines to start the day, from volatile overnight swings to the earliest analyst calls. Get your watch list ready. 8 a.m. Eastern, Morning Movers, only on Schwab Network.
Stay connected to what moves markets. Download the Schwab Network app and stream live coverage wherever you are.
We are back here in Market on Close. I'm Sam Vardas on the floor of the New York Stock Exchange alongside Alex Coffey in our Chicago headquarters. Just a few minutes left to go now in the session to close out the week, and let's welcome in Jeff Pierce, who I gave a new name to just minutes ago, Senior Manager Derivatives Trading, Charles Schwab. Thank you so much for joining us on a day like this, Jeff. As we close out today's session, what are your thoughts just ahead of the closing bell in 3 minutes' time?
Yeah, I mean, I think it's really nice to see the equities rebounding today after what was a very tough week, including the sharp drops we saw across the S&P, NASDAQ, and Dow. News from the New York Fed president suggesting that we would see another interest rate cut again this year certainly has helped boost hopes. The Fed futures is currently.
We're back. If we had a few more minutes, I'd take this trade right now. But we only have 2 minutes, so I ain't doing it. Less than 2 minutes. So, the SPY on the 5-day this week this thing's acting up today at the end of the day. There's the 5-day. We had 2 days, 2 bounces, and the third one today, where we stopped more or less at a little under the pivot point. So we had a new low of the week this morning at 649.45. And only really, well, it's a pretty good bounce. We could see 672 next week. There's the bell. SPX. Same kind of chart. I might do a video this week on the indices and read more up on the news, but I'm all pooped out. I had a good day today. I mean, it was one real good trade, and then the second one was good, but could have been much better. Could have been a lot better. Unbelievable. I mean, I was getting a little worried about that one, and then it bounced up, and then boom. So I want to welcome all the new ones in here today, and options, we'll see you later. The Option Outlaw, Michelle, Magnificent, JM, Randy, Angel, We'll catch you next week. And YouTubers, we'll catch you next week. Let's have some fun. Be safe this weekend.